All right, guys. Check mic, check mic. Are we live? Looks like we're live. Do we have sound? Yep, we do. Sorry, excuse me. Good morning. How's everybody doing today? What's up? What's up? What's up? I'm ready. I'm ready for today, you guys. I'm ready for today. That's right, Ray. Tell them. Hit that like button. Y'all already know. Hit the like button. Subscribe. If you learn anything from this stream, go ahead and give back. Don't be scared, right? You can donate, contribute. It goes to the Squawk Box. It goes to the news. It goes for the time that I put in for this. It goes to the trade ideas. So what I'm going to get you to do while I go... Let's see. I think I have everything. I have my coffee. I have everything posted. So I should be good. I got my charger. I got my AirPods. Get out your pen. Get out your paper. We're going to go through the markets. We're going to go through the indexes. We're going to go through some of the news that we have this morning, and we're going to go locate our setup like we did yesterday. So yesterday we identified that JP Morgan, we identified very early on that the Dow was leading the way. The Dow was leading the way. So we went ahead and said, okay, if this continues, we're going to want to look for some Dow names, which we did. Yesterday, we gave out, what was it, 194, 195 longs on JP Morgan yesterday. This dotted line and this line right here. You can see it pulled literally right into it. It pulled right into it. All right, I want you guys to learn how to do this. You guys can learn how to do this. Just like, I mean, it literally just pinned our line and took off. And it took off. Look at that. Look at that 5-minute chart. Candles closing at highs. Just a buy trigger from institutions. You get behind that. We were looking for 200. You know, taking profits in front of the 100-day moving average. Really in front of 198. So that was one trade. Let's go take a look at Palantir, because we said off the bell we were looking for a pop right off the bell. And we were going to look to get short Palantir on that pop. PLTR. PLTR, not PLT. So yesterday this was an okay trade. You know, you got a few points. You got a few points out of this. As you can see yesterday, you can see that wick right off the bell. Here we are, opened up at $27. We popped right into the 20-day. And then you had a really nice flush down to that 50-day moving average, targeting, my target was 24, but we might have another opportunity here. There is some news with Palantir, I will say. I think Palantir is teaming up with, don't quote me on this, but Palantir is teaming up with someone. It's like an Airbnb, a Lyft, an Uber. I think it might be Uber, which we'll cover. We can actually look at it right now. So I said in the morning, you know, these were a few trade ideas. And keeping our expectations within line. JP Morgan was a big hitter. And then later on in the day, I gave you guys the SPY on this beautiful pullback. And I said, if you are going to go long, now's the time to do it. Literally, now's the time to do it. Right there, to a T, right there. I said, guys, if you want to go long, now is the time. You're going to know pretty damn quick if you're wrong or not. You crack this level here, maybe you gave it, I don't know, 50 cents, 40 cents. You're going to know if you break this level, which you had already previously wicked off of, if you break that pre-market high and prior days after hours high, yesterday's high or prior day's high, like that whole area was going to tell you, all right, because you drop from 522, where's your next level? 519, that's $3 away, right? So you would have known very quickly, and I gave this one out too. All right, I gave this trade out yesterday as well. So Palantir, JP Morgan, I know that there was one more yesterday. It might have been Apple, I think. But JP Morgan, Palantir, ones that I felt really good about. And that was really it that I was comfortable with, you know, putting out there. And let me go ahead and close my window real quick. Give me 1 second. All right. So I usually, I always keep my window in the morning when after I feed my cat. She usually sits up in the window and whatnot. So, do me a big one. Hit the like button. Subscribe. If you guys learn anything or make any money, you want to give back to the stream. I feel like, this might be the last week I stream for free, and maybe we stream like Tuesdays and Thursdays or something for free because it's really hard with trying to take care of viewers, which is okay. It's just YouTube doesn't have anything in their platform that there's a lot of time with going through the news and trying to inform people and help people make common sense decisions, because if you learn how to read the charts, you can know what the stock is going to do, and the only thing that changes that is a fundamental news catalyst that will change the chart, right? Fundamental news catalyst will trump technical analysis every single time, and that's it. So the probability that you're in something and something happens now, we're in volatile times. We have supposedly a few wars going on. Iran attacks. We don't know what's going to go on with that. So you have to understand that even when we take these trades and the stuff that we go over today, please, if you get paid, take your money, because at any second you could get a random credit downgrade from Fitch, Moody, right? I'm not saying that that's the case, that's going to happen, but you get what I'm saying. So just take your money. So yesterday, Palantir, JP Morgan, and the SPY were the three trade ideas. I know I had one more. I can't remember what it was. So let's go over with what we have today, all right? So right now, we have Shopify going crazy. Okay, Shopify is going nuts. All right, so this is the first one. All right, I'm going to give you guys just a list if you want to write it down. All right, Shopify is going crazy right now. Let's throw up the 4-hour because you kind of need it with this chart. Beat earnings, I guess they had really good earnings here. Yesterday, as you guys know, SMCI. All right, and I think I talked about this a while ago. SMCI, I think, is doing a 10-for-1 split. All right, SMCI should be on your list. I brought this up, I'm pretty sure, a while ago. When you guys ever see this, look at this volume here. For 5 to 6 months, look at this volume. If I just draw a bar right here, what do you guys see? What do you guys see? Every single pop, sell, sell, sell. And I'm talking big volume. So that was an indication a while ago, and I brought it. We talked about this I think it was like 3 weeks ago, 2-3 weeks ago, where this thing was headed lower. It's just when and what is the catalyst? Well, there you go. It was earnings. Volume can be a very telling story. This was in the height of the rally, and then after you consolidate, you held up well. But you see something like this where this pattern is just, consolidating. And you start taking notice that, man, that's some pretty serious volume. If you want to buy leaps, that's probably the best way to do it if you could have afforded it on a $1,000 stock. Some people can, some people can't, and that's okay. But again, you have to worry about the timing. You got your catalyst now. It is here. There's still a balance sheet there. I need anybody that's listening to this to still understand that there still is a business there. Let's not get it twisted. All right, they are still bringing in. What was this? $6.25 a share, a little less than prior quarter, but still more than the quarter in which we had the run up. $3, $1.60, $3. So there's still a balance sheet there. It's not like this is some trash company. All right. I don't know what their market cap is. I don't know the fundamentals, which really, they matter, but to an extent, right? It's cash on hand, PE. Is it overbought or is it oversold according to necessarily the PE is really kind of what I would go with. Just like the SPY. The SPY gets to a 24, 26 PE, 28. You got to expect the SPY to pull back. And that's exactly what we got. I'm pretty sure it was around 18 to 22 maybe. But usually when you start getting to those forward estimates is when you start seeing that pullback. Okay, so we talked about Shopify, which we'll get into more depth. We'll get into more of that with the analysis. So Shopify, again, get out your pen and papers. Shopify, SMCI. All right, Nvidia is up this morning. All right, Nvidia is up this morning, I think. There's a lot that's up. Tesla. So Nvidia gapping up, not necessarily gapping up just yet because the market hasn't opened, but it recovered that 100-day moving average, which it looked like it was trying to fail. I still think we need to be cautious. We're still not above Fridays. Today's Wednesday, right? Yes, Tuesday, Monday, Friday. So yeah, actually Nvidia is. So Nvidia's semiconductors are doing a little bit better. All right, semiconductors are doing a little bit better. AMD, let's go take a look at AMD. So I said this about a week ago, 2 weeks ago, that AMD was looking like a nice hedge. As you can see, Nvidia, or even going back to Monday, right? Look at the day Nvidia had, AMD, ASML had really nice days on Monday. If you look, right, yesterday, AMD was down. Now, this can obviously change, but Nvidia's up. So there could possibly be a hedge there that you're seeing, not necessarily, but Nvidia did have an up day. There was a point in time there that there was a bit of a, could have been a hedge between AMD and Nvidia. Nvidia would rise, AMD was pulling back. But next on the list, LUMN. I think you have to be careful that this is about over with. So there is some stuff going on that I want you guys to see here. So if you go to... So this is on Twitter. So here's a message here with LUMN. So yeah, I hate the interface, blah, 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 blah. And again, thank you, Lance. I hope you don't mind me going on your Twitter in public. But anyway, is LUMN a typo? How can their FCF go up 10x while their EBITDA and CapEx stays the same? No clue. Looks weird. Also very sketchy. They reported these contracts a day before they report. Oh my God, it's because of a tax refund. Probably should not be up here and nobody read the footnotes. I found the slide deck. All right. So with that said, be careful. All right. We're going to do our analysis on this, but LUMN has some nice volatility. This is another one we'll keep on our list. All right. LUMN had a really nice pop, and you can see this is the level. I think we said this yesterday that you got to move to $5, and it looks like it might. Where are we at? 10 now, $6. Yeah, we're right back to 5. So what I would do, real quick, this is actually very easy, guys. You guys want to look for this break of $5. This could be a really nice short today. All right, that could be a really, really, really nice short today on LUMN. A break below $5, then I would look to try and test prior day's low. All right, I'd look to get down here to like $3.75, $4. Hell, you might even get $3. You know what I mean? This thing may just come crashing back down. You have to watch $5 though. Watch prior day's close. All right, I think this is, it may pop. This thing may pop. All right, you may pull it back pre-market and then starts to run up into the bell. Maybe you get a rejection entry at $7. I don't think you get 9. I would look at 7, but this thing might be done. And shout out Tyreek. I think Tyreek was here yesterday who called this out. All right, so LUMN, let's keep it moving. Apple. Just want to go through some of the names, again, that are Apple. And with the gap up, we talked about this yesterday. That Google News, okay, affects Apple. There is a $20 billion in revenue stake here. If that DOJ ruling, how do I say this? Comes into effect, then that's potentially money off the table for Apple. So there's a big effect there for Apple. And we talked about this yesterday, but Microsoft, MSFT. You want to watch Microsoft because Microsoft benefits from it. That's market share that they could possibly start to eat up. Okay, that's money away from Apple. that also actually will save Google some money, right? That'll also save Google some money. So Apple's really the only one here that, it could hurt. They also have talked about trying to build their own, but the amount of money that it would take, and not even just to start it up, the money it takes to keep it going. All right. Let's go look at Intel. Intel's not really doing anything. We have Rivian. So Rivian is down pretty massively, about 7%. Q2 loss. They reported earnings yesterday, and it was a loss. Where are we at right now? You are 1350. So we're around 1350 right now. I think we got to look for a move back to $12. $12 is like where Rivian's home is, in my opinion. Just belongs there. You have the 100-day moving average. So in my opinion, I think if you can get any type of bounce back, they may take this trade away from you, and there may only be $1 left on it. I don't know. I'm not gonna suspect something, but Rivian's should be on the list at least. All right, $12. I think you got to look for $12. $12 is your level. If you break 12, all right, maybe over the coming days, then you could look for a pullback into 10. That's what I'm going to look for. I would much rather get a bounce back to the 50-day, a bounce back to the 200-day. You're probably not going to get prior day's close because you're down way too much. But maybe Monday's close at $13. See, we're at $13.50. We could still get a nice little bounce here and still be okay. I don't know why my charts keep doing this. Why does it do this? Like, all of my stuff is messed up here. That's so weird. That's so weird. Anyway. So you can see this level here could be another nice level that you could bounce back to, which we'll get into some of these. It is 7:45, so I want to go into where the markets are. So with Rivian, you could look at Tesla. Tesla's actually up, surprisingly. I was watching for this 200 level. We got back above it. We got back above 200. So I'm like, oh shit, what's finna happen today? Are we looking to get back up to the 50-day and a possible rejection up there at like 210, 205? So my eyes are going to be on Tesla and a few others today. Again, it's all going to depend on where the markets are, right? The overall indexes. So again, please, if you can, hit that like button, subscribe. I know you guys can. Another one here, Airbnb. Airbnb is down. Going down, baby. You can see that this actually was in a downtrend for quite some time coming into. Yes, the overall markets were down. I guess that does help, but that was a pretty big move, more so than the overall markets did. So I wonder if they were already. This thing's a pretty volatile stock. I wonder how this trades. I haven't traded Airbnb in years. I traded it one time. I think they had some news, or it might have been Uber. But so we're down to 111. Damn. I think that's it. That's probably your support level. That's probably your support level here at 110. So if you're looking at Airbnb, which is down because of earnings, 4.7%. So yeah, lower Q2 earnings, and they trailed analyst expectations. So they came in way under analyst expectations, and estimates were already brought in, or at least for the majority of companies, estimates were already pulled back a little bit. They've started pulling these earnings back about a year and a half ago. So it's not surprising, and it's not surprising the market's pulling back when we're coming in with lower than expected earnings. Yes, some companies are beating. They're beating on estimates that have been pulled back. So some may not fully understand that. So Uber, very quickly, you're not going to get 130, but I don't know. This chart pattern's pretty, in my opinion, it's kind of ugly. There's just nothing, in my opinion, there's nothing to see here. Just watch 110 is what I would do. I would watch 110. If you break 110, then it looks like you have room to 100. This thing doesn't really have any clear levels. Like, you have this little double bottom down here, double bottom, and then it rallies, and it just, this thing is just all over the place. All right, so that's that. That's Airbnb. What else do we have? What else do we have here? Let's go ahead and start going over charts and get our day going here. All right. I know you guys can hit that like button. Let's go. Let's hit that like button. All right. So. SPY. Let's go start with the overall markets. All right. The overall markets here. Today's the 7th. I'm just doing something really quickly. Let's go look real quick before I jump into this. Let's go look at Bitcoin really quickly. What was that? Greatest economic add another 300 stores to all the restaurants. To close hundreds of doomed locations across 35 states. Oh, wow. Shit. All right, so Bitcoin looks still to be bouncing here. All right. So keep an eye on this level here. If Bitcoin, I think if we attempt to, I thought that this was going to be one big consolidation here on Bitcoin. It's looking like if we don't start to make progress over the next... we're coming into a volatile time. I don't know much about Bitcoin, but you can see that we're just putting in lower highs. And if we could get the opportunity, guys, you see this dotted line right there. All right. I know you guys can't hardly see it, but you guys can see how it fits right in. If this thing tries to bounce and we can't start to make progress, and we're putting in lower lows, so I would rule that out. Look, if we start to pull back, right? I'm watching 57, and then I'm going to watch 60. 57 and 60 are the two areas that I'm going to be watching on Bitcoin to see, do we start to recover? I don't know with everything that's going on as far as the presidential debate, the time of year, again, because we're coming into August, September, October, normally ugly parts of the year. Okay, very weak. I think September is one of the weakest months of the year. Does Bitcoin have to trade that way? No, not necessarily. All right, that's why I'm kind of like saying, like, I don't know. I don't know how Bitcoin is going to do. But all I can say is 57, call it 58 to 60 are the two levels I'm watching. We've already put in our third lower low. So that's got, we gotta look for a possible rejection coming up here. And look at the volume that's starting to come in. That's the second part of this, is look at the volume. All right, look at the volume. Is there anybody here right now? Let me know in the chat. I don't know if it's going to show me or not. I'm just kind of curious so I know whether or not to move on. Some of the names that are trending this morning. So, Airbnb, LUMN, Airbnb, obviously, SMCI. So we pretty much talked about them. Jumia, JMIA, Fortinet. Oh, that's right. You had, who reported yesterday? Keep an eye on some of these names. Keep an eye on some of these names because, okay, so Fortinet reported. So this could help out Crowd, Net, Palo Alto. Okay. Palo Alto has some room up here. You have a nice base being put in here. Up at like, I don't really like that level, but we could use that level there. Really, it's like 315 to 320 is how I would look at that. I would look at those two levels. So, Zscaler. Let's go check out Zscaler. Alright, Zscaler, no. Who was it? Fortinet. That's right, Fortinet. Oh, the third trade from yesterday was Alibaba, by the way. That was the third trade. That was the other trade that we had. Okay, Fortinet. Alright, let's see here. How's this daily chart look? That's a nice chart pattern. Kinda. Kind of a nice chart pattern. It's holding its gains. Unlike everything else, it's rallied, consolidated for about 1, 2, 3, 4 years now. 3 years. 2.5. If you want to get technical, 2.5. Alright. So let's see here. $60. You're at 64 right now. So you can see some of these names that are benefiting. So 65. It's already, something tells me that it's already did it. Something tells me it's already did it. Okay, so was a 64. Zscaler 64. I don't know. Let's see. Let's look at the spreads real quick. I don't know how spready this thing is or isn't. Damn. That can't be right. I guess that's because of earnings. Look at the put side of this thing versus the call side. That's so weird. That's so weird. How are these calls 46.38 cents and then the puts are 6.85 to 9.90? You know what I'm saying? Am I the only one that thinks that that's weird? All right, so this could be a name that we watch today. Where are we? 64, 64, 64. Let me see here. Damn. I can't even. 62. Yeah, so if you can get a pullback, which you already did, you already pulled back. You guys will see here. You already pulled back into 62. So you get another pullback into 62, it holds. Then the question is, all right, you look for that 62. It may do it during market hours. And then you look for the bounce back to 64 and see if you can get through 64. And if you can, kind of look for that little hold and push through there 68. And look, 68 looks perfect. 68 looks like a really nice area. You guys will see it right there. Wait, why is that 60? Okay, no, that's right. I don't know. Anyway, you guys can see this triple top up here. This level. This is actually the level is 70. Look, they're talking about what I just brought up on CNBC right now. About content creators not getting paid and pretty much being used, and I think that's why this will be one of the, this week will probably be it. I worked on some things yesterday. It'll be a really low amount monthly. We offer everything that you need to make money here. I want to give you guys all the tips and lessons and chart analysis and really explain how to read out a chart. Like, there's you can do the same thing. If you were with us yesterday, understanding first off what's going on, and second, how to read the chart. What's the chart telling you on a time basis? All right, because most people don't look at moving averages and other things. So, professionals do. You can see where things are and how they're going to move versus, using your indicators. And that people just use them and don't really look out, and combining them with the levels and saying, okay, the probability of this happening is about 80%. And that's why just about day in and day out, when I come out and say, okay, I don't mean to get off track here, but JP Morgan, 94.95. I put that dotted line right there for your entry point. Bang! Identifying what's going to be strong pre-market, identifying the strength in the strength, and doing the technical analysis to say, okay, 94, 95, those levels right there, give it 25, 30 cents. If you break 24, this trade's off, and you're going to wait for 190. So I said they would give this about 25 cents or so. Give it to 194 if you want. And it just hit it. There's a reason why. There's a reason why when we're an hour away or a half hour outside of the market opening, and I'm like, look for Palantir to pop right off the bell. Look for it to pop right off the bell. Get short that pop, and we're going to look to take this thing down to the 50-day, and maybe we get down to 24. But you have the 50-day, and that's literally what happened. You opened up, you popped, and you sold it off. Literally. You didn't go down, because I was watching this thing. You popped, it sold off, bounced back, boom. So I want you guys to learn how to do that. And guess what? I'm going to go through those lessons every single day. Whatever you guys want, I'm going to give it to you. There's a lot that I hold back on here because I don't, there's a lot that, I need to get my day ready. I need to make myself money, so I tried to do something. We'll have the watch lists still on this channel and stuff, but anyway, so let's go to the markets. Let's go ahead and head to the markets real quick, and let's get our day going here. So that was some of the news that's going on. All right, Zscaler, SMCI, Shopify are some of your bigger ones today. Maybe you give it a day or two and we watch them. It looks like Shop's really aiming for that $70 level. So if you want to look for pullbacks, that's completely up to you. There's still, I think there's other opportunity where we don't have to, unless this sets up, like Shopify, you get a pullback to 62 is the only way I'm taking it long. $62, and even then, I think you pull this thing back right off the bell. Like we open up, I think this thing pulls back, and that pullback hopefully would take you to 62. It may even take you back down to 59. I don't want to see you down there. Maybe you get 60. I'm sorry, 61. Actually, this is looking perfect for 62. I just think if you break 62, that's a problem. 62 and 61. All right, so it's going to be this level right there. Nope. See, that's not going to work either. That's not going to work down to 60, but 61. Right. Shit. And then you still have to go to the daily chart to look to see if we have, whatchamacallit. There you go, 61. So look for pullbacks right into that area, but I think 62 is your level. You just start to break 62. Be careful. Be careful. All right, the SPY. Let's go to the SPY real quick. We can look at futures if you guys want. Still watching Friday's low, in my opinion. All right, Friday's low. We tested it yesterday. You had a nice brief sell-off up there. I did not. I thought about taking grabbing some puts up there, but I didn't. I didn't do it yesterday after the stream. I thought about it, but I said, nah, I'm just gonna hold off because I wanted to see what happened after hours, and we're coming into the day still. you know, holding up okay. So we're not, I want you guys to understand something. All right, I want you to understand something. We're not making progress. We're not making any progress. So we can bounce back and forth all we want, but your day is going to come when this market has the next leg of its downside. So there is a time factor that I'm keeping on my mind, that if we just continue to sit here and think that it's okay, that there's not going to be any repercussions for trading sideways, you eat up enough time off the clock, the market's just going to make its, you know, the market's going to sell off. If you're not making progress to the upside after a certain amount of time, then which you saw, what was it, the end of last week, even like 2 weeks ago, where we're like, look guys, you know, 2 Fridays ago, right? About 2 weeks ago. Not last week, but the week before that. We noticed that Thursday and Friday, the Qs were trying to flatten themselves out to try to go higher. It would try, come Monday, look good pre-market, and then bang, that switch, that rotation happened again. And it was just like no progress was being made. And look what we got. You got this massive down move. Even though we were, you know, already heading in a direction. But what I'm talking about is the fact that, like, we could not make any progress, and we kept trying to, you know, have that rotation of the Qs start to try to lead us higher, or start to, you know, start to catch a bounce. Technically, or, you know, more so semiconductors, right? Nvidia has a new weighting now, if you don't know. It's 24% of the XLK, 26%. So its moves now are going to start to mean something. And we ended up breaking down, which is okay. So I don't know why this is doing this. Look at this. It's going crazy. You pulled back here pre-market, 5280. I would watch 5280 and yesterday's high. You still have the 100-day moving average above you that you got to watch out for, which is pretty much lining up with Friday's low. It's not a coincidence. All right, Monday, Tuesday, Monday, Friday. Hold on. Yeah, because it's futures. So here's Friday's low down here, and it's with, that is with, whatchamacallit. I am really curious. So you guys will see here. See if you get a pullback here, which you may have already done so. See if you can pull back into, I wish I could turn my computer off, but it's going to mess the stream up. 530. Pullbacks into 530. Is that the level? Yeah, 530. If you pull it back into Monday's high, see if you can hold that. It's like Monday's high, Tuesday's pre-market, 530. See if you pull it back into there, which it looks like it's trying to do it now, which it will. Looks like, in my opinion, you should start to get that pullback. You'll get a bounce and then a pullback. Dude, what is going on with this chart? This thing's going crazy. I should have turned my computer off and then back on before I started the stream. 530 is the level I'd watch for, and yesterday's high. Friday's low, yesterday's high to the upside. Obviously, the 100-day moving average, but you know, pullbacks. You have this like flat top. You had this flat top resistance zone here, and again, if we continue to sit here and just we don't make any progress for the next few days or so, then you want to look to say, okay, what's the market telling us? There's got to be something coming up that the market's waiting for. We've made a big move. That's okay. We can sit and let the market breathe for a few days. That's cool. But you start going a week and a half, the market's going to sell off. And there's going to be something that it's waiting for, which could be Nvidia earnings as well, which could, what is it, next week possibly, or 2 weeks from now? So I know we have initial jobless claims. You have some Fed speakers tomorrow. You have some auctions. You have some bond auctions. Let's see here. What's Friday? Do we have anything Friday? I'm looking for next week, because it feels like next week would be the... All right, we have nothing. Let me refresh this real quick, guys. I'm sorry. That way you have an outlook to know. Okay, PPI. We have CPI data next week. All right, that's what it is. We have inflation data beginning in next week, you guys. All right, inflation data beginning in next week. So the market will probably sit in this range. So think about that, right? Think about playing the range. You have PPI starting on, which is weird. You normally don't ever get PPI before CPI. We already talked about how some of these other countries were already seeing, India, Europe, they're already, Germany, they're seeing higher inflation numbers. Here you go, next Wednesday, core inflation. So, we'll keep an eye on that. GDP growth for Japan. Retail sales, that's a big one. Retail sales is always a big one. Industrial production, another big one. Let's see here. And then consumer sentiment. Okay. All right, so that's that. Wow. All right, so we have inflation data next week. That explains it. That explains it. All right. So 530, you hold 530. You look for a move back to the 100-day moving average in the Friday's low. Really, you're going to look for 535. All right, yesterday's just above yesterday's high and Friday's low. Right there. And then you break it, you know, you have some downside 425 or 525. And then you want to look for Monday's like double bottom down there at 520. So every $5 roughly. All right. Let's go look at the NASDAQ. How many have we had? How many views? Not many views at all. Damn. All right, it's all good. This is kind of what's going on here. Can you guys do me a favor? Please hit the like button, subscribe if you haven't already done so. The Qs are putting in higher highs here, which is a good sign. The bad sign, you're coming into Friday's low. Friday's low. Watch that level right there, 1840. 18410, whatever you want to call it. I hate reading futures numbers. I do. I hate reading them. All right, 1840. 1839.50, 1840. Watch this level here. This could be a nice little bounce. You could I think you might bounce here and then fade. I think you could see a fade right in front of like 1858. I think you start to fade this thing out, guys. All right, and if you do, me personally, I got to look for a move back down to 17,995, 1800. 17,995, 1800. All right, you get a bounce and you kind of just like run it out of steam up there at 18.6, 18.5, 25. Okay, then you just start to look to run out of steam and pull it back to prior day's low. Maybe there's a chance you get drafted at 1820, but you know, I'm gonna stick with the major levels. Like, to me, this level here would be an area that I take profits in front of. Do you know what I'm saying? If you're coming in here in front of Monday's like pivot high there, that level right there, you guys may not see it, but I'm sure it's here on like a 5-minute or something. Dude, this thing's going crazy. I don't understand what's going on. I would take profits there at that 1820. I'd be taking profits in front of that level, because that to me is pretty much your middleman, right? You've made it resistance, you made it support, you made it resistance, support, resistance, support. So again, it's an area, but That's up to you. All right. So, looking for a bounce. Look and see if you get a little bounce. Or maybe you pull back right now. Maybe you're able to pull back. You pull back and hold 1830. Look for 1830 to hold, and maybe you can blast back off up to 1860. 1860 would be the upside I'd be looking for. Anything more than that, what's the reason to move so much? That would be my question. You do have Shopify doing okay. 18.8. All right, 18.8. We are making some progress here. That's a nice breakout. You turn this 18.5, 18.4 into resistance. You pull back. You held 1800. You bounced, rejected. It held. Now we're above it. What do we do, guys? What are we going to do here? You already tailed. If you can see here, paint it out. Paint the picture out. Paint the move out. The price action move. See that tail there? So you already hit 1820. Right? You already pulled back, tested it, bang. All right, buyers are still there. Do you try to extend? Right? Do you try to extend here? And then just fade it back down? Possibly. Maybe you don't. Maybe you extend and you do see 18.8. But 18.8 would be the upside I'd be looking for. Okay, 18.8 would be the upside because you're making progress. This is a good sign. It's when this stops is when it's a bad sign, right? You pulled back, you rallied, okay, you pulled it back to 1800, you bounced, okay, you hit 1840, pull it back, okay, support. All right, we bounce, reject, we held it again. Okay, now this is the part where you're going to find out. Let's see if anybody's here. Let's see if anybody's here because I got a good one. There's nobody here. Can you let me know if somebody's here in the chat? Let me know in the chat if anybody's here because I want you guys to see. I'm going to say something right now that's really going to help you guys. And you're seeing it right now. So if there's anybody here that's in the chat, let me know. I'm not even going to say it. All right. I just don't want you guys wasting your time trying to get ahead in life and continue to be failing at the markets. All right. If you're putting money into the ATM, into the bank to put in your broker, you're doing it wrong. All right. You need to be taking money out of the market and putting that money into the bank, not the bank into your broker. Broker to the bank. Right here is the key level. You're about to find something out right now, guys. Today, this morning, you're going to find something out. And you're going to start seeing this volatility start to pick up. You're going to start seeing the tape speed up. There's a reason why. There's a reason why, guys. And it's important to understand why. So again, if there's anybody here, let me know and I'll tell you exactly what it is that I'm talking about. Anyway. All right, what time is it? It's 8:15. All right, so the spot. Here we are. We're in front of the 100-day moving average. Bounce, pull back. Okay, bounce, pull back. Okay. You have a mild level there at... You have a mild level here at 527.50. 527.45. All right. You're double topping right into that 100-day moving average. See, I hate when charts get like this because you can't even really see what's going on. Guys, if we can reclaim Friday's low and Friday's VWAP and start making progress up there, like if you can hold the 100-day, then we could have a really nice low volume, possibly just a mean rally right back to 540, 538. And things are getting spicy then, if we're able to do that. All right, we need tech, though. We need tech. We need tech to help us out. Where you at? It's like calling your billionaire friend saying, all right, bro, I need some help here. I'm in a little jam. I need some help. And You just rock out. I know that might not make sense. I don't think it made any sense, but still. Just kind of thinking about entourage right there. So, let's go here. So far, you're rejecting Friday's lows, guys. You're rejecting Friday's lows and that 100-day moving average. All right, you had a very nice thing going on here. And again, you know, it's not nobody's fault. But if there is anybody here, let me know, and I'll tell you exactly what it is. Because I'm not going to say it if there's nobody here. I'm not going to waste my breath. But there's something that's going on that's important to know as a trader and to think about. All right, so the SPY. We're looking at that. You tailed off of it yesterday. Looks like you tailed off of it yesterday, end of the day. Okay, cool. We're running a test right back up there. You guys pay attention to 523.80. You guys will see Monday's high, how that became support pre-market this morning. And if that starts to break, be careful. Be careful, because then it looks like you'd be headed back down to the low 500s. I'm really curious if we just kind of sit here today and don't go above the 100-day, and also we don't go below 525. I may go into tomorrow with a few options on both sides, because you'll have 3 full days of the volatility getting crushed. Should, you know, kind of bring back those option prices. And then we would look for a bounce in the option in the volatility, right? So we would look for a bounce in those option prices. And even if we get the direction, you know, we'll play both sides of the trade, very small, out of the money, obviously, and see if we can't get a gap down or a gap up going into Thursday with initial jobless claims. See, it's all adding up, right? Painting the picture. It's all adding up for a consolidation up here. A consolidation would really kill volatility going into tomorrow with some more jobless, with labor data, and that would give us a pretty nice trade there. So I'm watching the 100-day, and I'm watching Monday's high. All right, 525, okay? You guys can see here, Monday's high. I didn't mean to zoom in that close. But you guys can see right here, Monday's high. I have a box drawn there. Right there. 524. I'm sorry, 524, 525. And you can see you turn that into support pre-market. So, I mean, I got to be honest. If these buyers do not pull up and take control, we're going to pull it back. I seriously think we're going to pull it back. I actually might end up just looking for a move back to 522, guys. 522 might be my trade today, or one of the trades I take today. 522. Yeah, I'm gonna look for a move back down to 522, and something tells me they're gonna take this trade from me. I can smell it. They're gonna take this from me. If anybody trades futures, that'd be cool if you could hook a brother up. I don't have enough time to transfer money into this account. But I am going to look for a move back down to 522. All right, I'm going to look for a move back down to yesterday's pivot, like our opening price yesterday. All right, that's the SPY. So let's go ahead and identify who's doing what. All right, who's doing what. So the Qs this morning, or I'm sorry, the IWM this morning was our leader, and it's easy to say why, because of the earnings that are coming in for some of these mid to large cap names. All right, so the IWM has reclaimed Friday's low. You're right at it right now. You're right at it. The Qs have reclaimed Friday's low. All right. The Qs are also below yesterday's high right now. The IWM above yesterday's high. Above. And holding support at Friday's low. The SPY below Friday's close, or Friday's low. Below yesterday's low. So that means we might get some weakness in the Dow. which it looks like we have. We're way below Friday's low, way below Friday's high, yesterday's high. So the Dow would look for pullbacks to 390, 389.50. All right. Really, I would call that. Give me 390 with that. Yeah, give me 390. Maybe you even get 388. All right, 390. So the IWM looks to be our leader here. Let me look ARKK real quick. ARK's doing okay too. ARK is holding Friday's low. All right, so the IWM with names like Shopify, right? Look at Shopify ripping. We talked about that this morning. SELH. I'm not sure how Celsius did. They didn't do that great. Palantir, Shopify. So more so your tech names. So you can see why the IWM and the Qs are leading because it's tech. I mean, Shopify would be a technology name. Palantir Tech. All right. Names like, did we already get PayPal? They reported, right? Didn't they report? And look, they did good. That's a fintech company. Look how far above it's above Friday's low. So you actually have some resistance possibly up here on PayPal. You're back up to where your earnings rally took you. All right. So that is 64. All right. So let's go into trades. So you can see right now the IWM is your leader, tech, SPY, and then the Dow. It's kind of a funny. It's kind of a funny scenario. You don't normally see that. Normally it's IWM and the Dow, SPY, and then the Qs are last. Right? It's either the IWM or the Dow that's leading, and then the Qs are in the back, or vice versa. So one more time, the Dow or the IWM above yesterday's high, trying to hold right now Friday's low. And we'll even use a pre-market area, so we're above that. All right, let's look here for the Qs, and the Qs are also doing the same. So the Qs are also lined up pretty well with the IWM. They're like dead matched. So is the SPY. It's just below Friday's low. And then the Dow is our laggard. You guys can see it actually broke it and it's turning it into resistance. If I put this right here, if I put that right there, that opening price, really you could say it's 393. But that's where you pulled in for support, bounced, and then sold off. So yeah, we can put it right there. Right? Look at that. It broke it. Now it's trying to turn it into resistance. So what's that mean? All right, think about it. Think about it. Anyway, hit that like button, subscribe. All right, JP Morgan, hell of a run. You're coming in with a gap up today. Nice job, everybody. You got well over 100%. All right, I forget what calls we were looking at yesterday. But I'm pretty sure it was the 200 calls. How do you both handicap this election, but maybe handicap it in the context of the regulatory? So yesterday, and what that ultimately is going to look it was these. It was these. So you had a high and a low of 70 cents to 385 for the 200s. That's an area of 400%. Really, 300%. You had the opportunity to get right around 300%. Because again, you're spending the $100. So one, I would count the 2, 3, 4, 300%. You had all types of range there. All right. Nice job. I know I got a couple messages yesterday on Twitter and a couple actual messages, so you're welcome. I appreciate it. All right, so that was our trade yesterday. That was the top trade idea of the day. If you go back to yesterday's live stream, you'll see I started the live stream out with, hey, guys, JP Morgan. So right now you're at the 50-day moving average. Let's go take a look here. This trade's, I'm not going to say that this trade is done with, guys. There was someone talking about banks yesterday on CNBC being really bullish banks about how the bear curve steepener is really going to help banks out. This is the time when they have trouble. And I think that if people are going to lose their jobs and things start to get bad, then how are they going to do well? Nobody's going to want to be taking out loans. They're, in fact, going to be giving back houses. Commercial real estate, yes, has held up pretty well. But, yeah, so let's go. It's already 8:30. My fault, guys. My fault. All right, let's do this. I'm going to go get some coffee, and I'm going to go through and go get my levels and everything ready.
They seem to be having the same ideological philosophy about enforcement and regulation that the vice president has expressed, and certainly her new running mate too. So I would be surprised. That's a big change.
And then making, if the former President Trump becomes the president again, how do you think it shifts? And also the questions. I mean, people say that now the environment's very uncertain when it comes to deal making. But there's another view that it also could be uncertain under a President Trump. I don't know if you believe that's the case.
I think there was when I came in 2017 and I was appointed, and a lot of times, personnel is policy. It's how that person, there's so much discretion in these types of jobs, SEC, FTC, DOJ, that it depends on their ideological bent, how they view free markets and the role of antitrust in them. And so I think people, expected me to be more of the Ronald Reagan laissez-faire antitrust. And I had taken the view that, good and a timely antitrust enforcement actually protects the markets and keeps it free from government regulation. My guess is you'll see, somebody in that same mold. Remember, President Trump was the first president to actually be a plaintiff in an antitrust case. So he actually himself, might have some views and would have an interest in the type of people he picks for these types of jobs.
I guess making just like the elephant in the room is that you could have a president who, in general, was less averse to mergers that might have a personal issue with some of the people involved at the head of the companies that are trying to merge, and that could actually come into play in terms of regulatory issues. Do you think that ever happened or could happen? And you know what I mean? That's been bandied about that. If President Trump didn't like the CEO, that he would take it out on the company, not let it merge.
I haven't seen it. Of course, going back to Nixon and the ITT case.
Never
and
happened.
Then there was also LBJ with some of the newspaper cases where he held out some mergers until they endorsed them. There's some colorful history.
Yeah.
But, I don't think that really happens much. Of course, President Biden was much more, had an executive order, and competition policy was much more of a direct policy from the White House. And, Professor Tim Wu being inside the White House directing some of the policies. So you had more of that. But I don't think in specific cases, I have not seen that really come into play. Certainly didn't come into play during my tenure. And I would doubt that it has come into play during this presidency.
Okay. Macon, I want to thank you for joining us as always and look forward to talking to you again very, very soon.
Great to see you. Thanks so much.
You bet.
All right, coming up, former Council of Economic Advisors Chair Jason Furman on the Fed, then Maryland Governor and Kamala Harris campaign surrogate Wes Moore will join us now that the Vice President has fleshed out the 2024 Democratic ticket. It gets complicated because the Vice President is picking a Vice President to run with her. So we, a lot of Vice Presidents running around. Stay tuned. Squawk Box will be right back.
our business.
Here's the opening line from a new Wall Street Journal op-ed. Federal Reserve Chairman Jerome Powell must be kicking himself for not cutting the Fed fund rates at last week's Federal Open Market Committee meeting. Former Council of Economic Advisors Chair Jason Furman wrote that, and he joins us now to explain. I wonder, Jason, whether we need to just rethink everything we've thought about the soft landing and everything else that we're assuming, you know, is going to play out the way we want it. Is there some question in your mind whether it's clear sailing here?
Look, all of this data is incremental. The economy never tells us the new direction it's heading in super clear language with one release. It's all about balance of risks. And yes, the balance of risks have shifted. In my mind, there's a greater risk of recession than there is of elevated inflation at this point.
And being someone who's been around for quite a while, you know, obviously some of us have been around even longer, quite a bit longer, but when we're all expecting a recession, we never got one. And we were 2 years ago. Remember that? Third quarter, fourth quarter, first quarter, I don't know, maybe not 2023, early 2020. I mean, everybody. Now it's nobody's saying that. It's like we've dodged it. It's not going to happen. Does that make you uncomfortable?
Oh, look, I think the odds are we're not going to have a recession. I don't think there's some great reason to believe we're going into a recession. It's just that inflation is about half a point above where it should be. The unemployment rate is rising. I think inflation's going to head probably back down, certainly if the unemployment rate stays there. And so the Fed can focus more on that other risk. And by the way, even if the Fed starts cutting rates in September, or when they start cutting rates in September, we're still going to have a somewhat contractionary stance for monetary policy. So this is not, we're headed into recession, cut the rate to zero, panic with the 75 basis points emergency cut one of your guests talked about 2 days ago.
Right.
This is just a recalibration.
It's still kind of weird that we were at 5 or 6 cuts, the market believed, that we went all the way down to 1, maybe 2 cuts. And now some people are all the way back to 5 or 6. That's how quickly things can change. And it's really not that many data points which caused a big revisiting of our expectations. You said you're not expecting a recession. And no one ever knows 100%, but they go 20%, 30%, 40%. Did you ratchet it up in your mind at all, the possibility?
Yeah, when I saw that unemployment print, what's called the SOM rule now is originally Goldman Sachs. I was looking at that back in 2007, and it was making me really nervous about us tipping into recession. You can explain it away now with the immigration surge, with we're not seeing a big increase in firings and the like. But still, I'm a bit nervous. So give me a 1-year horizon. Yeah, about 20, 25%, which is higher than the normal 15% if you don't know anything.
Some people said it's already the longest late cycle economy in history, and that it's crazy not to think that at some point that could happen. So we're up. The SOM rule is a half a point rise, and are we really at 0.6 now? What if we go to a full point rise in the unemployment rate? At that point, would you just say it could be immigration, or would you say, yeah, that looks like a problem?
Oh, look, if it goes up even another 1 or 2 tenths in the next report, I'd be really, really quite worried and think the Fed would need to act in a very strong and decisive way. I think it's more likely that next jobs print, the unemployment rate falls from the 4.3 it is now back to something like 4.2, and everyone, breathes a huge sigh of relief. That's what I'm expecting. That's what I'm hoping. But of course, you need to be prepared for anything.
Hey, Jason, I want you to put your political hat on as if you were going back to D.C. What do you think of this VP pick? And what do you think that Harrisonomics would look like?
Look, I think Harrisonomics will look an awful lot like a continuation of what we've seen over the last 3.5 years. Walz is a really exciting guy. It's hard to watch him speak. and not have a smile on your face listening to him. But, they haven't had time to define any new positions, which is why I think you're best off extrapolating from the last couple of years. We've just been talking about the Fed. One of the tremendous things that President Biden has done is just respect the independence of the Fed while it was ratcheting rates up and then keeping them high in an election year. Not a lot of presidents would do that. I think it's helped our economy, helped give the Fed the room they need to bring inflation down.
But I would think you and some people that normally would not want to rock the boat, Democrats have said, I certainly hope she would, Vice President Harris would tack more to the center. And there are people that say that choice, Jason, was almost like analogous to Trump's choice of doubling down on, for lack of a better term, of a MAGA vice presidential candidate. I mean, he's pretty far left. Wouldn't you? This is not I mean, the Journal wrote a piece on it today that says it's exactly the same as what Trump did, doubling down on the base.
You look at the voting record he had in Congress. Not that different from the types of positions that Governor Shapiro has taken.
How about his governor? I can read you some things about what he did as governor. I know you've seen him, Jason.
Oh, I'm sure I'm not going to agree with all of them. I'm not going to agree with all of anything anyone's done. I think for myself, rather than just follow what someone else says. But but look, Joe, I think a lot of it, and the coverage bears this out, was a real personal chemistry thing. And
right.
I've certainly heard from everyone I know, including Republicans, that know Walz love him. They just love him at a personal level. People who served in the House with him, they're really positive about him. I think that chemistry is what won her over.
Maybe it did. Maybe it did because.
What's up, Tyreek? Sorry, buddy.
Andrew, right?
I was just going through a couple things. I wasn't sure if anybody was here or not. Give me 2 minutes. I'm glad. Yeah, that was a big hit. Watch out today. I talked about Lumina this morning. Keep your eyes out on it. How you doing today, man? How's everything? How are you? How's your morning? How is life? You ready to take on the day? That was a big hitter, bro. That was a big hitter, Tyreek. That's a nice job. Congrats. Clap it up, Chad. If there is anybody else here, shout out Tyreek. He has been on LUMN for the past 2 weeks, really. So, shout out, man. Great job, dude.
Pretty good
You're the
joke.
one who said them, not me.
Pretty good joke, but it wasn't in Hillbilly Elegy. There's nothing about a couch, and it was a meme in a parody account, and now they're finding its way into speeches. Jason, thanks. Fresh pond, dude. Fresh pond. When's the last time you were out there?
About a month ago. I'll host you anytime, Joe.
You're busy. All right, when I come up, that's what we're doing.
Okay, but when we come back, we've got another can't miss interview. Maryland Governor Wes Moore is going to join us on Vice President Harris's decision to tap Minnesota Governor Tim Walz as a running mate. Stay tuned. Don't go anywhere. You're watching Squawk Box, and this is CNBC.
Yeah, I mean, I just, like I said, I with everything that's going on, I wasn't trading like a mid cap, small cap name. I mean, yeah, it's $5. We said yesterday $5. It had a really nice shot to go to $5. I already traded Lumen. For those that don't know, like a month ago, forget when it was. Might have been here. I forget, where was it? Where was it? Might have been in one of the, I forget, because I thought the candles were bigger. It was one of these days. Yeah, because there's the pullback and then it ripped. But watch $5 today. I'll probably short it today. on a break below $5. I don't know where it's at right now, but you know, I could have easily taken it to $5. You know, but you know, it is what it is. Here we go. So we are up to $7 now. Let's see what happens at 7. Look for a bounce into $9. $8, then 9, but we gotta hold 7 first. Gotta hold 7 first here. Told you guys we were looking for a bounce into $7. And again, you know, I'm gonna stick to some of these small caps, but I will short LUMN today if I can get it down. If I can get it up there to like $8 or $9, I will be shorting it today. There's a couple of things going on that I talked about this morning. That you know, I think is kind of important that nobody's really talking about. And I didn't look into it myself, but a lot of what happened yesterday is pretty much is for taxes. And when do they report? LUMN, let's see. Okay, they reported yesterday. All right. So let's see here. I mean, you know, I'm not going to just step in front of this thing.
Kamala Harris,
but I will be looking
with her
for a
newly named
pullback
running mate,
short.
Minnesota Governor Tim Walz,
If we
the
can
Vice
start to
President,
reject
focusing heavily on
8,
swing
9.
states this week. Join us right now on the Harris-Walz ticket, and specifically its level of support among business leaders. Maryland Governor
Want to look for that break of
$5.
$5.
A campaign, also one of 50
6,
Democratic leaders on the Harris
8,
campaign's National
10.
Advisory Board, and a former Wall Streeter himself. Good morning to you, Governor.
Good morning. Good to see you.
What was your reaction to the Walz pick, and to the extent?
All right, let's do this. So we have a lot going on. All right, Shopify. Shopify. Okay, so we have $64. We're looking at 62. We're pulling back into 62 right now. Where is, hold on one second, you guys. Let me get my stuff up here. Let me get this stuff up here real quick. Let me get my scanners and everything ready to go. Everything's kind of like freezing up on me. I'm kind of nervous what's going to happen here. I'm kind of nervous. I'll probably I don't know why it's been doing this, but it's just I'll probably start to lag here as soon as we start to open up. All right, it's 8:45. We're honing in. $8, $9. 2 levels we're watching for on the upside. Downside $5, and if you break 5, watch out. Watch out. Let's see here. Let me do this real quick. Let's do this.
I think it's really important for people to remember that the vice presidential selection is not a box-checking exercise or what a person can get you or can't get you. This really is, in its purest form, it's a person making a decision that.
And we are shit. I don't even.
And she had wonderful options to be able to choose from, and I think she selected a wonderful option in Tim Walz. And for the people in the business community, I think about what we had here in the state of Maryland, where when I was inaugurated, we started off 43rd.
That's crazy.
Now we're going on 12 straight months of amongst the lowest unemployment rates in the entire country, because we are doing in Maryland what I know Tim Walz believes in Minnesota, and saying that you can actually.
Okay, so there you go. 38.2 is $6. That high, same thing. I would use yesterday's high. It's a little bit better. All right. So yeah. All right. We'll see. We'll see what happens here. That's a nice tail. Again, guys, if you guys are going to trade Lumen to the upside, please be careful. There's a lot of things going on that you may not know. All right. There's some tax reasons on why. Like, you have to ask yourself, why the capex and you know, the money that they made didn't go up, but they did so well. Let's go look here. Let's see. LUMN. Let's see. It's a loss of 5 cents. Technically, Q2 loss. Okay, adjusted loss per share 13 cents. Loss of 49 million. Revenue was 3.2. Mixed Q2 sales beat. Okay, so Lumen reported a quarterly loss of 13 cents per share, which missed analyst consensus estimate of losses of 6 cents per share. So they more than doubled what was expected in losses. Quarterly sales came in at 3.2 billion, which beat analyst consensus of 3.246. It came in at 3.268. So about 10, what is that? 20 million. So it's a 69% increase. All right, the company said it saw continued success in North American large mid-market enterprise sales. Large and mid-market new logo sales increased, and net total contract value for all channels were up year over year. So not much here. I have to dig into that. Anyway, all right, let's keep it moving and grooving. All right, Tesla. All right, guys. So look, Tesla. I'm going to be watching Tesla today. I'm watching that 200-day moving average. I was actually surprised today when we opened up today and Tesla was back above 200. Tesla's back above 200. So let's go look real quick. If Tesla can pop, I want to look for a bounce back into like 205, 204, that 200-day moving average. And I want to see if we can bounce off of here and kind of like reject, fall out of steam, and see if it does break. But that's a guess, right? What I just did right there was a guess. The thing is we also have the 50-day right there at 208. So it's like as soon as you get through one, you have another moving average, major moving average to contend with. But more importantly, let's go look. And the reason I'm saying that is because this could be a nice trade if we could take this back down to 195. 195. All right, so right there would be the target, 195. Let's go to the charts. Let's pull up Tesla. So let's go to the daily chart. All right, and you can see, technically, on a daily chart, we have regained this level here, which is support and resistance, right? It's right here from 198. I'm not going to go to 200, but it's like right there. You can see support, 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 resistance, support, resistance, 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 resistance. Get above it, support, support, support. Break gap below it, hit it, resistance, bang, downside, resistance off the earnings. Break above it, well, resistance, and then we pull back, but then we regain it. Then we pull all the way back down, and we gap below it, and then we bounce into it. And currently, we are holding that move back higher. You can see yesterday on that tail of that daily candle, we are holding 199.50. Hallelujah. So, we have a gap that takes us to 208. It's like 207.50. And that 50-day moving average. Okay? That 50-day moving average. That's what we're looking for. That's what I'm looking for, I should say. So, we had a nice job of closing, regaining 200/199.50. Call it 199.50. Let's go to the 4-hour. You can see we pull back, we bounce, we pull it back, which is that little area right there. We try to bounce, and is this a lower high? Like, are we running out of steam here? That's the question. Are we going to start running out of steam and we just going to pull it right back into 195? It sort of feels like that could be the case. Bounce, pull back, bounce, and then it pulls back, it bounces, and then that's it. It's like, okay, you just tried. Look at this. 1, 2, 3, and now this morning was your 4th shot right into that 200-day moving average. Ding ding, what's up, bro? What up, gang? How's it hanging? Nice. SQQ yesterday expired September 20th, so basically like a call on TQQQ. Nice. Yeah, we right before the stream ended yesterday, we called out the SPY in the queues, where it was a really nice long opportunity right around like 11:30. That pullback that we got, I'm not sure if anybody took that, but that was a monster move, guys. You guys could have taken that right into like 3 o'clock on the SPY. So this was outside of Alibaba, Palantir, and there was one more. I keep forgetting it, but the SPY. We called out 4 trades yesterday. Oh, JP Morgan, Palantir, Baba, and this SPY call here were the 4 trade ideas I gave out yesterday. Right here, this pullback. I said, guys, I drew the line for you right here. I said, you got to do it. This pullback. What time was it? 11:30, 11:27. Literally that candle. I'm like, yo, longs, if you're going to go long, now is the time. Now is the time. And look at that. It carried your ass right into 3 o'clock. 250. Boom. Hit Friday's low. It's a nice trade there. It's a very nice trade. Anyway, let's go back to Tesla real quick. I hope some of you guys took it. I hope some of you guys took it. Again, today I'm going to be relaxed. Kind of just going to let the market show me what she wants to do. I was patient Monday. We come in Tuesday. We saw price action from Monday. I said JP Morgan, Alibaba, Palantir short. Obviously off the bell. Baba, JP Morgan, Palantir, and then that SPY. But those 3, it's like, let me look to see what's going on. Then we make our decision. So today, I'm kind of just going to look for a few dollars on anything that I trade. I don't have much. But anyway. So again, 1, 2, 3. Well, let's see. 1, 2, 3. And now this is your 4th time, guys. So if you get a pullback into, you get a pullback here on Tesla, you've hit this 200-day way too many times. I think they're going to start selling it off. All right. Again, you can only bounce into something so many times before buyers give up and step away. Okay. And then you might have some shorts step on it. So we got to see, though. Pullbacks to 200. Do you get another one more try relief bounce there? Obviously, you're in a consolidation here. I'm looking for about $5. All right. So there's Tesla. Let's see here. Again, I want to see we're pulling back right now. Are we going to try one more time, like off the bell, get that pop? Let's find out. We're going to find out right now. And again, the only thing that would change this is if news came out, because you can know what happens in the market. And the only thing that would change that, because what's the point of doing technical analysis if you're not going to know probability-wise what the move's going to be, where you're going? So it's like, because there's like a lot of people that say, you don't know what's going to happen. No, but I have a probability that, the chances of this happens are pretty damn great. And they're damn near 99% chance. And the 1% that is news that could just come out of nowhere and limit down this whole market because of a war or some bombs that get set off or something stupid. Of course you should know what happens. And the probability of that little scenario happening where news gets in the way of your trade is so small. It's so small. But it does happen. We are in volatile times. So then to them, I will say, why are you trading off of hopes and dreams then? If you're saying that you don't know what's going to happen. You should. Then what's the point of doing technical analysis? Anyway, I'm going off track here. I'm just talking my shit. All right, so 200, guys. Let's look for 200. Let's see if we bounce and try to test Friday's high. You're trying to bounce now on Tesla. Maybe we do get some upside here. Maybe we do get some upside. Come in with the gap up. You had Rivian earnings kind of take it back. Yeah. So what I'm going to do is I'm going to look for bounces into call it 205, 205, 210. Then I'll look for the short. I think you do bounce. I do. I think we could start to bounce. It may be a choppy day here in Tesla. It might not be the best thing to trade. Nvidia, I got to be honest, Nvidia is looking a little weak right now. What's going on here? Sorry. And again, give me a second here because I can't see the chat. Please, if you guys can, I know you guys can. I love you guys. Hit the like button, subscribe. All right, Nvidia. I don't know if I've talked about this or not. So you had some news with SMCI, and you're seeing a catalyst here. Boom, 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 boom. You're hitting that yesterday's high, 100-day. Where's the 50-day at? The 50-day's got, okay, it's way up here. Oh, snap. All right. All right, so that is the major. All right. Sorry, guys. I'm just doing my analysis real quick. All right, so Nvidia. Let's look for. I think we got to look for there. 108. It's like 108, 107.50. Yeah, we're below yesterday's high. Monday, Tuesday, Thursday. Alright, that's it. This thing looks ugly, man. I gotta be honest with you guys. Nvidia does not look like something I want to trade. But if I did, I would have to trade this thing back down to the downside and see if we can't break the 100-day. Alright, these are just my opinions. This is just my analysis. You know, you guys do what you guys want. I don't know if there's a, you know, again, there could be upgrades, downgrades, but I don't think that that's even going to matter. I would look for rejections up there at 108. All right, Nvidia, 108 rejection is what I'm going for, and I want to see if we can pull this thing back into like 102, 100. Yeah, that's beautiful. Oh, yeah, that's beautiful. It's a beautiful thing. It's a nice little break and retest there, but I think all that ends pretty damn soon. You can see right there at 106. All right. So what I would look for, where's this at? Oh shit, so we are above there. Damn. Yeah, guys. That's what I'm going to do. I'm going to look for pullbacks. This probably won't be a trade idea today. It doesn't. The setup, in my opinion, just isn't there. 5 minutes. And if you guys have any tickers, you guys are more than welcome to throw them in the chat. Okay, so support resistance.
That's a huge move. That obviously is beneficial, at least to those who are still in this trade, where you're borrowing in yen, you're buying dollar, you're buying, and then you're buying baskets of potentially.
Let's see, 134, 134, 135, 135, 134, 134.
To hit them again from the Bank of Japan governor saying they will refrain from further rate hikes when markets are unstable. Which of course that seems to be the case right now. And so you've gotten
135. I think AMD. There's not even a setup here. That's why I don't like looking at this. You're trading at 103 right now. I would look for pops back into this level here. It's not yesterday's high, but it's like this double top right there. I would look for AMD to bounce into that level, possibly reject yesterday's or Monday's close, yesterday's pivot high up there at like 134. Yeah, 134, 135. Damn, they're so close together. That's so weird.
Enabled contractors, contactors to potentially replace electromechanical contactors in its electric vehicles. That's India Papa Whiskey Romeo IP.
Okay, I see what's up here. All right, so look, we have two different ranges going on here on AMD. So you guys see this little area right there from like 120, yeah, it's like 119 up to 140. You can see that there's nothing in here. And what we're doing is we're filling in this space. You can see we're starting to come back, revisit it. All right, you can see, what are we doing here? We break into it, reject, hold, bounce, reject. And now it looks like we're making that lower high. You can see pulled it all the way back into 119, bounced right into 140, pull it back. This is a nice break and retest of 135. And we look for moves back down into the low 130s, mid 120s. Okay, that's what I'm doing. That's what I'm doing. Because I think you're going to see AMD just consolidate from, again, 119, 120 to 140 and start to fill that area in and then try, you know, to possibly go higher. But I think you have an area here that needs more price action to... Yeah. So you can see daily chart bounce, pulls back yesterday, you know, so, and it's looks like it's weak again this morning. All right, actually you might want to, yeah, 135. Yeah, 135 might actually be the level. Yesterday's close. Yeah, so AMD 135. I'm looking for bounces in the 135. Let me double check. Let me double check my work now. Let me not just go ham and not double check my work. All right. MACD is trying to. Okay, it's trying to go. Okay. Yeah, I'm going with that, guys. Damn, this thing could be strong. It all depends. I'm going to let AMD show me. If you pull it right into yesterday's close at 130, then you could look for a trade from 130 up to 135, 140, really 135. Or you look for the bounce into 135 and then look for the short, which I'm going to tell you. Just give me a second on what I am going to do. I think the first one, the bounce into 134, 135 is what I'm going to do and look to get short. Dude, I don't want to edit the damn properties. Again, I'm looking at a stock I haven't really been watching, so... Yeah, that's what I would do, guys. I'd look for a pop off the bell and see if I can get a 140, 135 rejection. I'd watch 135. If it looks like it has more room, then just wait until you get up there to 130 or 140. I was going to say 136, but 136, 140. So here, here, and there are the only places that I'm going to get short. Okay, for the downside. That makes sense, right? Cool, great, grand, wonderful. All right. Baba. Alibaba. This thing has been a monster for 2 days, guys. Great job. Yesterday, I called this out along with Monday. I said, hey, guys, you know, Alibaba's looking really strong right now. All right. So, if we go to the daily chart, we have a lot of volume. We have a lot of volume stepping in here. Or I should say above normal volume. Uh-oh. I just lost my stuff. Alright, so what time is it? It's 9:09. Okay, so I need to go over Shopify and some of these other names. Oh my god, come on, bro. Sorry guys, I'm gonna get pissed. I'm just gonna get fucking irritated and pissed. So you know, upside moves, you got to look for $80. We're already at 78. we're already at 78, 79. All right, 78.90 is where we're at, so call it 79. One of two things. Either we cannot get through this level the first, well, really the third, fourth time. I will look for pullbacks. I will look for a day to let Alibaba pull back. And then I want to look to see if there's an opportunity here, if the volume keeps up, that says, you know, we could have institutions taking advantage of buy low, sell high. And I would look for a move back to 85, if not $90. Okay? So let's keep an eye on Alibaba. You can see here, look at this breakout in volume here. It's a lot better than the sell side volume. You know, if you were to look at SMCI, it would look quite the opposite of what we're looking at here. It's kind of like SMCI, right? But instead of selling pressure, we're looking at buying pressure. I know that was probably too much. But anyway, you have a mild level right here at 79. Look for pullbacks. You've already retested 75 or 78. I think we gotta look for pullbacks. I do. I think we gotta look for pullbacks, especially if you get a quick bounce in the 79.50. That's going to be really hard and tempting not to short that. All right, so right here, guys, at 79, that's the level. That's the level, and I'm going to look for 77.50 and that 50-day moving average. Again, I'm not just going to randomly do this. I want to start seeing volume. This thing could consolidate and just grind higher. It's got a lot of volume to the upside. It's on sale or could be on sale. I don't know if there's been any changes. That's something you want to also look at. Has there been any changes? Unusual options. Alibaba Nvidia stock incentive to trade crypto. Press release of it will announce June quarter 2024 results in August 15th. It is the 7th, so we're about 8 days away from their earnings. AI-powered search engine for e-commerce merchants. Okay. So, I think this thing could really get sold. Like Xi Jinping isn't really, like, you know, they do have their, like, little, like, stimulus stuff going on, right? I'm pretty sure. So, yeah. Look for pullbacks here off of 79, $80. 79, 79.50, really 79. I'm watching 79. Looking for pullbacks in a 78. If we pull back into 78 and you see us start to hold, then we could look for a move higher. Right into 80. So that's what I'm looking for. Look for pullback longs. Damn, look at that little, like, Chinese head and shoulders. Left shoulder, head, right shoulder. Boom. Just, damn. Alright. Okay, so, Bank of America, ripping. This thing is ripping this morning. And look, it just held this level here at 38. Wow. Look for a move to $39, guys, on Bank of America. All right. Just want to go here. Come on. Sorry that, again, the mic is right next to my mouse. I'm trying to get some stuff done. Alright, so that is that. Yeah, so listen. Write it down. $79 is a possible short on Alibaba. Alright, now, you're not looking for a home run trade here. You're looking for a move back into 77.45 and that 50-day moving average. So, keep your expectations in line is my point. Okay? Or if you want to wait for the pullback to 78, 77, then wait for the pullback to go long at 77, 78. I would say 78 is the level. Or 77, I'm sorry. I would say 77 is the level. Let me write this down. 79. What is that? 79 short. And we're targeting 77. 77.
Welcome back. Let's spend some time talking Disney. Of course, the stock looks to be down, not sharply, but down nonetheless.
All right.
The attendance at parks, what was somewhat anemic, is
What was I just looking at?
first real profit from
Damn, bank. Look at JP Morgan still going, y'all. Look at that. It's coming right up into that support level up here. Holy shit. Could I get a short? What's TLT doing here? TLT's pulling back. That's a nice break and retest on TLT. Holy sh... Just like the banks. I think we're back to a normal market, you guys. Banks go up, TLT goes down. Banks go down, TLT goes higher. Can you guys believe that? We bought 95 calls for 20 cents. And they were $3 in the money. 20 cents in the over $3 was like $3.75, $3.85. It's fucking nuts. Nuts. It's wild, man. We got long right here. For anybody that's new here, we got long on that day, right there on TLT. We could not have picked a perfect day to go long TLT. I knew it. I knew it. Especially with that hard sell side volume. I said, I ain't selling. This is a shake and bake day. And I said it all day. I'm like, yo, they're just trying to shake people out of this. And this thing is about to run up. Look at that. Just flush them out. And what it do? It came in with a gap up. Huge gap up. Look at that volume, man. Massive volume the following day. Look at that. Consistent. Nice job. Nice job. Clap it up. Fucking killing it, man. Like people, KRE, TLT, you name it. The bank, JP Morgan yesterday, like, I just really, really wonder what someone else could do with this information and what they could do for their friends and family and themselves. Apple, again, you have to watch, keep an eye on Microsoft and Google. This news with Google really hurts Apple. It hurts Apple in particular because of revenue. All right. This is the other parts of the market that it's important to learn is understanding how things work. Right? Knowing that Google pays Apple $20-some billion a year. All right? Or annually or yearly. I don't know. I just know that Google pays Apple $20 billion or $20 billion of the revenue accounts for Google's ads placement on Safari. That's going to affect them. What do they do then? You know, that revenue could possibly be wiped off of their balance sheet. That's not a good look if the DOJ wins this case. So, and Microsoft's obviously doing better. Google's doing better because Google's going to save money. Microsoft's share, I've already told you guys, so you guys know. So you can see the weakness here with Apple. This news isn't enough to keep it down, but it is a big deal. It is a big deal because then what does that's potential revenue that they could start getting eaten up. Apple looks like it wants to try to bounce, but looks like it just wants to bounce it to the 50-day 215. It's a nice level right there, 210. All right. We talked about Lumina. Oh, Shopify. Let's go look at Shopify real quick. What do we have here, guys? We have 10 minutes. Let's start getting ready. So, yeah. Here's Apple. We could look for a pop Look for that pop in the 210 and that 50-day moving average. Possibly look for a pullback. Here I am, fooling with my charts. Like, again, I'm so tired of it, bro. I'm so tired of fooling with these damn things. Like, there's no reason. Like, you can tell that this is old because you can't lock any of this. Like, so if you accidentally hit it with your mouse, like, you have to redo it. Like, you know, size it up and everything. Be cool if they had, like, a little icon to the left that you could just lock it so it didn't move. And all you had to do was do it once. Alright, so there's that. Okay, 15-minute chart. You're in an area of consolidation too from this month on Apple. What is this? Damn. So you might have a little more room downside. Guys, if Apple holds 206, 205.50, you might be able to have a long here. You may be able to catch a long on Apple. And look at that. That pullback takes you right into that. Wow. Okay.
Which, by the way, from what I hear, is still a ways away. They are arguing. We work for Comcast, and if I were in the boardroom, I'd say, you know what? Could we go to Norwegian Cruise? Could we go to Viking? Maybe we do a deal. It's so brilliant that it won't be done. And by the way, if Comcast does have a cruise ship, Jim's going to be on there for a week. I tried it. You know, I booked. Imagine that. February 2020, the last week I booked a cruise. Yeah. David, it turns out.
All right, let's do this, guys. Hit the like button, subscribe.
And then you chided me. I did. That was your Jim, you just all you do is steer me.
Appreciate you guys joining us. Market is getting ready to open. Let's stay focused. What else do we have? What have I not looked at really? All right, so again, Apple. See if you get a pullback long down there at like 205.75, 206. See if you get a long there if the market bounces. If the market can't bounce, then you want to look for, let's see here, I gotta pull, god damn it, I got so much on my desk I have to clean. I gotta clean it up this weekend. I didn't get to it last weekend. Alright. Shopify, Shopify. That's what I wanted to look for. Alright, Shopify, trying to extend higher here. Look at that level right there.
WOLF Wolf Speed was downgraded this morning at New Street to a neutral. That's Whiskey Oscar and a Foxtrot shares are being higher at this point, up about 27 cents at $14.60.
I needed Shopify to pull back. Okay, so that could be the level. So either I would look for either a rejection at 66, 68, but I don't know. There might not be a trade here for me if it just keeps going and going and going. Where are we at here? 5 minutes. Damn, JP Morgan's above the 50-day, you guys. This thing might be heading for 208. Bro, this thing might give you a day 2 continuation. It just might. I would shit my pants if it does. I'd be so mad that I'm not in this. Bro, this thing's going to be a freaking 800% type of trade today when it opens up. Watch. Those 200 calls are going to be insane. Because you still have 3 days left. And you're damn near in the 208 as it is now. 207. So, you're going to be close, man. This is going to be a huge trade. Okay, so Nvidia watching yesterday's double top high. Dude, I don't want to fucking edit it. Sorry for the language. The fuck do I want to edit the levels for? The levels should be right. It shouldn't have to edit the levels. Or edit the candles. Rivian also is down. Let's see. Let me do something here. DJT. Alright, 4 minutes, guys. 4 minutes. 4 minutes. I have not looked at Google. I have not looked at Google in a little while. Guys, good luck today. If you guys see anything, call it out. I'm going to do the best that I can to help you guys. But again, I'm just gonna trade the levels. I'm just going to do what I do. It's just another day. Just another day. Okay, so where's the SPY? I'm so tired. I have only heard it. Some of these commercials, man, they're really... What do I... Oh, Tesla. Okay, Tesla. We have 2 minutes now. Shit.
Moving forward with your positive breast cancer, my fear of recurrence could have held me back, but I'm staying focused and doing more to prevent recurrence.
Verzenio is specifically for HR-positive, HER2-negative, node-positive early breast cancer with a high chance of returning as determined by your doctor when added to hormone therapy. Verzenio reduces...
All right, so let's look for that pullback here on Tesla. Dude, come on, bro. Come on. Trying to get these levels. We have 2 minutes here. I'm down to the wire again. All right, so there's a rejection at 202. Let's... I'm not going to worry about that. It's all right. All right, time axis. Keep it zoomed in. Alright guys, again, good luck today. Stay safe. If you don't see anything, LUMN, I probably will be looking for a short if it shows itself. If the short shows itself. Okay, so let's look for a pop on Tesla. Look for that pop. And we're going to look for a short on a pop. Damn. This thing might end up just going to the 50-day 210 area. Shit. It might end up just doing it, guys. Here you go. Watch 200. 15 seconds now. Good luck today. Be patient. Wait for your setups. If you don't see anything, don't throw your money at the wall. Don't just don't think you have to trade just for the sake of trading. I'll be damned if that didn't hurt. Damn, that was loud, bro. Oh my gosh. Come on, Tesla. Just work with me, baby. Work with me. All right, here she goes. Look for this reversal. I'm looking for a bounce back to the 200-day. I don't know why these charts stay still, but the other ones don't. It still makes no sense to me. Makes no sense at all.
S&P 500
Makes no sense. Okay, Alibaba right up there at resistance, you guys. $79. Look for a rejection up there. If Alibaba can reject 79, then you have a move down in the 77.50, 78. Just call it out as you see, as I see them. LUMN also on the list. 5.
Preclinical results of LP 184 synergy.
There's probably a ton of ideas that I'm not even looking at right now that I should be looking at, like Shopify. Is Shopify pulling back yet? Come on. Okay, it's extending. I think I said 68, 69 or something like that. That's wild. Okay. All right, Nvidia's doing its thing. All right, Nvidia's doing its thing. Watch for 110. Watch that 110, 112 level.
Rivian CEO said sees
Come on, bro.
output in 2025 despite plant pause. That's Romeo India. Projected November, Rivian shares so off the lows now 1364.
All right, so Rivian's bouncing back.
November spike in volume at the open.
Dude, I wish this thing would just stay there. All right, the Qs. QQQ. Or no, that's Baba. I'm sorry, that's Alibaba. My mistake. That's my mistake. JP Morgan blasting off, trying to blast off again.
Shopify 6663 now. Continue to spike here. Sandy Hotel Oscar Papa.
JUMN.
Shopify shares now up 23%.
Shit, what the hell's the ticker? No, Lumina. That's what it is. LUMN. LUMN. That's what it was. I'm sorry. Okay, here we go, guys. All right, Lumina. It is pulling into $7. I think $7 breaks, and I think we see this thing get down to $5. That $8 level was it. Okay, Rivian pulling back. Nvidia pulling back. Dude, this thing's pissing me off, bro. I'm so tired of these fucking charts. I really am. I know I say it day after day, and I'm sorry, but I am. Like, just give me a damn break here. Okay, so look for Nvidia to get down to 103, 102.50. 102.50. Let's go. There's trades to be taken. There's money to be made. Let's go. Let's go. Come on, guys. Take profits in front of that 100-day moving average on Nvidia. LUMN. Dude. Oh my God. This thing is just wanting to with me, isn't it? Dude. LUMN. What do they want for these puts? 15, 20 cents. I love how they just went up. Somebody just got filled at like 20 cents. That's a shame. All right, so I am 12.16. Nice, 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 nice. I'm going to try to limit order here. 12, 13, 16.
Excuse me, guided from the third quarter to quote sequential moderation relative to the second quarter, and stable.
Oh shit! I wonder, did I get filled? I got filled. I think I got filled, guys. Yeah, I got filled there. I got filled. I know I went a little early on that, so I took a few contracts on LUMN to the downside. Okay, I might be a little early on this. All right, so I am in some trades right now. All right, cool, cool, great, grand, wonderful. Not sure what that was about. Yeah, they got me. I paid too much. Should have waited for 750, but what are you gonna do?
INDO, Indonesia Energy, getting a pop here, $3.47.
Yeah. If we have a picture, you can see why I would think that. I think he's more of the Sean Connery, Bond. Maybe the Roger, Roger Bond. I don't know. Roger Moore. Yeah, there's Roger Moore Bond. We can put the two together. By the way, you know what? The Assistant Attorney General for Antitrust. Yeah. Looks a lot like the previous Assistant Attorney General for Antitrust.
It's interesting this morning in watching Making Del Rahim, of course, who ran the Antitrust Division of the Department of Justice, which undertook the litigation against Google, as we pointed out.
Yes.
On Thursday was won. I don't know who the next antitrust head is going to be, but I do know this.
Let's go. Let's go. Let's go. Let's go. Come on, baby. She's holding up. She's holding up okay.
Canner's good. I don't think, some people were saying to me, Jim, are you saying Canner's bad? Canner argued the Google case very, very well. And that was not his case. He did not.
No, Cantor good. Okay. Novo, not so good. Novo Nordisk, sales up 24%. Let's talk a little GLP-1, shall we?
Okay, so Novo does not have as good a...
Flush it. Let's go. Flush it, baby. Flush it. Let's go.
These guys are very much in a dogfight, and the prices are coming down. Well, no kidding.
Are the prices coming down?
The prices are coming down.
The dogfight you're referring to is between Lilly and Novo. They are by far the leaders. We have plenty of other potential entrants.
And so is
they look for an oral a pill instead of having to get a shot.
Right, Amgen talked about that. The Amgen, I was surprised to see how not far they are. That was a little discouraging for me.
Yeah.
But I would say, David, that when you own these great growth stocks, like Eli Lilly, when Ken Lane, the great Ken Lane told me that, look, they could be $1 trillion company. They
Shoo. God damn.
You have to ride the roller coaster if you want to do this.
Should point out that shares perhaps on this.
God damn. Look at that volume, guys. Be careful. Don't worry. Be happy. Look at that sell. 10 mil. Woo-wee. Goddamn. Goddamn, son. Don't worry. Be happy. Don't worry. Be happy. I gotta play some music. I gotta play some music for us. I could have got these a little bit cheaper. It's all good that I did not. It's holding up pretty good. It's holding up pretty good, but it's also not moving higher, which could start to come. But I want to see this thing back down to $6. would like it to get back down to $6. I wonder who's holding this up. I am very curious to know who in their right mind is trying to hold this thing up here. That was a mean wick. Look at that, 34 there, guys. Damn. It's trying to curl up. I wish I would have got that pop, but I wasn't able to get it. I was not able to get that pop up there. And I could have got these a lot cheaper, but, you know, that's trading. You know, it is, you're not going to be perfect. You can try to be perfect, but I still have faith in this. I do. I still have faith that we can pull back and test yesterday's close. Unless there's something that I'm missing. If somebody out there knows anything about LUMN, like, yes, we can test 750. We got that pop right into $8. 740.
Position to take. It's not unlike Elon Musk being in a feud with all the advertisers. Yes, I'm suing all my advertisers for not advertising.
And you're reclaiming VWAP to the upside here.
She joined in that little fracas that is. You know, having sold and taught selling in my life, I never wanted to sue any of my customers.
Hold up. Hold up.
He's starting to feel like Biff.
Yo, I was gonna say they're like undercutting some of my stuff here. Who has one? Somebody selling one share for? Yo, they're undercutting my stuff here, bro. Yo, I had a limit order at 23. Look at them all undercutting my stuff here. That's hilarious. That's so funny. That's hilarious. Yo, this VWAP is catching up, man. This VWAP is catching up here on LUMN. Rocket? Maybe. I don't think so. I don't think so. Yeah, sure. Do you go to $8? Sure. Sure. Do you run up test $8, maybe even $9? Sure, why not? Watch right here. Here's where you need to pay. There, you did not have massive, at least from what they're showing. That level right there at 745. 744. I'm holding this. I'm going to hold this even if it goes, you know what I mean? I still have faith that you do have a lot of buying pressure here. This thing might start to rip. But again, be careful. Take your money. If anybody thinks that this thing's going higher, can I ask why? Like, what makes you guys think that? And what makes you guys think that they wouldn't do an offering? Like, why should it be here? I'm just wondering. Just wondering why. I'm not saying that it can't. Like, so don't get it twisted that, like, you know, I'm saying that it doesn't deserve to be up here. It shouldn't be up there. I just, the reason for my trade is I'm looking for a pullback. And I want to capitalize on a pullback. All right. They got a big deal with Microsoft. Yeah, but they're still losing a lot of money here. Do you know that a lot of their earnings from yesterday was there was some implications with taxes or something like that, is why they reported what they reported, even though it was still a loss. How much was the deal worth? Do you know? Let me see here. They got a big deal with Microsoft. I'm going to have to start upping my orders. Company better than expected Q2 revenue, which is a joke. Upgrade to a neutral. I wonder how much it was for. Again, I'm not saying that it's a bad company or anything, but I think if for anybody that's going to go long, it's going to be, I think you're going to have to see this level break and hold and really have buyers to step in here from like $8 to $7.50. And even then, I feel like anybody that's going to buy this, it's going to be hard for, I don't think you're going to have like a lot of people encouraged to buy this in front of 8. Now, would they buy pullbacks into 5? Hell yeah. Pullbacks into $6? Heck yeah. I think you could see that's really where your buyers could step in at. Now that looks like a gap up, a double top. You gap up, double top. All right, it looks like a gap up, double top up there. All right, but again, you got to pay attention to the volume because you had a nice breakout volume right there. Come on, give me these. All these people are stepping in front of my orders. That's so funny. They're stepping in front of my orders. That's so funny. So funny to watch. Oh shit! What am I? Why do I have that up? And see, it's lower sell side volume. Yeah, I'm gonna hold this for a couple days or so because you still have to be careful. That's 2 tries there that you tried to hold VWAP. 5 billion. That's 2 tries. You just tried to hold VWAP. God damn it! I knew I had to lift my orders. God dang it! Fuck. You got some buyers down here. I knew it. I knew it. I knew it. Look, they're still stepping in front of me. God damn it! They're trying to hold it. They're not trying to let anybody get paid. Watch this thing sit sideways all day. They don't want nobody getting paid, long or short. That's funny. That's hilarious. That was a mean reversal there. Here, let's go here. I'm gonna keep Lumina up on the top left. I'm gonna stay in this trade for a little bit. Maybe I'll exit it out at like 750. We'll let the price action. We'll see what happens here. I have right now. You can see they keep like there's either orders that are already sitting there that they just aren't showing on Thinkorswim. Because I'm not looking on mine because I'm using my phone right now. And you can see it just like they just show up. Either like I find it hard to believe that you have all these different exchanges and all these different orders that they just randomly all move together at the same time. False. They're just not showing. So if you do grab it, like let's just say you grab options, right? You see how you have 14 here? Just know that there's orders at 15, 16, 17, 18, 20. There's orders all throughout the area. And then they'll jump, the market maker will jump these orders in accordance to what they want to do. All right, Tesla, Nvidia. Nvidia's bouncing. Why do I have Lumina down here? QQQ. Again, we still have a couple days, so I'm gonna let LUMN Dude, look at the Qs, guys. The Qs are soaring right now. Soaring right back to 450. Watch 450 up here. Watch 450. 450 is your level. If you think you're going to hit the 100-day and get through 450, then I would look for the SPY for a long, because the SPY has a lot of room from 430 to like 4. That's crazy. The SPY has room to like 435, 438. Are you serious? So chances are the Qs may buckle up here. I don't know. I'm not saying they're going to. But if Nvidia continues and some of these other names continue. Shit, I'm sorry.
Making intraday high now, $14.33. Romeo India Victor November.
Tesla. So there you go. Did anybody get that Tesla? It hasn't even moved. I was just wondering if anybody took a short on Tesla on a bounce back to the 200-day. And here, it's kind of just chilling. Let's see here. What's going on? Let's go look at the overall markets here. Look at AMD, guys. I told you guys 3 areas. I gave you guys 3 areas. I circled them. Not here, not here, or not here, not here, not here. Here, here, and here. Those are the only areas. So semiconductors, you're seeing a little bit of strength in semis right now. Let's go, Lumen. Okay, now's the time. Let's go. Pack it on them. Let's go look at Lumen real quick. LUMN. That's it. Trade line VWAP cross. Let's break this thing down. Now's the time. Now's the time. Let's go. What do you? It recanes it again. They're gonna pin this thing sideways. I feel like that's what they're gonna do. They're not. They don't want nobody getting paid here. Alright, sorry, I had to use the restroom. Here you go, you got trade line here. You still have yet to hold VWAP so far.
Shares of Disney now also closed at $86.97.
USO $74. Damn, look at that rip in USO. Okay, wow, that's crazy. It's actually getting really close to where I got in at, and it's in a way below it. So if we get another pop here with oil, I don't like that they're doing that. I don't like that they're doing that. There's a lot of buyers there. A lot of buyers right there. I'm not sure if that's people scalping the pullbacks or what. A lot of buyers there. A lot. You're talking 5, 6, 8,000 orders coming in there. Trying to hold this thing up.
Matching your job description. Visit Indeed.com/hire.
Just give me 1 second here. Here we go. Let's go. Crank it down. That was it right there. But you got a lot of buying. Look at all that buying that's stepping in. It's just funny. It's really funny to see that happen. So funny to see them stepping in and buying there when really there's... Like, this is where all that buying should come in at 593. Like, if you're looking to hold a floor, like make a floor in this thing, that's where it would be. Alright. Let's go to... Alright, Nvidia's pulling back now. Okay, there we go. Now we're getting our pullbacks. Okay, so look, right at the circle, I said, we're looking for pullbacks here, here, or here. Wait for it to get there, see what it does. Alright, SPY. I don't know what the Qs are doing. That's an enormous amount of volume. That's a double bottom right there on LUMN. Or, yeah, LUMN. Okay, SPY, what are you going to do? QQQ. Trying to pull back here. Come on, man. It's you. Like it's blue, blinking, and it's backspace. Like and I go to type all the stuff in, and it doesn't want to do anything. It's crazy. It's crazy. Okay, so what's up? How's everybody doing today? What's everybody watching? Talk to me, people. Talk to me. Talk to me. Talk me off a cliff. I just made that up. All right, Meta. Meta. Yo, Mark Zuckerberg literally just said for y'all to hit that like button. Swear to God. Swear to God. Who got chickened out? Who got chickened out on that short? I want to know. Did anybody take a long? Did anybody get short? Did anybody take any trades? I know Tyreek is long. Listen, the long is looking good. That you're making a floor here for this name. I just I might be a little early, and that's okay. Dude, what is going on? Alright, let's look here. Let's see. Alright, Meta. Report planned launch of options on VIX futures. Huh? I don't understand.
PRFX pay reform announcing a safety profile for PRF 110 indicating potential for use in new surgical applications requiring higher doses. That's Pop Romeo Foxtrot X-ray. PRFX.
That's simply not good enough. At Creative Planning, our private wealth managers learn about you first. Don't settle for a standard portfolio. Book your free
MSS, Milestone Scientific, and now strategic partnership with Axial Biologics to distribute CompuFlow in New Jersey, Texas, and Florida. That's Michael Lima Sandy.
News and trends and want to figure out what to do next.
Become a CNBC Pro. Go to CNBC.com/GetPro now. One night, 2 documentaries. At 9, To Be Destroyed. The story of one community's fight against bookbanning. Followed by It's Okay, a short film of recent differences in small-town America. Sunday at 9.
All right. So let's see. Here it goes. If you want to be long LUMN, now would be the time to start thinking about entries. All right. This is where your entry. This is where it should start to possibly take off. All right. This is where it should start to take off. Look, and obviously a first hold of VWAP. You're going to hold VWAP for the first time. Let's find out. Is it going to hold? Is it going to hold VWAP? I knew something was wrong. I knew my charts were messed up. It was like way too small and shit. I knew something was going on here.
Disney, that $1.5 billion stake getting the wires in Epic Games.
Okay, so our resistance $6.
That is Delta India Sandy.
Disney shares are under pressure despite beating earnings estimates.
We have a gap fill. So that's our gap fill is 652, which was our low a day. Literally pinged right off of it. You guys can. If it doesn't hold VWAP again here, yo, they're really piling on the sell side, guys. Yeah, that's. Be careful. Be careful. They really piled on it right there. Again, I think anybody that wants to be long, I think they want to be long at $6. It's just my opinion. That's all. That volume is very low on the sell side. And there's your reversal. There's the reversal.
Yeah, Hilton cut its guidance. I looked to last week. Marriott, the world's largest hotel operator, did the same. This is the first time, David, we have seen CEOs from several travel companies saying we've seen weakness in the consumer. They're cutting their guidance, and they're really tying this back to the macroeconomic environment, specifically the slowdown in the jobs market.
Yeah, adding perhaps fears about as you say, the consumer. We'll get to Disney earnings as well a bit later in the program. Also, parks attendance perhaps a concerning sign. That does get us to the overall market here. Stocks are staging a rebound. You can see it higher for a second day after, of course, that big sell-off on Monday. All three indices, though.
Is anybody along the overall markets?
Like Santoli, of course, here at the desk as well throughout the show. What are your thoughts?
Watch this 532.50 level. Meta trying to climb again. I can't believe how much the Qs rallied. Come on. Alright, let's see here. So, Nvidia, guys, pullbacks. Can we get a pullback down into like 105 and hold for a long? If this market's going to continue higher? It's kind of it's kind of what I'm wondering. I'm still going to be patient here. Okay, let's see. Okay, actually I would use that level at 102. Yeah, 102.
Nice rally. We're coming off the lows. About 20% of the S&Ps off 10% in a one-month base. So in other words, you've reset valuations and positioning and sentiment on some level. So I think that's where we are. But you're still going to need further confirmation that we can believe in the soft landing process. Earnings are coming through.
Damn, somebody's just sitting there at 34 cents. That's crazy.
Whether 2025 numbers are looking too high, and that's all about the macro and the consumer, as we've been talking about.
The Bank of Japan comments. I'm curious, Mike, what's your read on what that tells us about the Fed? That the fact that officials overnight are saying they will pause rate hikes until market.
Damn, they sucked y'all into the long, huh? It looked, yo, that looked like a hell of a long setup, guys. hell of a long setup.
Between what
Mm.
the Bank of Japan was going to be doing and hiking, and the Feds are going to be cutting. What's that going to mean for the velocity of these moves in the currency markets? I still think that the actual, what we would call this sort of carry trade borrowing.
I still have just limit orders sitting out there. I still have limit orders sitting out. I'm holding strong, guys. Just holding strong. There we go. That's what I want to see. That size picking up on at lows.
And I think we saw that initial flush. And I think it is reassuring, though, that the Bank of Japan is going to be
You have the 15-minute trade line coming in.
trying to do in terms of normalizing policy after so long of being out
We've
of
also had a reversal. I mean, we've had a significant move up in rates in the last 2 days. I'm not sure what to make of that, particularly given what seems to be a weakening consumer based on everything SEMA just shared and what we're seeing certainly from the travel-related names and the like.
To me, it's all about we overshot.
Damn, that's wild. That's insane.
And so yields plunge.
$6 now. So yesterday you could have got these things, I don't know, $1.20 when we were looking at them. It's crazy. So we were long JP Morgan yesterday. So top idea of the day. What's Palantir doing? Is Palantir still afloat? Still cannot get above that level, guys. Look for Palantir to see if it starts to pull back again. But this is why yesterday on Palantir, why that was such a big deal to get that short right off the bell. Because look, it went from 27.50 right down into 25 just like that. And that's why it was important to take that trade yesterday. You know, I don't know how much you'll get out of it now. The volatility is going to slow down a little bit. LUMN. Let's go, baby. Let's go. Let's do what it does, baby. That's a crazy wick. Oh, shit. I should have went with the 5. Why didn't I go with the 550s? Oh, that's why. That's a good thing that I did go with that. Okay. I'm glad I went with the 500s, or the $5. Never mind. I take that back. Some nice volume on that wick. There you go. Sellers stepping up. Down it's a little bit mixed. It's actually mixed. Lean to the buyers there. There you go. Let's go, sellers. Step it down. And then the buyers just step right up. They are not scared. They must have faith. Or whoever was short. There's probably a lot of shares that were shorted. You know, a little bit involved in this thing. But again, so I have a position to the downside here on the LUMN. Got some puts. Come on. I have a limit order out for those. Let's see what happens. I'm just going to hang on and stick to my plan. I'm going to stick to my plan. He said, I don't know what he said, but it was kind of funny. Yeah, I want 5. I want 5. I want 5. I want it. I want 5. I want at least yesterday's high. I want $5. I may move my order up. I don't know what to do. Maybe here's what I might do, guys. I might take half. I might raise half of my order. I'm not sure though.
So much time. What banks have a lot of uninsured deposits? Where's the run going to come next? What you really had to know was, is this going to impact the real economy?
Like, I'm trying to think of what I want to do here.
Or cause the Fed to change policy on a dime. And if the conclusion is no, then it's like, okay, let's see what we're willing to pay for next quarter's earnings.
But this idea of borrowing yen to buy big tech stocks, I point out both Apple and Microsoft are the biggest winners
Shopify, no highs now, 67.71, up 24.5%. Sandy Hotel, Oscar Papa, SHOP.
Stocks now at a 30% discount to their 5-year average.
Right. So again, we're going back to fundamentals again. What bothers me is the end carry trade clouded
All right.
the whole issue.
UPST, Upstart, more highs now, falling here.
Oh, I forgot about Upstart.
Uniform Papa.
I forgot about Upstart.
My point is,
Forgot about it. Shit.
this in October 2022, we convinced ourselves that there was an imminent recession. And remember, Mike, what happened to the multiple? It went down.
I'm noticing that, what time is it? It's 10 o'clock. Okay. What should I do here? What should I do? What do I do? What should I do? What should I do? What should I do? All right, AMD. You're still, I'm not going to say you're struggling, because you're just consolidating.
Extreme calm in these markets. We went almost a record length of time without a 2% drop. And so you're just kind of seeing, I think, the recoil from those trades that were set up based on nothing's going to happen. Yeah. By the way,
Hold on, Abby. All right. Again, they do not want to. They do not want to pay. They don't want to pay.
Not break dancing, breaking, and they are called breakers. Set to hit the dance floor beginning Friday and into Saturday. The sport makes its Olympic.
So there's Monday, Tuesday, Wednesday. So we're up there testing Mondays. Got a little double top up there on AMD. I'm just gonna go over here real quick. We'll Tesla's bouncing. It feels like things are setting up to where we might have like a nice, you know how like we have some of those random moves at like 1 o'clock, like random 12:30, 11, you know what I mean? And then it just like kind of like pulls back. Along with, okay, so this morning, so I'm thinking about that, and I'm also thinking about consolidation today would really allow us to take advantage of volatility getting crushed again, and looking for a trade going into Thursday. Again, I'm going to do it. I'm not telling you guys to do it. Look, my orders aren't showing up. See what I tell you? See what I'm saying? They're not showing everything. They're not showing everything here. See how that random 16.1 popped? One contract for 16 cents just popped up. I have orders above and below 35 and 16 and 29. Hold on, let's go see here. What's going on? This thing's really popping. Something's really going on here now. At least it looks like you got some order. Like, that's crazy. See, there's still they're not showing all the orders. They're still not showing my orders. That's so funny. That's so funny. Wow, that's so funny. And then they just They just all moved to 17. Yeah, okay. All right, it's 10. If I could just get my cat to not mess with me from 9:30, 9:15 to 11, that'd be great. Just an hour and a half. Give me 1 second, guys. I'll be right back. All right, I'm back. They're still not showing my orders. That's so funny. How about that? Are they trying to get me to raise it? Are they trying to get me to raise my orders? Come on, baby. Let's go. Fill them and kill them. Fill them and kill them. Let's go. Let's go. Fill them. Fill them. Let's go. Come on. Come on. Oh, you freaking turds, bro. They're such jerks. They really just stepped, all of them just stepped in under me. Look at all of them. 160, 80, 45, 27. Wow, now they're all moving. And they're still not showing mine. Look, this person just stepped up to 40 cents. It's so funny. It's worth a shot, right? God damn. Bro, I swear, if I do not get filled first at 21 cents, if we can get there, I'm going to be pissed. I'm going to be pissed. Because I've been sitting there all morning. Now, I should be like one of the first ones there. I should be. Check out Shopify. You might have a reversal getting ready to come in on Shopify. Look at that ascending wedge. That's an ascending wedge, guys. Look at that reversal on Shopify. Telling you guys right now. Telling you right now. Watch for that. Watch for a reversal back into pre-market lows at $64 on Shopify. That is a pattern. If I've ever seen one. You want to take it at, obviously, the highs. Come on, bro. Look at them filling all these orders. I'm still not filled, by the way. I'm still not filled. Come on, move your orders up. Let's go. LUMN. Just move your orders up. God damn, you fucking bastards. Come on, let's go. Come on. I'm like a penny away from getting filled. Come on, let's go. Bust it down. Bust it down. Bust it down. Come on. They're fucking assholes, bro. They're straight up assholes. They're not moving. What assholes? That's crazy. Come on, man. Let's go. Come on. Let's go. Sink this thing. Come on. Bro, there's so many orders in front of me. Oh my god, they're not going to fill me. Oh my god, you got to be fucking kidding me, bro. You got to be kidding me. 1 penny. 1 penny? Are you serious? Are you serious? I have been sitting here waiting. Patiently waiting. I feel like they're going to drop all these orders. Come on, bro. Let's go. Look, you're seeing... So there you go. 21. You fucking dickheads. They're such dickheads. They're seriously gonna fuck me. And they're gonna screw me. Hold! I'm gonna get ruined. I'm gonna get ruined. You gotta be fucking kidding me, bro. You gotta be kidding me. Come on! I have been sitting here at 21 cents. You gotta be kidding me, bro. They did not move it. That's such shit. That's such shit. Come on.
That is a pretty big drop. No, it is a big drop. And on the last quarter, we that the September quarter will be up double digits. So, yeah, that is a big.
I cannot believe this. They're gonna fucking dog me. They're gonna dog me. Look at that. They're gonna dog me on this, bro. They're gonna dog me on this shit. I have been sitting here minding my own goddamn business. Alright? I've been sitting here minding my own business. Just sitting here, give me my 21 cents. And they want to stack orders right in front of me at 20 cents? At 20 cents? Come on now. What type of dickhead shit is that, bro? That's crazy. Hit the like button. This is trading. This is trading. Come on. I don't know, man. I might just go ahead and lower my order. I don't know what to do. I don't know what to do. They're fucking dirtbags, bro.
So it is an expensive vacation to take a family of 4 to Disney World or Disneyland.
Alan, sort of the anchor of the bull case, at least one of the main ones, was this expectation
Fucking dirtbags.
returning back toward pre-pandemic.
Fucking dirtbags. Look at them all moving up now. Look, 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 look. 21. Come on, man. This thing's going down. Come on, fucking fill me. These fucking dirtbags. These dirtbags ain't gonna do it. You fucking dirtbags.
Coming up at 10:30.
Come on. Come on.
7 minutes. Crude inventories a draw of 1.6
Look, they're gonna flush it. Here it goes. They're gonna really pack it on and sell it. Oh my god. Here we go.
Thank you, David.
All right, guys.
PLTR Palantir popping to the high now. Papa Lima Tango Romeo. Shares are up 5% now on Palantir.
That's right. Sales of Nova's obesity drug Wegovy coming up short of estimates for the quarter. Now, executives are
Palantir
downplaying
earlier
this as a one-time event from paying
announced
higher
a
rebates for the drug. Nova was saying that as
collaboration with
volume goes up,
Wendy's.
I love that this person's sitting there at 39. They were, look, 25. They're gonna, yeah, they're just gonna set these now. It looks like 25, 26. All right, guys, I'm out of that trade. Nice job, guys. Nice job. Nice job. That was a nice trade. That's a nice trade right there. That's a day's worth of work right there. And I still think this thing goes lower. Look at them packing it on at 41, 42 cents, guys. Look at them packing them on down here at these orders. They're asking 40-some cents just to widen that spread and get somebody caught. That's so funny. Look at them. You get past 2022, you might start jumping to 28 cents, 32 cents. Watch, I guarantee it. You're going to see like 27, like 26, 28 cents. Watch. You get this person at, that's why that person there is at 25. Watch. If you clear out all these 21s and 20s, I just said, hell, what's a penny? Yeah, I mean, really, I mean, let's not get into the percentages, but we can, if you want to be real. Somebody's just sitting there patiently at 31 cents. That's so funny. You know what they're thinking? 31 and 40s. These 43s and 41s and 30s are thinking. They're saying to themselves, I'm going to wait till all these people get cleared out. This thing's gone back down to $5. I'm going to put my feet up. I'm going to let it do what it needs to do. They're going to clear out all these orders. And then we're going to have a massive jump in the volumes. And a massive jump inside the option price. And look at all these people. Look at this, 41, 43. Now you're seeing the 35s, the 31s, the 40s. Right? Watch. If you get a pullback again, you start breaking this level. You get all those 21s and 20 cents out of the way. Bang, 28, 31. You're going to have people step in front of them, but they're going to be patient. They're going to be patient because they know this thing's going to go back and technically probably be in the money. Beautiful job, ladies and gentlemen. I'm out. I just got filled. We just got filled just a minute ago. Beautifully done. Beautifully done. I would, for anybody that's still looking at them, you know, it's better to be in up here. But, you know, that was an easy 13 cents to 21 cents. You know, you could have got 10. You could have got, depending on what you could have gotten, you know, it's a nice trade there. That was a really nice trade. I still think there's a lot. I think there's still more on the table. And if you get a pop here, you could get Lumen to do an offering. I don't know, 80, 75, 70%. 75, 70%. Want to know how much I made? 2150, 2155. Does that make you guys feel better? All right, let's see here. So they're still packing. Anybody that got in here on the downside that paid 18, 19, 22 cents, you can see they're trying to scalp. Look at these orders for 5, 2, 1, 57. Let's see here. Yo, the whole time you didn't see any of my orders on the screen. I mean, there may have been some, like, part of my orders here, but, like, at least on Thinkorswim, my orders weren't, majority of my orders were not even being shown. Like, you were seeing, like, the person at 35, a person at 25, and then, like, 20 and 22. Like, they were hiding my order. You never saw my orders at 21. You never saw the 23s that I had. Like, they didn't show any of them. And I'm like, what the fuck is going on? Like, so this is why I mentioned to someone else that you have to be careful with Thinkorswim's time and sales, and even their level 2, or their level 2 and even their time and sales, is because they may not be showing you everything that's getting filled. Like, you'll get the picture. You'll get the picture, but you could be missing some things, you know, but you'll get a basis of kind of what's going on. Yeah, it was. I mean, yesterday, here's the thing. I could have still taken JP Morgan yesterday. My deal with that is like, I just let it go because I never quite got the pullback. I mean, I guess I did get that pullback at 195, but that one there, I was like, look, if I take this, here's the thing. If I take this, and I didn't, because I was watching Palantir in the morning. I was watching Palantir. I was watching Bob. So I was watching a few things. And if I take that position right there, and then this thing pulls back to 195 and I'm red, what does that do? Because I'm already telling myself, okay, that's cool. It's at VWAP, no big deal. But you shouldn't make a new high and then immediately take it back. So that would have been a sign that I would have been a little worried about. But more so, the psychological, like, trail that you can go on, at least myself, with not doing what you said you were going to do as far as your plan. So if I wasn't getting long JP Morgan at 194 or 195, I had to let it go. Because if I were to have gotten long at 196, 197, and then it pulled back to 195, and now I'm red, when I already had the opportunity to go in at 194, 195. So it can set you up for failure, because you're, at least for me, I would have been like, okay, why did you do that? Why are you doing, like, you know what I'm saying? You just start to go down this path where you're bringing emotion into it. LUMN today, I saw it, I took it, I paid a little more than I, you never know, but, I paid 30% more than I should have. I could have gotten that thing for, 10 cents, if not 9 cents, but it's all good. No big deal. I got some money on the table. Anyway, let's keep it moving. Let's go see what we have here. By the way, NASDAQ and the S&P also off of the highs. All right, let's get a CNBC news update. Solana now has And this could be a nice rejection too. This thing may be back down to $5 in the next few days. See, and it's still up 28% after being up 100%. So a 20% pullback. Man, this thing might give us another opportunity. Okay, for anybody that wants to watch this and take advantage of weakness, 650. Okay, or that double bottom here at like $687. You look for like VWAP. And there is no moving averages. Yeah, you would look for VWAP for a second opportunity. If you think that this thing's going to go back to $5, you can short it. You can short it and buy puts. You can do all kinds of things. You can go out, you can give yourself time. Whatever you think. So let's go look at Nvidia. I was actually really happy. I kind of got nervous there that they were going to do something. Like, I didn't think I was going to be able to get out. I was going to sit through that whole ride on LUMN and them like really like dick me on a fill. I did start to get a little worried there. Let's watch Shopify. This could be a reversal coming in here. Let's go take a look. I may hop on this one too. Oh yeah. And what did we say? Right there, up there at $68. 68. Might struggle up there at $68. Yep.
Let's work on that French, shall we?
All right, let's. Now I don't want to get just because that other one worked. I still, I think I might take this trade. I might let it show me that I'm correct before I take it, and I may wait for the bounce back. If this thing can fall out of the wedge, really, that's not how you should play this. The way to trade like a pattern like this is to short up here at highs, because you're going to know very quickly if you're wrong, and if you do get like a pullback, you're able to take some profit off. You're able to de-risk a little bit, and that's where you should be taking profit. So, an example. So right here, right? You would be taking it there, up close to that uptrend, or it's not a downtrend, but you guys don't. The uptrend, the upper part of the pattern. You want to take it up there because your risk is more defined. Because we could bounce back one more time back to 68. and still be okay, right? And then you take it obviously on a pullback. Let's say if you buy puts or you short, then you're going to be red, right? And then it, for whatever reason, it blasts through 68. Now you have a bigger loss. So how do you minimize your losses? Like, that's how you want to think about when you enter and exit positions, right? You want to be able to get that pop up into there and say, okay, you know, I'm short or buying puts in front of 68, like 67.90, 67.80, and I'm gonna give it, you know, the room that it needs. And if it breaks above, okay, cool. You know, you're risking 20 cents, call it 50 cents, to make probably, you know, $2-3. It's at 67. You should be able to get this thing back down to 64, right? So it's all about the risk to reward.
It's gone down enough that it's only 4 times earnings now. Versus it was at about 6 times expected 26 earnings. Now it's at about 5 times. And people say, well, when will investors ever get interested in these stocks? But the companies are taking matters into their own hands and aggressively.
It's so crazy, like. And I need, you know, I don't, you know, how do I say this? It's so funny seeing how, like, some of the market makers, like, don't want to fill you, or, like, the game is being played when you're making, you know, when you make money, like, on limit. I'm just specifically talking about limit orders on options. And how you're like, yo, like, you see them going right to where you are, and you're like, bro, come on. And then you move down a penny to where they're at, and then they want to wait and fill you the very last, you know. So it comes down to your broker, I guess, and I don't know. You know, see, in my opinion, how I think it should work is, like, if you've been sitting at like 21 cents all morning, like, you should be one of the first ones to get filled at that price when it gets there. You know, on market orders, whatever. Like, you should be next up in line. Boop, you've been picked up, you're good to go. But that's not how it works. I'm telling you, that's not how it works. The boys in the office, the institutions, they go first, and then maybe they think about taking you. Maybe they think about you. Like, maybe they think about it. Maybe. I'm just playing. I'm just kidding, but that's definitely how it feels.
We saw the same thing happen in Europe about a year ago. Investors are presented with an array of choices of what search engine they want to take. And we've seen no decline in Google's market share. So we think investors are overreacting, and we don't think it would be a big deal if they couldn't be the default search.
Bill, let's also get to Charles Schwab.
There you go. So here's your bounce back. Let's see if you reject that uptrend. Watch that uptrend right there. In my opinion, it feels like this thing could go higher. So Shopify, I'm going to look for puts on Shopify. I'm already too late, guys. I can tell you guys right now, I'm already too late. What do they want? 55, 60 bucks. I'm just going to grab a couple of these. It's got some nice volume. Really, you should be looking at the 66s, actually. And the spreads are actually decent here. Hold on. 66. I'm only grabbing a couple. I'm doing this very small, guys. I would not recommend it. All right, I would not recommend it.
We think that's probably overblown, but if we're wrong, we think Schwab could start charging fees, or could kind of revert.
Let's see here. What time is it? 10:41. SPY. SPY's pulling back. Damn, they're already back at 80 some cents. Shit. I want to take a pop. Like, see, when I take a position, I want it to be like a pop. Like, I want to take the pop. Like, as soon as it goes up into, like, something's telling me to take it. Look how volatile. See how quick it's moving now? Watch level 2. Why is the chart moving around? Why is the chart moving around like that? Bro. Come on. God damn it.
And I guess the thing that's different about Oakmark is we're trying to make an estimate of where these companies will be 5 to 7 years.
Okay, so there's a pop. Let's see if it's on volume. Just give it the time that it needs. Again, I don't recommend this because you're going to lose money on a stock that's bullish. But especially if the market starts to bounce and you get the market behind you. Bro, I just can't see this thing, man. It sucks. Alright, so we're above the 100-day. Here it goes. Let's see if it goes higher here. You're going to find out very soon what's going on with this because it's going to go higher. With the trade, it's going to start to follow the trade line higher up to $70, or you're going to reject up here. In my opinion, I think this thing could go either way. I do. $72.83. Look how wide those spreads are. I'm gonna have to try to limit order in then. 70. No, I'm not gonna be able to get it. I'm gonna try a 73. Nope, it's already past it. I knew it. I knew it. Hold on. Let's see here. Damn, now it's 71? Can I get 71? Alright, I put it in, 71. I put it in for 71, guys. I put it in for 71. We'll see here. Hold on. They probably won't fill me on this. If they do, that means it's going to rip higher. Yup, that volume's coming in. I might end up canceling this order. Let me edit it. Let's see here. Let's see. 70. This thing may just go higher, guys. There goes the market. How do I cancel this fucking orders? Cancel order, yes. Okay, I canceled that. I canceled that order. I think. No, I got filled. I knew it. I knew it. And he didn't fucking say anything. I got filled. Hold on, guys. I got filled. I got filled. So let's do a 70. I knew it. I knew they would do that. I knew it. I knew it. I didn't even get a thing saying that I was filled, probably because I was in the box trying to fool with it. Oh, no. No, 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 no. Yeah, I just put... Oh, my God. Look, everybody did it. 79 cents. I put a limit order out for 79 cents to get under that 80. And then, look, everybody dropped their orders there. I like this. I might actually stay in this for a second and look for a pullback. But the SPY is ripping right now. Oh, my God. Oh, my God. Oh, my God. I wish I didn't get filled on this. So right now I have I can't see the comments, guys, on the $8. Is it already back to $8? I wish I could pin this. I can't pin it, can I? Look at everybody jumping down to 71, 55 now. Shit. No, 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 no. I need that. Bro, that's bullshit. That's bullshit. LUM. Yeah, like I said, watch $7. You might get some more people to take a short there. I might go into like a 80. Damn it, bro. I'm not going to be able. I'm going to take a loss. I knew it. Let me go to like 81. I might jump this order to like 81. I don't like that they film me. Look how the volume just stopped, guys. Here it goes. Oh my god. Oh my god. I should have just market ordered out when it was at like, here we go. Let's go. Let's pull it back, baby. Let's pull it back. SPY. SPY. Let's go. Alright, I just lifted my order. Damn it. It's probably not the best. That probably wasn't a good idea. Again, we're going to give it some time here. Dude, this, I just don't like the SPY just rocketed. There we go. Let's go. Let's go. And it's just taken right back. God damn you. Hope everybody's having a good day today. Hope everybody is doing well. Let's go. Let's send this thing down. Let's go down, baby. Going down, down, baby. Abby, come on. Fuck. See, this is what I mean. I'm going to try to hold on. I'm going to give this thing a little bit of room. I'm going to try to give it some room. Let's go. Come on, let's pull it back to VWAP. We can do that, right? We can pull it back to VWAP. Yeah. Pull it back to VWAP. Let's pull it back. There we go. There we go. So I have some orders at 82, 81, 85. I have some orders just out and about. You're seeing 94. Let's go. Let's go, guys. Let's go. Let's go. Let's go. Let's go, baby. Let's go. That ascending wedge is working out good. Kind of glad that we did that. Let's go. Let's go. Let's go, baby. All right, so we can do that. We can pull it back. Just get a little pullback. Like, if you want buyers, you're going to want them buyers down at like 64. Right? 64. 65. Something. 66. Give it to me in the money. Something. You can see that the whole time this is going higher, it's on lower and lower volume. Let's go. Pull it back just a bit here. Come on, baby. Pull it back. You know, I'm not saying that this thing has to go down, but, you know, just pull it back. Like, if you want to go higher, you got to go lower. I would hope. Like, look at the 15-minute chart. God damn, you're such an asshole, Shopify. You're such an asshole. Like, come on, man. Like, a freaking pullback to $66? Is it that hard? Like, just pull it back. Pull it back, and let's do something here. Pull it back so that you can go higher.
What unites us is far greater than what divides us. Leadership.
What unites us is far greater than what divides us. Can I ask you a question? Who, what, and when and where is dividing us in the first place? That's my question. This thing's gonna pop like an asshole. Look, those options just got fucked. Oh man. God damn it.
WHO chief said decided to convene emergency committee to advise on whether Mpox outbreak in African countries represents a public health emergency.
There we go. That's what I want to see.
The 1B variant of Mpox has been confirmed.
Let's go. Come on, baby. Come on. They're still not showing my orders. That's so funny. They're not showing my orders.
Shares of SIGA popping on that.
SIGA, guys. SIGA. There's news for that African stuff.
SIGA.
SI.
There's a 4% now.
SIGA. Look at that pop on SIGA, guys.
Still trading, and that's SIGA on that Mpox news.
Let's go, baby. Let's go, shop. Let's go pull it back. Let's fucking go. 97 a dollar. You got a lot, man. These things are ripping, guys. Ripping. Let's go. Got some of that order off. Let's go. Half of that order's off. We're out. We're banged. We got banged right there, guys. I'm out. Just like that. One wick. One wick. Right up to 90 cents from 70 cents. That's a nice trade. That's a nice trade, baby. Let's go. 2 for 2. Let's go. 2 for 2. Let's go. I swear to God, if y'all don't hit that motherfucking like button right goddamn now, got this fucking backhand. No, I'm just playing. Come on, man. I want you guys to get up on this money bag with me. Come on, bro. We might fuck around and make a month's salary today. Come on. Let's go. There's a lot of opportunity out here, guys. Girls. Guys and girls. And even everybody in the middle who doesn't know what they are, but you know, they know that they're in the middle. They want to be both sides of the trade. You want to be accredited. Look, $1 now. Yo, they're jumping these things up to $1, guys. I should have probably stayed. I think we low ticked those options at 70 cents. I think we bottom ticked. I think we like, I don't know what you would want to call it. I think we bottom ticked those options, you guys. I do. Because I think you're getting ready to pull back into VWAP. I do. Damn, that could have been a massive trade. Even though it was. It actually kind of was. I got filled all through the 80s. I should have had... Yeah, I think I had a 92, 91. Can't remember. Can't remember where I put them at.
AAPL moving now. Alpha Echo Michael Delta.
Alright, let's see here. Damn, that was awesome. So this thing pulled back literally 60, like this thing pulled back like 40, like 50, 65 cents. Bro, look, they're already going for over $1.
SIGA SIGA, more highs now, $8.99. Sandy India Golf Alpha, SIGA.
So if you think about that, right? If you would have got these options at 71, we had a limit order, and I told you guys what I was doing. We had an order there at 71 cents. We got filled. I actually tried to take that order away, and they filled me. You get 30 cents on 70. What is 30 on 60? That's 50%. So, I'm just saying, you're seeing the bids are already up to 90. 20 cents, 10 cents. Damn. Look at that. I should have just stayed in it, but guys, I also was kind of thinking about the other side to that trade, which was taking the trade line and ripping right up into $70. And then as soon as we got there, the S&Ps, the SPY, started, just ripping to the upside. So I was like, okay, hold up here. Hold up. Because things could get a little fishy here. Look at that, man. Look at that. Already up $1. Nice job. Great job, guys. So, do you see what I did there? Because I wanted to get out of that Shopify order, I was in a hurry to get out after I got filled. Right? Because they ended up filling me at, I had a limit order at 71 cents. And they may even have filled me at 69 or 70. I don't know. I can look. But I don't think that they're going to fill me anything less than 71. No, 71. I was going to say there's no way they gave it to me less than that. So, there you go. So, just the emotional part. And look at this actually played out very well. Look at this pattern, right? We identified the ascending wedge, which is a reversal pattern. And you can see that this candle is a breakdown. Dude, these things are going to be at $1.50, $2 before you know it. You can see where this breaks down right here and then pops back into it. And that's where the sell-off starts on that bounce back. And that's where we took the position. Or we took it here. I can't remember, but I was like, yeah, it should have been there because I was like, let's wait for the pop back into the highs. And part of me was like, okay, either this pattern's going to play out or the opposite's going to happen and you're going to just get a breakout. But then I turned to the 15-minute chart and I'm like, whoa, 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 whoa. Like, hold up. This is like you're going higher on lower and lower and lower volume. At least give me VWAP. And look what VWAP did for you. Got you to $1.20, $1.15, $1.10. From 70 cents. 71 to be precise. Alright? So, we should be in the money, which we're going to be very close to being in the money. So, you hold this until Friday. If this continues, and you start to get the market behind you, you guys are really in a nice trade. Especially if you could get like 64, because think about this. You paid 70 cents. I would hope you didn't pay anything more than 75 because you could have market ordered and got 75. You still have the rest of today, Thursday, Friday, 66 put, 5 forward. You'd be $2 in the money, $2 in the money with 2 days to go. So you're talking a position that potentially could have, if you get to this level at 64, which is where the buyers are, which technically is where the buyers are, you're looking at a position that's going to be well over 150, 125%, well over that. Well over it. Another, you guys see this? Setup again. I need you guys to frame the mother sucker. Put it up on your wall. Put it in your binder. Do something with it. These are the patterns that are going to consistently make you money. These are the patterns that if you repeat what we just did, you will make money over and over. And look, they're already aiming. Look, look at this. Look at them. They're sitting there for the people that were in it at once that got in at 71 cents. Look, $1.43. They say, give it to me. I want my hundo. I want my hundo percent. Look, they're jumping right to the 140s, 150s. They know it. This thing's going back down to 64 by tomorrow. You're going to at least test pre-market highs. And if you do, even if you test low a day, not low a day, but like that 64.85 area, this is going to be a really that's going to be a nice trade for you guys. Yes, I should have been a little more patient, but again, this is what I go back to. Me trying to get out, then I start being emotional, then I mess up the trade. See, the thing is, I've already made my money on LUMN, and now I go to Shopify, take more risk, and it goes in my favor. I got it, because again, I got lucky that I was in that. I tried to take the order off, and as I'm in the order, trying to take it off, they've already filled me, and I don't see that I'm filled because I'm in the limit order trying to get rid of it. Only to come back and say, and it let me cancel it. It said cancel, okay. Little did I know, no, it's not canceled, and I knew it. I had a feeling that I was in it. So that's a nice job, guys. Nice job. Nothing crazy, nothing to write home about or get crazy over. But that was a nice little trade. And that is the trade, right? That's the point of this trade. Understanding that there's strength. Understanding that this is an ascending wedge. Like, at least give me VWAP and you can make 50%. That little bit right there is going to give you 50%. You know what I'm saying? $1,000, you're making $500 right there, done for the day. You don't do anything else. Because if you do, you take a chance of ruining it if you don't know what you're doing. Then you're just digging yourself a hole, and your job here is to make money. 2 for 2 today. I told you guys I was going to be patient. Told you I was going to be patient this week. I would urge anybody that's out there listening, Shopify's pattern, you need to know it. You need to know this pattern. This is a pattern that's going to give you a repeatable trade over and over and over again. Maybe 1 or 2 times it'll be wrong, but you'll lose so little that every time one trade to correctly will take those 2 or 3 wrong trades away. Because again, you're coming up to resistance. You have an ascending wedge. You're buying you're buying at those highs up there. Right? You buy that candle, you buy that candle, and we bought that candle, if not that one. Okay? We bought right here. That was the area we bought, right in there. No, come on. We bought right up in there. At least a wick up into that area. So, you do that. Anyway, you guys know what I'm getting at. Know it. Know that pattern. You have that pattern forming in front of resistance, then you could have a nice trade. Now watch the bounce back. See if you get a bounce back or a break of VWAP. If this thing falls out of bed, guys, and the overall market starts to fall out of bed, yeah, I'm going to be a little upset. I will be a little upset. But that's it. If I took every single trade idea this week, dude, you had to at least made half of your account, or like 25% of your account. 10% of your account, depending on how much money you have. You know, if you got a couple $1 million, I don't expect you to make 100 grand, but you should be close to it. If you have the, I don't know. Anyway, Nvidia's finding some support here. I still might just keep going. I don't know though. I mean, I'm not gonna not live stream again. I do have to work on the group, and again, I don't want to do a group, but I don't know what else to do because I really want to teach people this. I do. And YouTube, I'm not benefiting at all being on YouTube. It takes time away from all the research and everything that I can be doing. I miss trades because I'm trying to, give out to other people. And, like, listen, if I was like Josh, like Stock Market Live, and I was just talking markets all day, cool. I wouldn't give a shit. But I'm actually doing my job here, so it's a little hard to do that and actually do this for a living. I would love to be able to inform where the markets are, where the opportunities are, and give them out on a daily basis. I got to find a way that is constructive to doing so, is what I'm saying. Nice job on LUMN, Shopify today, both two. I had no idea that I'd be trading these today. I got to be honest with you. I watched Shopify this morning, but I had no idea I was going to be trading these today. Look for bounce back rejections, even though I would not be trading this anymore. 15-minute trade, VWAP. That was the trade. The breakdown. This was a minor breakdown. Then that little bounce back, bang. That was the trade. Okay, so the SPY, QQQ, Tesla. Where's Tesla at here? Is Tesla still holding up pretty well? I'm kind of curious what's in store for Tesla, because in my opinion, I was really surprised that we got back above 200. Yes, the 200-day moving average here is a pretty damn big deal, but 1, 2, 3, 4 times you get up in there and you're not getting through it, like, come on now. All right, let's go check out LUMN. LUMN. Oh my gosh, let me get my cat some food, guys. Guys, I'll be right back. Give me 1 second. I'm gonna go feed Abby real quick because she's not happy with the surf and turf that I gave her. So just give me 1 second here. If you guys have tickers you guys want me to put up, throw them in the chat. A short idea that I did miss, by the way, it just came into my head, mRNA. mRNA is sideways today, but look at this daily chart and look at that weekly candle. Look at that. Boom. Look at that bear flag. Bang. That's a beautiful 20-day, 100-day breakdown from $120 to $80. Guys, do you understand how much money you could have made in options and just shorting the stock itself? So I am wanting to still keep my eye on this. I still feel like Moderna, there's something about Moderna and why it was the only stock I bought for COVID. There's just something about it. But I think now is the time. It might find itself going lower for quite some time. They do have the RSV vaccine stuff, but anyway. So Lumina, Nvidia, Tesla. I'm not sure of any other stocks or names you guys want me to put up here. We have the SPY. I just want to go feed my cat real quick. I'm going to put on Charles Schwab.
UPST, more highs now.
Upstart's going crazy, I guess. Let's go look real quick. UPST. Let's go check it out. See how weird this looks? Like resistance, support, resistance. It breaks below it, but then you come in with a gap up. You come in with a gap up and you pull back into it. And you think that I don't know. If you just play that out, it's like, okay, so you broke it yesterday, but then today you come in with a gap up, pull back and hold it. That don't make no sense on Nvidia. All right, into it. Oh shit, look at this double top right here, guys. Watch this level on into it. This could be another trade idea. Right there at 630. Watch 630. Look for 630 pullbacks. Honestly, in the 620. I know it's only $10, but should be an easy double top up there. Dude, how did Intuit get so expensive? That's what I want to know. I want to know why I'm not in this mother trucker. How did I not own this? I'll be right back. He's just going at the door, scratching at the door and stuff. Oh shit, the Young Thug trial today is supposed to be pretty crazy. Alright guys, give me 1 second.
Ethan! How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. And Kevin Green will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of TheoTrade. Good to see you both. Don, your ship came in. It came in a big way over 3 days. You had the NASDAQ 13% off of its highs. Some of your thoughts?
Yeah, you know, this really is this is my type of a marketplace. Look, I like two-sided trade. I like volatility. It's not necessarily about being bearish. As a trader, I like markets that are moving both up and down, and that's exactly what we're going to see here for a fairly considerable period of time. Look, the VIX, you know, the other day on Monday closes above that 35 handle. That basically constitutes that we're likely to be in a rather volatile period, at least in a minimum 4 to 8 weeks out in time.
All right, so let's talk about the high yield bond ETF, HYG. Some of your thoughts.
Well, one of the first thoughts I had is the volatility kind of kicked in, you know, junk, and that's HYG. So some of these, the junk bond ETF specifically here, really kind of caught me off guard that, well, the yield is only 6.3%. And I have to tell you, if we're going to see a prolonged period of volatility in this marketplace, which is very, very likely, the probabilities are all there for sustained volatility. And I think we're actually going to see yields of junk soar. And that is going to be, if you will, capital moving into treasuries, into areas that are thought of being safe, and out of areas like junk. You're going to see those spreads actually really kind of widen out, and the yield on the HYG jump. In light of that, that would be looking for sell-side activity specifically to HYG. I'm actually going to go out to the October 18th expiration for this particular options trade. I'm going to be buying a 77 put, selling a 73 put. So this is a $4 wide put spread done for about a 53-cent debit. This is all about the fact that volatility is going to be prolonged, sustained, and we should actually see the yields inside of junk jump higher.
So as people are moving into the safer, that flight to quality into U.S. Treasuries and the like, do you expect that the market will have wild swings? I mean, we just hadn't had 2 and 3% moves, right? But now people have a nervousness, or what is it about?
Well, that nervousness is reality at this point. Look, once volatility is unleashed, you've opened up Pandora's box right now, and as I said, you're going to see some two-sided trade. The real question, though, right now is what is going to be construed as, you know, the safety trade. I do believe it's going to be into those bonds, those longer-term bonds, like TLT. You could actually look at TLT on the bullish side of it, but on the short side, HYG and junk. I mean, 6.3% for junk right now, coming into what could possibly be construed as a recession, seems very unlikely for the near future.
All right, Kevin Green, some of your thoughts here, HYG.
Yeah, I mean, it's a really bold call, to say the least here, and the chart actually could back up the notion that we may see a little bit of a pullback here, either a pullback or a breakout to the upside. And on a one-year daily time frame for the HYG, we did see a nice little spike to the upside last year. Obviously, we did see a significant amount of influence when it came to the Fed, but now we're seeing a range between $76 on the low end, 76.5 on the low end, and on the upper end of this channel here, $78. And so this channel has been in place pretty much all year long. And one thing that I just wanted to highlight, the 200-day SMA in the past, when you're looking at point A, was it actually an area of resistance. And now we're seeing it as an area of support. We tested that level around April of this year, and we did also test it yesterday, and we saw buyers stepping into this market. So the bearish side of this chart right now is the MACD moving to the downside. 12 is below the 26 EMA. It's still above the zero line, but this kind of signifies either we have a breakout to the upside or a breakdown. And so that risk reward that Don's talking about is something that kind of translates throughout the charts here.
Wow, you look at that chart, it's very telling. All right, let's move on and talk about Meta platforms. What are your thoughts on this one, Don?
All right, so my call on Meta here is honestly less about Meta specifically. I'm not going to get into the fundamentals much. I'm not really even going to go that much into the technicals. Okay, I'm going to leave that chart alone. Right now, though, it's all about being unscathed. Look around Meta. Look at what was termed the Magnificent Seven. I say termed because they're not so magnificent right now. If you take a look, whether it's Google, you're taking a look at Microsoft, you're taking a look at Apple, you're taking a look at Nvidia, they're taking huge hits. I mean, huge hits. Meta's completely unscathed. And in a marketplace that's seeing higher degrees of correlation, and unequivocally, we are seeing higher degrees of correlation to the S&P 500, I think you just have to anticipate the next round of sell-side activity that is going to have a nice pullback, and that's where I want to be. Look, when volatility hits, to me, it's less about like individual stocks. And I'll make individual stock calls, but it's less about individual stocks. It's more about the overall marketplace. So an unscathed stock, that is holding about 500. All right, when tech is being brutalized, this is not sell-side immune. It's absolutely not. And if the if the AI trade is unwinding, Meta is going to be part of it. This trade, again, October 18th, also going to be a put spread. I'm going to be buying the 465 puts, selling the 455 puts. This trade's done for a $2.80 debit. So phenomenal risk reward if Meta is actually able to come off in the next couple of weeks.
Yeah, understood. So, you can only remain unscathed for so long in a group, in a sell-off that's underway, right? Then it becomes baby out with the bathwater. Some of your thoughts, Kevin Green.
Yeah, I mean, Meta has came a long way over the last year, and so we did see a nice little run up, and in fact, we've actually been able to hold the majority of these gains. But since February, and I have this highlighted when it comes to the channel lines, since February, we've had more of a consolidation with time, meaning that we've been in this uptrend channel, and then we see a reset post earnings or a major event that is impacting the company. And we saw that between February and April of this year, we saw another reset hitting until July of this year, and now we're basically starting another reset. But throughout that type of consolidation, you're also still seeing the 200-day SMA creeping to the upside here. That could be a key area of support sitting at around $436.09. That would be the first area of support to kind of look for, and then potentially filling the gap to the downside at $401 if we do see a failure. Now the MACD is crossing with the 12 EMA above the 26, still below the zero line, but the first bullish indication has been met, and the RSI is making relatively higher lows and higher highs. So this does seem like in the near term, Nicole, that this is still a bullish chart, but any type of breakdown of that structure, especially that 200-day moving average, you can see a pretty sharp reaction to the downside for this name.
Right, understood. Any final thoughts on Meta before we get to Costco, Don?
Yeah, no, actually, in this particular instance, I agree with Kevin 100%. I mean, the chart it's been phenomenal how it's actually holding up, but it's to me again, it's more about just a huge downdraft in the marketplace, and when they come for big tech, they're going to come for them all.
All right. Last but not least, Costco, and you think Costco is no Walmart, and it is pricey. Costco could go down too.
Yeah, with Costco, this is more of like a trade down effect, and this one is fundamentally based. It is. You're right. It's no Walmart. It's no Walmart. People are going to trade down. A lot of the high ticket items, I think they're going to have a difficult time with. I think overall sales are going to be rather diminished. Look, we're going to go into a rough period right now. Whether we think we're going into a recession or not, doesn't matter. It's in people's heads at this point. And I think people are going to be very, very conservative. I think Costco is actually going to feel that to some degree, especially with month over month sales. So as they trade down, well, the stock is actually going to pull back a little bit in here. And it's actually got a bit of a trend down right now. But I'm also, again, in the October 18th expiration here. I am buying the 780 puts, selling the 770 puts. So it's a $10 wide put spread for a $3 debit. Again, trading down in Costco is ultimately going to be a contraction of share price. As I said, it's no Walmart, and right now I am presently boycotting the chicken in the bag.
Boycotting the chicken in the bag, and this is his trade. All right, let's see what Kevin Green has to say about this.
So Don, I think it's hot dogs, man. It's not the chicken in the bag for this name, but you are actually seeing a stock that could see a pullback. But Nicole, we have seen some of these false breakdowns in the past, and so on a one-year daily time frame, here's some of the areas that I'm kind of focusing on. Last year, between August and October of last year, we did see a situation where the 20-day SMA did cross below the 50-day SMA, and we had this consolidation period taking place for about 2 months or so. But once that actually occurred, we did see a breakout. We saw a nice little run to the upside. Then we had another consolidation happening between March of this year and May of this year. Once again, that 20-day SMA crossed below the 50-day. It's a bearish sign on any other technical chart here, but it seems like that actually does confirm the consolidation potentially could be over and we have a bottoming, and then we break out to the upside. What's interesting about this near-term consolidation, or the flag pattern, if you will, is that we are seeing this downward trajectory when it comes to price. The 20-day SMA just crossed below the 50-day SMA. Once again, bearish, but in the past, it's been kind of that bottoming signal. And you also are seeing the MACD kind of bottoming out, trying to cross above maybe a little bit of a bullish formation. RSI making higher lows and making higher highs on a relative basis over the last 2 weeks or so. So this kind of sets up like we've seen in the past. I wouldn't be surprised if we continue to see an upward momentum or a price advancement for the stock here. But if we were to see a pullback, Fibonacci retracement from the lows that we've seen to the highs that we've seen on this chart here. First one to keep your eye on, 38.2% retracement, leaves you at around $751. A 50% retracement brings you down to around $705. So those would be the key areas of support. But you got to see the price action really kind of come through here to really confirm a bearish signal, because we've been faked out before.
All right. Thank you, Kevin Green. Don, you get the last word.
Yeah, overall in the marketplace, look, what I think we actually saw, obviously on last week and into Monday, was a discussion, of course, of the yen carry trade, and was the primary focus, and that was the primary reason for volatility. The next round of volatility could very well be the AI unwinding trade, and after that, we're going to be looking at economic weakness. So again, expect that we're going to be in a period of prolonged volatility, or what I would call duration volatility. It's going to be a lot of two-sided trade. It does not necessarily mean that we're going to trade incredibly lower. I think tech is going to struggle here. Anything that you've seen, like Nvidia, that's been fully valued on the year, is going to be a very tough trade moving forward. So again, in my opinion, use defined risk when and where possible, and look for some wild and unforgiving two-sided trade in this marketplace.
Don Kaufman, thank you, of Theo Trade, and Kevin Green on the charts for the big three today. Appreciate it. Coming up next, a spotlight on American Superconductor. The president and CEO joins us to discuss the latest earnings and outlook for the company. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad to be with you. We're looking at ASMC. This is American Superconductor. And joining me now, Daniel McGann is with us, Chairman, President, CEO. Thank you for being with us. So we've seen some volatility lately in the stock. You did have revenue growth, net income improvement. You're working on smarter, cleaner energy. What was your interpretation of the quarter?
We had a great quarter. So AMSC's really kind of hitting it out of the park on every level. We've got to a whole new level of revenue. We've been delivering consistently great operating performance over the past 4 quarters. We've gotten gross margins up to a level that we set some expectations that we thought we would get to, and now we're there. We just booked a record quarter in orders. So we've talked before about our ship protection system business. We just got a major order there from an allied navy in Canada, the Royal Canadian Navy. So we delivered more than 125 million, almost 127 million of new orders in the quarter for us. And that's across the business. So we're in a wonderful situation with the base business, and we just announced we're adding a new part to the business. We've acquired another company that's going to help us go more into some of our industrial applications and really be transformative for the company on the military side, going not just from protection, but eventually to powering ships and ship systems. So really, it's a real important day, important week for the company. Yeah. It's a shame that we're in this situation with the macro market as we time all this, but our business is really, really in a wonderful position.
Yeah, so you're accelerating towards profitability with this acquisition, too, of NWL Inc. But to your point, will expand your footprint. Why is that? Why is now the right time for this?
It really adds on some themes that we've gone down. We've gotten some wins on the industrial side. We've been, for a long time, we've been focused on renewable energy, and that's a big part of our business. But we saw the ability to expand into industries that are important to decarbonization.
All right, guys, so I am back.
We saw expanding
nice job,
in the military
nice
and trying to do protection systems for
Hold on.
sailors
I
in harm's
can't
way.
even
We
hear
saw
him. I don't
those
have my
as
AirPods.
near field markets
I don't have my
for our key
AirPods in, so
technology. And we see with the addition of
hold on. Let me
NWL
turn
being
this
able
guy
to push
down. Nice
further
job,
in
though,
those
for anybody.
directions.
Nice job. SPY. SPY is still pretty much where we opened. Now, listen. This is what we said this morning, is that we want to look for a consolidation. We want to look for a consolidation. And if that consolidation happens today, that's going to cut volatility way down. Because you had moves Monday and Tuesday. I don't care about the direction. All right? I'm just saying, Monday and Tuesday, you had some really nice moves. But still, for the most part, a day where we don't move is going to cut that volatility. So I'm going to look for this afternoon, even if we play both sides of the trade with labor data coming out tomorrow and we get a move tomorrow, I would like to... What I'm trying to do is catch volatility by playing the SPY with a consolidation in the SPY should cut volatility, and then if we can come in with a gap up and or a gap down with data for whatever reason, and maybe we don't, but I would like to look for an opportunity to take advantage of pretty much volatility bouncing back, putting in a lower high. Like if this was a chart of volatility, it would look like this, right? It'd be coming down the past couple days, right? And then kind of just like bounce. It would be coming down, but then today, like let's say it did this, right? This line right here, like say it would look like that, and then a consolidation today would do that. You have the labor numbers tomorrow, and you could come in with a gap down or a gap up. Boom, you would get that lower high to be put in, and that is what I'm trying to take advantage of, whether it's the Qs or the SPY, but that move to see if we can get a gap up or a gap down, which I think we can. All right, we may not, but I'm going to look for trades at the end of the day for tomorrow, or again, you have to time it correctly. So I don't know. Anyway, I talked about this morning. I said if we get a consolidation today, I would like to look for a move tomorrow after hours into tomorrow, and look to play even both directions. So give me 1 second. Let me finish this bagel real quick. I've got 2 trades on myself, or off, I should say. I took 2 trades today. Shopify and Lumina. And got some nice trades under my belt today.
You know right away the challenges that you have and figure out how to charge it, right? The level of charging infrastructure just isn't there yet, and that has to come. And in order for that to come, the grid has to improve. So even to serve what's out there
it sounds
today,
good, though.
there's a dramatic change, we think, coming in the grid.
It sounds
Yeah,
good.
I'll tell you a little secret. I haven't rented one yet.
I could
because
live off
I'm
of
terrified. I don't know
eating
where to charge
protein.
it.
Trust
I
me,
don't know how to use
I don't care for
I
carbs.
drive long ways from New York City out
I mean, I
to the
guess it's a
beach or
personal
out to
preference,
visit
but
cousins, and it's always a New York
I'm a
City
protein
traffic.
guy.
You could go
Like, I could
a
just
few
naturally
miles and still
eat
be in the
protein.
car for 2 hours. So I'm not ready for it. I'm just not. But we'll see one day.
Yeah, they're not
Thank
bad.
you so much.
I
It's
agree.
great to see you. American Superconductor,
But-
Daniel McGann.
I will say, if I had to just eat protein, shit. I'd much rather have a steak or, like protein.
We'll be right back.
I get it though. They are good. What I'll do is next time, I won't mention what I'm eating because I forgot. Now I'm going to remember so I don't have to do that to anybody. Okay, Abby, hold on. Alright, I am almost done. Give me 1 second. I always say this, right? If I don't get my entry or something happens, I'm not going to be able to stay in the trade. I'm going to screw myself up emotionally. That's why I didn't take JP Morgan yesterday, because I knew if I took it at a higher price and it pulled back, I would be fucked. I probably would have sold it for a loss. I'm not saying I would have. I'm just saying, like, I would have been concentrated on the fact that I didn't enter correctly or stick to my trade. And I don't even want to go that route. Like, it's hard for me to express what I mean by that. But the frustration can get real when you say go long at 194, 195, and then you go long at 196, and then it turns back around to 194. Now you're red, and you're like, bro, what the fuck? So it sure is a nice double top there on the SPY.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
40 on Wall Street. We do check markets all day long. Here at Bloomberg, we got the S&P back above 5,300, 5,308 right now, up 68 points, higher by 1.3%. Stocks climbing around the world, extending a rebound as the panic that recently roiled the financial market subsided somewhat. Right now, we have got the Dow Jones Industrial Average higher by 375
This guy
points, up by about 1%.
looks and sounds
Nasdaq
bullish.
Up 228 for the Nasdaq
Like,
Composite
he is happy
Index
as hell.
gain now of 1.4%.
I
10
can't
year
explain it.
3.94%, the 2-year 4.02%.
If it was up to him, the markets would be green
$4.50
every
ounce,
single
up,
day.
0.2%, while crude up 3.3%, 75.64 a barrel. Mortgage rates are down, falling the most in 2 years. And with that story, here's Bloomberg's Vinny Del Giudice.
The average rate on a 30-year fixed mortgage dropped 27 basis points last week to 6.55%.
Had enough.
They saw in the domestic businesses in Q3 could impact the next few quarters, saying Q4 experiences segment operating income will decline by mid-single digits versus the prior year. And it seems like that's what really investors are focused on right now. Shares off about 1.6% right now, adding to August weakness, now down about 5.5% this month.
Yeah, so look, you know, what the consumer will spend on. Are they going to spend on there? But the surprise was the profit. in streaming, without a doubt. Caroline Woods, great to see you. Thank you so much. Time for the disruptors. George Silas is standing by, senior markets correspondent here, taking a look at ARM Holdings. Bullish note from Bernstein. Tell us a little bit about that story.
Yeah, this is a call from Bernstein, Nicole, after the announcement of earnings for ARM, which they guided slightly lower for some of their industrial and networking business and their IoT.
Consumer behavior, maybe some economic policy, all of it. What would you be looking for just for continued confirmation that that story remains intact at this point? Because it does seem as if, maybe there's some rethink in terms of how high rates can go or whether, in fact, consumers will indeed maybe spend more heavily.
Yeah, thanks so much for that question. It's actually something that we do keep in mind quite a bit and we're monitoring very carefully.
Does it sound okay, guys? Give me 5 minutes. Let me know in chat, does it sound okay?
And so we look
Oh,
across
that's
the
cool.
board in Japan. And therefore, the pulse
Yeah,
of the
he's
economy
just-
is therefore
yeah, he's
very,
just a kid.
very important. Roughly yesterday, there was actually a very important piece of macroeconomic data that came out that didn't catch the attention of a lot of people in the world, which was real wages actually increased for the first time in 27 months. This is the type of data that we're looking at that gives us indication that wages are starting to increase sustainably. And the reason why we're looking at this is because if that continues to sustainably increase going forward,
I appreciate
that
it.
bodes well
Thanks,
for
man.
consumption, and that bodes well for the domestic economy, and that's usually a good starting ground for small to mid-sized companies in Japan to begin to re-rate positively. And then, of course, from there, the added bonus is the capital management and capital efficiency reforms that you were alluding to earlier.
Both General Mills and Starbucks talked about the weakness in the Chinese consumer. I'm just curious, Kay, what's your read on the Japanese consumer right now?
The Japanese consumer is getting stronger, but we're coming from a low base. This was one of the key reasons why the Bank of Japan moved on interest rates, because the weak yen, was leading to higher import costs, and that was weighing on people's ability to spend. This will start to be changed, and if you recall, I did talk about the wage growth happening as we speak, and if both of these come together, then we could see a virtual cycle of growth and distribution that is usually a good ground for Japanese equity investing, especially for those companies that drive much of their revenues from the domestic economy.
A consumer and economy we will continue to watch. Kay Okamura, thank you.
Do.
All right, up next, we'll head back to Paris, where Carl's joined by the agent for Olympic greats like Simone Biles and Michael Phelps. We're back in 2 minutes. Let's head back to Carl Quintanilla in Paris at the Olympics with a special guest. Carl.
Hey, Mike. Join me here in Paris on the roof is Peter Carlisle of Octagon, one of the most powerful agencies in all of sports. Peter, it's great to have you. Thanks for coming.
Thanks for having me.
You know, it's been a remarkable games in that we're, as usual, building new stars every day, right? New stars, new narratives, new marketing possibilities. And I wonder what it takes to get to Phelps-like notoriety. Is it about medal count or charisma or something else?
I think it's about all of that. It's even about the climate that this all happens in. And these games have been, I think, really unique in that past couple of games haven't been as many spectators and there wasn't that feeling of connection. But I think the whole world is ready to have these games and to feel that energy. And it makes a huge difference when you're coming out of the games and the athletes are trying to gain traction in the marketplace.
I'll give you a chance to brag about some of your own clients, but of the names that we're now getting to know, who has played their cards exactly right? And of the rising stars that are getting created, who's impressed you?
Well, I think the more established athletes that, you know, have made such a significant impact here. I mean, we can start with the GOAT, Simone Biles. You know, she's making history every time you watch her. But I think more uniquely, she came out of the Tokyo Games and she had some adversity to deal with and did so and showed tremendous character, and the pressure that she was under here, I mean, staggering, and she really handled herself beautifully, and you know, I think that she sealed her place in sports history, and I think that momentum is really going to take off.
Followed it up with some edge on social media and all of that too.
Yeah.
I wonder, we talk a lot about endorsement deals and we talk about Nike and Under Armour and even financials use a lot of these personalities. Is there a golden sponsorship deal, or is the environment more fractured these days?
It's more fractured, but I think in a good way. I mean, it used to be that athletes would perform, maybe they were a story, and then you'd sort of wait for that deal, and the companies would be selecting from among those athletes. But now I think athletes have more power to sort of set their own direction with social media, with the way content is generated now, and so it's there's a lot more independence. So I think if you were to ask 10 athletes what that dream deal was coming out of the games, you'd get a different answer for each of them.
Right. One thing that comes up in talking to athletes is you get a burst of interest during the games, and then you got to work through the lull until you get to the next games. Do you think that lull is getting maybe a little more shallow?
Yes, without a doubt. I mean, you were dependent upon, NBC, for example, you'd be dependent upon other platforms to just keep your name out there, and then certainly sponsors, but you're hoping that they're going to activate between the games. Now, social media, the way that the sports content is being developed, I mean, it just gives athletes so many more options. And the other thing is, I think that coming out of these games, because they've been so special, heading to the LA games, I think there's going to be sort of a sustainable interest for these athletes. So you're going to find more athletes with more opportunities.
I was going to ask you, what's on the line for LA trying to follow up something like this? And then whether Milan in the winter can actually elevate their own games, because it's always sort of been the little brother to the summer games.
Yeah, to a degree, but I think it helps being between Paris and LA. And if you look at Léon Marchand and watch the response to his accomplishments here in his home country, these athletes are going to be so excited to be in LA, and I think the response, in terms of the spectators, is going to be like nothing we've seen.
We can't wait, obviously, to bring this thing home in 28. Peter, it's good to see you as always. Thanks.
You too. Thanks for having me.
Peter Carlisle. Seema.
Already looking forward to LA and Milan. Carl, thank you. Next, a look at the growing number of AI founders fleeing their startups. That's on the other side of this break.
And keeping an eye on the markets, we're losing a bit of steam as we get into the midday. You see the S&P 500 up about 1%, down maybe 0.5% off of its intraday high. The NASDAQ composite still up 1% as the market tries to regain the losses of Friday and Monday. We'll be right back.
A major leadership exodus over at the startup darling OpenAI as top talent, including 2 co-founders, announced their departures in just the past few days. Could it be a growing trend hitting the startup industry? Deidre Bosa has the answer to that. Hi, Deidre.
Good morning. It's part of this tension emerging in AI between the mega caps that are developing the technology and then the investors that are looking for returns and increasingly getting a little impatient. Caught right in the middle are some of the most promising Gen AI startups who are increasingly being swallowed up by the mega caps as they struggle to find viable business models or really any revenue. This week, OpenAI co-founder and president Greg Brockman said he will take an extended leave to, quote, relax and recharge. Also this week, Character AI's co-founders and more than 24 researchers went to Google. For Noam Shazir, one of the founders there, it was a return to Google, where he co-authored that famous Transformers paper that essentially kickstarted the modern Gen AI age. Now, these latest moves, they continue a trend. Gen AI darlings are dropping like flies. Earlier this year, Inflection, a startup that was valued at $4 billion, saw most of its staff decamp to Microsoft, including its co-founders, both of whom also worked at Google previously on Gen AI breakthroughs. Then there were the Adept execs to Amazon, another Gen AI startup that raised hundreds of millions of dollars at a $1 billion valuation. Now, for the mega caps that are doing the hiring in exchange normally for a licensing fee, this has become the playbook for dominating the Gen AI race without having to do actual acquisitions in a tough regulatory environment. For the richly valued, some say bubbly Gen AI startup ecosystem and the VCs backing them, this could be a red flag. One source here in the Bay Area tells me that the trend of startups being swallowed by mega caps was bound to happen. He's not surprised. He says they were overvalued. And he says there's more to come, pointing specifically to Cohere, another Gen AI darling that was recently valued at more than $5 billion and reportedly has less than $25 million in annualized revenue. There's also this I want to highlight. Regulators, they are getting wise to this playbook and looking into these deals. They're not technically acqui-high. Is it a cushier gig? It's just been really, really difficult to find revenue, to actually make money in generative AI. Many people will say that we're still at the early stages. Seema, I know that you were looking at Airbnb earnings like I was. Brian Chesky had some really interesting comments during that call when he was asked about AI. He was a lot more measured, and he kind of threw cold water, saying that for an actual interface change, we haven't even been close to seeing that yet, and that is going to take much more time, and that's where the tension is. These startups are raising billions.
back half of August is traditionally not a good time. You've got some worries that, frankly, I think are overwrought, particularly on the unemployment front. But that doesn't mean that it won't be volatile. It's likely to be volatile. It's also likely that we haven't seen the highs in the market for this year. And, you know, one thing I want to point out is I do feel last weekend and into the early part of this week was hysterical. I'll use that word. One of the catalysts for that hysteria was the so-called triggering of the Sahm rule. And Claudia Sahm, who's the progenitor of that rule, wrote an article today, you can look it up online, in which she says she doesn't think we're in recession. She thinks that that rule of hers was made to be broken. That's worth a read. I don't need to go into the details of it right now. But the actual, you know, originator of that rule is saying she doesn't think we're in a recession. I think it's a good time to just calm down. If you have stocks you want to buy, this is a good time, but don't expect that it's not going to be volatile.
Goldman's David Solomon yesterday, late afternoon, was out in an interview saying he doesn't see a recession. You want to comment on Pasquarello's commentary, not the start of a new trend in terms of the labor market, which would be obviously unsettling. And now you've had, you know, a couple days worth of buying in the midst of that dramatic sell-off on Monday. What do you think?
Holy shit, there goes the SPY, guys.
As usual, and
Fuck,
spot on.
they're going to do it now. Damn it. Hold on. Shit's going down. God dang it. How did I know that? Dude, this whole time while I'm eating, the SPY's just like selling off, and I had no idea. My fucking cat's yelling at me. You gotta be kidding me, bro. Abby, you're gonna have to go, my love. You gotta go. You're really fucking with me now. LUMN is still holding up alright. Sorry for the language. Come on. Yo, tell me I did not tell y'all earlier today. I said, look, watch out for that random 12 o'clock, 11:30, 1 o'clock, 12:30 random sell-off. Tell me I didn't say that. Go back, tell me I didn't say that. How would we know? No, not necessarily, but yes, we would if we pay attention to some patterns and just understand the overall markets and what's been going on. Fucking sniffed that we sniffed it out early. Alright, let's do this. Come on. I got a fucking video that it's on. Sorry for my language again, I do apologize. I can't believe I still have to do this again. This is what I hate about this software. Is that like...
SLRX, Hilarious Pharma getting a pop here. Sandy Lima Romeo X-ray shares up about 47.
Oh my god, bro. I fucking hate Thinkorswim. I do. I fucking hate them. I hate them. Thinkorswim, I hate you. And I don't hate. I fucking hate you. Bro, Like, I'm so tired of having to fool with these charts. I pull this up. Don't have a daily chart. It's way out of whack. Fucking 8 months later in the future. Why would I want to see that? Then I got to fix the time. It's just all bullshit, man. Thinkorswim sucks. I'm going to tell you guys that right now. Thinkorswim sucks. It sucks. Does it have cool shit? Yeah, but it sucks. It's the truth. It sucks. Especially if you're, like, not... Especially if you need to, like, do stuff on the fly. Because you'll be, like, clicking and clicking and clicking and clicking, and it gets old real quick. You'll be like, okay, cool, I'm going to save these charts, right? Look, let's go to settings. We'll save it, keep it zoomed in. Yeah, cool, dude. And then you go back, and then it doesn't save for you. Alright, keep an eye on that. 526. This could get fun. This could get really fun. Okay, so we just rejected the 100-day. Looks like we might try to move into 522.50. Really, I'd like to try to move back into 520, man. That's really where I'd like to get this trade at. Alright, you know what? I think I'm going to do it. So we already rejected there. Hold. And that's the other thing that sucks about Thinkorswim. You go to press the box, you press it, right? And it doesn't give you the it doesn't give you it doesn't type. Like, you're typing in a ticker and you're like, dude, what's going on? And it's blue and the line's blinking and you're like, bro, why is this not typing? And you got to hit it again, but you've already hit it. So it's like, why do you got to hit it twice? Damn, Tesla, that's a nice entry point there. But you're already in the 195. You got about $2 left on Tesla if you think that's going to be your support level. You could get a nice little scalp there, I'm telling you guys. And maybe hold a piece to see if 195 breaks. Let's look. This thing is fucking garbage. It was really trying to show me this. It was really trying to do that. Like, what do I want to see in here for? What do I want to see that for? What am I going to do with this? What am I going to do with it? Come on, man. Fucking joke. Yeah, you can. Tim's choice. If Tim wants to buy this car, Tim can afford it. That's really up to Tim on that. I just want to clarify that, because sometimes they'll say, buy my house, buy my Ferrari. Well, if I bought him a $200,000 car, he's going to get a tax bill on $200,000, which the median tax rate would be $61,000. This might be, as kids say, cooked. Yeah. However, Tim, right now, this car is asking $80,000. He's asking. I give that 70. No problem. $70,000. If you put down 20%, yeah. So what's the math on that? $14,000. We need a little bit more time, and we might be able to get along on Tesla and try to break this thing back up higher. I don't know, though. Still worrying me a little bit. I think this would be a really good first supercar. The only word of caution is maintenance. It's more insane. But you work for DD, we have access, obviously, to fixing things. We can get parts cheaper. And we know people. So the thing with this car, and why I think that'd be good for Tim, because the doors go up. The doors go up. The ladies is a real aggressive move on girls. That never happened. The truth is that you drive a lot. I do.
This car, he's put on 20,000 miles on it since he bought it, no issues. Has 40,000 miles on it now. If you continue to drive the car and do the basic maintenance, you'll have no problems. This car can't sit. Okay, so if we buy this car or you buy this car, it has to be driven.
Boo Boo, hold on. Abby. I wonder what's moving right now other than the SPY. That's probably what I need to just look at is the SPY.
Is this something that you would consider? I think so.
Look at Upstart, guys. That's not Intuit. It was Upstart. Upstart. Upstart was the trade. Not Intuit. God damn it. All right, JP Morgan's breaking back down. I had a feeling this would happen.
Lines up. So when things are really bad, there's a tendency to throw everything out. I just thought this was one to pick up. And by the way, just my view in the market is we're not out of the woods yet. I still think it's too early to start putting money in the market depending upon your time horizon, just broadly speaking, including tech.
We'll see you back on the desk soon, Weiss. Thanks for calling in with this latest Goldman move. One more reminder, too. Again, top of the hour, Jamie Dimon, exclusive with Leslie Picker, and you don't want to miss that. So from JP Morgan to another big Dow mover today, it is Disney on the back of earnings. Stock's down about 2.5%. Jimmy, I go to you. So the streaming businesses turn a profit for the first time, a quarter earlier than expected, but the park attendance was below expectations. That seems to be where the concern is today for why you're seeing the stock down 2.5%.
That's definitely why the stock is down, is the weakness in the theme parks. And we know that for the last several years, that has been the earnings driver at Disney. However, I have said for some time that what I've been looking for is streaming profitability. I am surprised pleasantly that it came in 1 quarter ahead of time. To me, that is far more important than a weak quarter in the theme parks, which is likely to reverse at some point in time as the consumer gets some relief, whether it's from interest rates coming down or inflation continuing to ameliorate. By the way, as that cycle in the theme parks eventually turns, bear in mind that Disney has been leaning into it, adding capacity, whether it's cruise lines, more theme park experiences. So as it turns, they're likely to see more of an upswing. But the long-term future of this company, on the foundation of theme parks, the long-term future is the streaming business. It's the second company to reach profitability in streaming. We see what Netflix has done. They're not. This isn't going to reverse itself. It's only going to get better, and it replaces linear TV.
All right. If you're talking about theme parks and it would lead you to a travel conversation,
yes.
that complex is looking a little dicey today, to say the least. Let's throw up Airbnb. On pace for its worst day since November of 22. It's a new 52-week low. This is on the earnings miss. They warn of slowing U.S. demand, so that's number one. I got Wynn, which missed. I've got some of the other stocks related
Marriott,
to this
Hilton.
space. Marriott and Hilton are down. You don't own either Marriott or Hilton anymore, but you have obviously want to say something about these stocks.
Booking Holdings last week.
Yeah.
Booking Holdings talked about consumers trading down, going to lower star hotels, shortening stays. Delta, the airline's not looking too good. So, look, Royal Caribbean's working really well. Maybe everyone's just going on a cruise, but there's something clearly that's going on right now as it relates to travel, and I think it's the effect. I think it's the lag effect of monetary policy that is affecting middle and lower income
I mean, you
earners.
can also just be tapped out too, right? We've been talking about experiential spending by consumers since even before the pandemic was fully declared finished.
Yeah, I think if you look at this period of time from 2020 to 2030, you're going to see all types of COVID effects. And one of them is the jobs numbers, and the other is travel. No travel and tons of travel and spending on houses. I mean, we're going through these cycles of excess in one direction and then famine in another direction. So
you're at
we're
the part of the cycle where if spending is going to be restricted, right? You're only spending on the necessities. You're not going to go out and spend on these experiences.
You're going to go sit. You're going to go sit at the table at Wynn.
You know, I'm going to be there later this month.
He's going.
Later this month.
Well, I don't know if you might not be tapped out.
Yeah.
I don't know, but I mean that stock, for example, is down 13% in a month.
Yeah, it is. Frankly, I mean, look, let me take the other side a little bit. I'm not disagreeing with anything that we're saying about the consumer being tapped out, but there are some other considerations here. When we talk about airlines, to start with, I'll get to Wynn in a second. When we talk to airlines, that is far more a supply situation than a demand situation. It is unequivocal that demand is very high for air travel. It's a supply issue that's creating margin issues. On Wynn, here's the interesting thing. They missed because of Macau. Las Vegas and Boston was an absolute blowout. Absolute blowout. And frankly, the quarter on a whole was a record for them. So the analysts just simply were too high. If you listened, and I did, to the conference call, they said they see no abating of demand in Las Vegas or Boston. I mean, they're talking about like high-end wine sales. Like, it's just not there. Now, your comment, it wasn't glib. It was maybe accurate. We're talking about a different demographic. I get it, and I want to be sensitive to those demographics that are having a hard time. But the upper end has been enjoying higher interest rates on money market funds, gargantuan housing and asset price appreciation this year. It's showing up in Las Vegas.
All right, but the high end is feasting on everything. And what about is it such a good economy?
But isn't that what drives it, Joe? Isn't that what drives it?
But the rest of the consumer base has to participate. Otherwise, at some point, it falls apart.
And I think they will.
You're seeing the signs of it.
I think they will as inflation continues to come in. Look, you got goods deflation as interest rates come down.
I think you got an appetite problem there, sir.
There are two sides to every story, and what is a travel demand question today is not necessarily showing up in other parts of the consumer spending spectrum. We'll do it later because there's some big retailers that are getting a big bump today. We'll save that for later because we do have more committee moves. Carrie's been busy. She made a number of trades before the sell-off, but you haven't seen her in a while. So she's
I was
come
about
back
to
and
say
tell
the
us
same
about,
thing. We have not seen Carrie in a while, and it makes me think back that something may have happened. Like cancer or something. I didn't even think about that. I'm like, bam, I didn't even think that we haven't seen her. And hopefully everything is okay. Alright, so with that said, what the f is everybody up to right now? What's everybody up to right now? I gotta clean up this fucking trash from the neighbors that keep putting their trash can in a place that it keeps falling over, and then they walk to their trash can and don't pick it up. Like the trash and shit's all like on the ground in the yard, and then they pick the trash can up, like standing over top of the trash, and then they just walk away. They don't put it back in the trash can or anything. And then they walk away, and then there's trash right out there. It's like, do better, people. And you know what? I have one thing to say. I do have one thing to say, and it's not about you guys. It's not about you guys. Alright? It's not about y'all. You know who I'm calling out today? I'm calling Quavo's little bitch ass out today. Yeah, that's right, Quavo. You guys know Quavo, ATL Quavo. His man's got shot and killed. Okay. So Quavo thinks that because him and his goonies want to not have respect or act like fucking retards, that the government should have some sort of reform, some sort of gun reform, all because the quote-unquote goonies, the goons, don't have no type of respect, and then when something happens, they want to sit and cry. And now, I'm sorry, but I'm backing up the fact that he got beat by a singing trigger. Okay? Quavo, what are you doing? Big L's to Quavo. Alright? Quavo, I'm done. I couldn't believe it when I saw it, but this man really came up and said, Kamala for president. We need gun reform. You don't know nothing about no gun reform if you ain't been in the streets and have been around it.
Not business.
Nah, Quavo, you see, the people that do have guns and shit, there are responsible people out in this world. Unlike you and your goons, who act like fucking retards, shouldn't be taken out on the rest of the citizens of the United States of America. Just because you want to act cool and be a little rapper, got a little gat, you know what I mean, want to poke holes in other people. Don't come crying when your best friend gets shot and killed. It's all fun and games until you reach 35 and ain't nobody listening to you. Now you want to be pro-government. Bro, stop it. Stop it. Quavo is a bum. He's a bum. His mans will be highly upset at him. You don't go whining and crying back to the police. That's literally what he's doing. Oh, they shot my friend. They shot my friend. And they got a whole album about fuck the police. We do this. We do that. You know what I'm saying? Cocaine. My bitch is bad and bougie. My bitch so bad and bougie, she turned into a police. She was a prosecutor. Now she running for, she my president. My president is a prosecutor. Bro, big L's to Quavo. You looking like a dumbass, bro. That's why you got, you know what, by his singing, you know what. You got bodied by a singing individual. An individual who sings. I'm not going to say the word. I'll say it with a T, but not an N. Big L's to Quavo. Shout out Chris Brown for you know, just laying them out. He was right. I was wrong. Chris Brown was right. I was wrong. What do you want me to say? Now, because you want to not have no type of respect for a firearm, and your friend gets shot and dies, now you want to go crying to the prosecutor. Now you want to go crying to the cops. You wanted to be all up in, you wanted to be involved in all that gang shit, and then when a gang comes a knocking, you want to run to the prosecutor. Come on, bro. Just remember you got bodied by a singing trigger. Okay? Just keep it at that. Quavo. Alright? I'm not going to say the word, but Quavo.
It's the stock that you would go to. You would go to CoStar. They also have apartments.com and homes.com. They made a big bet on homes.com. And that's weighed the stock.
This should be the
so
president.
You bought more Fortive and Eurofin Scientific, but I want to know why you sold both Home Depot
all
and
of
Sherwin-Williams.
All of them.
Both of those stocks have done well with the anticipation of lower interest rates. And we feel that the housing market, yes, will pick up if we have lower rates, but they've been good stocks recently. We've had these positions over years. We've cut them back.
Why are they?
We just thought both HD and Sherwin were ones that we could move into something that would be, we thought, better returns.
Not interested.
It's not a statement on consumer spending on housing, anything like that?
I think it's that we felt that they got a bump
Quavo
already
Honcho.
Lower interest
That's right,
rate belief that it's coming.
I'm in the streets.
There wasn't going to be as much
gun reform.
robustness in the housing market just because of lack of supply.
Yeah, I'm in a trap. I'm in a trap, bro. I'm also with the prosecutor singing on everybody. What are you doing, bro? What is this? What is this? Mink. He's a fucking idiot. Yeah, we in the trap. I'm broke. I gotta sell my crack. You know what I'm saying? But really, we sitting in the prosecutor's office talking about how we gonna take all these guns from people that ain't got no respect or act like idiots. Just because y'all act like idiots don't mean we act like idiots. You keep it with y'all. Fucking idiot. Quavo, what a fucking idiot. We need gun reform. Free the streets. Free my mans. I'm about to tell on everybody right now to get him free. Fucking Quavo. Like, it don't make sense. It don't make sense. You're out here crying to a prosecutor that you want gun reform, and then you want to shoot videos like this, like we in the trap, we do this and we do that. You a G, you from the streets. Which is it, bro? Which is it? Come on, man. Come on. Don't go crying. Oh, look. You see that? You saw that, right? I know y'all saw that. I know y'all saw that.
Why the fuck you typing on Twitter?
I'm wondering the same thing, bro. I'm kind of curious why you're doing the same thing. Look. Y'all saw that. I know y'all saw that. Let me pause it. Let me pause. Look. But we need gun reform. We need gun reform. Please don't speak on my life, Quavo, or other people. You do not deserve to speak on anything for that matter. Chris Brown, we need some more of you. Y'all need to lay him out. Alright? His man would be mad at him right now for doing the shit that he's doing. Because he don't make no goddamn sense. He just needs to put down the cup. He needs to put down the cup. The same prosecutor that he whining and crying to might just, you know what I'm saying, put down the cup for him. But he's too dumb to even... I don't get it. I'm just saying. Motherfucker's an idiot. 1 month later, here you are making trap music, you a G. We need gun reform. You wouldn't know nothing about the streets and guns until you've been in the streets and your man gets hit. Well, guess what, man? You play with fire, it burns. That's just the truth. Alright? That's just the truth. So Quavo, God, I hope there's a way Quavo could see this. I might have to clip farm this. Like, I can't believe I saw it. I can't believe I saw what he did. Unless he's just doing it for money. Like, is he in that need of money where Kamala's like, yeah, here's like $5 million. Come to my show. Just talk about gun reform and all this, that, and the third. Didn't you have somebody that died? Yeah, just speak on it. Here's $5 million. Come on, bro. And I will reiterate, just because y'all goofy ass ain't have respect, don't mean that you can sit there and place yo dumb shit on everybody else. The stupid ass actions y'all take does not mean the rest of the citizens of the United States have to deal with y'all's dumbass consequences, and you know exactly what I'm talking about. Because it's y'all. Alright, Quavo, it's y'all. You want to be in the streets so goddamn bad, but yet when shit gets popping, you know, remember the BET Awards? Remember how hard you were? Where was the gun reform then? Did you go ahead and say, yeah, I'm gonna go call the prosecutor if you don't leave me alone? If you don't leave me alone, I'm gonna call the prosecutor. Kamala, prosecutor, Diddy Party prosecutor that been to Diddy Party, she gonna come after you. Alright, look here, guys. The Qs have a really nice setup, actually. So, enough of Quavo. I just had to let that out. I just had to air that out. Just had to. Because that shit really bugs me. Like, that's the type of shit that goes on. And it's not okay. Just because you weren't out in the streets waving your gun, and because you picked the right friends, he's out here trying to say he didn't pick the right friends. He's a fucking idiot. So apparently you're an idiot. That's literally what is being is like the sentiment that is being laid out. Oh, we need gun reform because I'm an idiot. I'm a fucking dumbass from the streets who just don't think before I act or something. I don't know what it is. But that means because I'm an idiot, everybody else is an idiot. Man, fuck out of here. Fuck you, Quavo, and fuck your big government, Kamala. Fuck her prosecuting ass. We don't need the government to cradle us from birth to death. We don't need the government to tell us what we can and cannot do. Just because you all be blasting each other don't mean we blasting each other. Alright? Some of us may actually value others' lives to an extent. And it's just the name of the game. It's just the name of the game. Play with fire, you'll get burned. And don't go crying to the prosecutor, please. Just put a band-aid on it. You didn't need to go crying to the prosecutor. Because you and your mans was a dumbass. Acting like idiots. Don't mean everybody else acts like idiots. This is a nice spot here from Friday's low. Up there at 449.75, 450. I think a lot of people will feel me on that. I think a lot of people low-key down deep know exactly what I'm saying. And that's all I'm saying. Like, for him to go out there and say the dumb shit that he said at Kamala's thing because of what he has done in life and chosen does not mean that you guys choose to live that way or choose to think that way or choose to act that way. So that's what they're trying to press. That's the point, right? Is that they try to press this because, like, you know, because so-and-so is a fucking idiot. So-and-so is a fucking retard. So-and-so has some bad luck. Means everybody got to have bad luck. Not everybody's got to go through all the consequences. Nah, you just keep that shit with you. Matter of fact, if you haven't handled that business, if you haven't gotten that get back, I don't even think you should be speaking on anything, bro. If your best friend that you grew up with got shot and killed, and you did not get that get back, bro, you just go do something with yourself. Like, you shouldn't even be out in public speaking on anything. I'm sorry, I had to say it for what it was. I was a big Migos fan. You know, Quavo just, I don't know, man. He owns some shit. Now I see why Chris Brown went after him. I do. I see why now. So let's all just remember that. You know what's funny? Is the last president, the vice president, not the vice president, but the last president, got shot and didn't say because of that person's bad actions, I got to put his actions on everybody else. See, that's not common sense. That's not what we do here. You don't use one instance and separate and use and hang your hat on that one instance versus the 1,000 other instances where things are not being misused. You know, that's just an overreach in government, and that's what I'm afraid of. And I think a lot of people are falling for it. You know, that's just a prime example. My friend died. We was in the streets. And my man's got his ass lit up. We need gun reform. 2 weeks later, I'm out here. A week later, same week even, I'm out here making a video, tossing my hands around like, you know what I'm saying? Like, I got a 30, and, you know, I'm out here spraying y'all. But I'm also screaming gun reform to the prosecutor. Like, somebody please just go slap the shit out of him. Please. Or just do, what does he need? Does he need a shoulder to cry on? I know he's hurt, but come on, bro. Come on. You had to know it was either you or him. Well, I will say Offset actually got himself a life and is out in LA, kind of just hanging out in the hills. You know what I'm saying? You don't hear Offset out here whining and crying about the streets, right? Talking about gun control to the prosecutor, telling on everybody, getting beat up by a singing, you know what? So that's what's going on this year. That's why I still bring this up every day until it's over. They use one example to paint a picture that it's okay to continue to strip you guys of your rights, but say in the same damn sentence that they stand for rights. No, they don't. They stand for a few. They stand for just a little bit of a few. Anything outside of that, it's not what they're about. Like the idea that we're going to go get a rapper who lost his friend when all they did was want to rap and sing and be in the streets and be somebody that they weren't. And then when shit hits the fan, they want to go crying to the prosecutor and the cops. And then they want to use that scenario of the fact that they're fucking idiots and don't make the right decisions and have no responsibilities as adults, right? They want to press that on y'all. And I know y'all are responsible. I know y'all actually, for the most part, y'all wouldn't, you know, act like a bunch of fucking retards. Just like, you know, even if you carried a gun on you. You know, you have that right to your last breath. And if something happens, you should have the right to protect yourself. Whether the government thinks you should or the government thinks you shouldn't. It's only up to you to decide. But that's what bugs me about this presidency and why it's important. It's so important. I mean, Christ, the guy gets shot and still says, no, it's not up to the government to tell you guys that it's time for gun reform. It's time for this. It's time for that because of one bad actor. That's not what we do here. That's not what we do. But that's what Obama does. That's what Biden does. They use 9/11 as an excuse to violate your constitutional rights. They use 9/11 as a reason why, or any reason why, the video I watch of a man, not just any man, but a Marine, which I'm sure it'll be up here still, right? I don't know if you guys saw this video, but this is crazy, bro. This is crazy. These cops sit here. This is crazy. He is guilty before being proven innocent. Or he has to prove his innocence. This is absolutely wild. This is Kamala. The state would pick this up. Kamala would fight for this. Which is crazy to me. I don't know if have you guys saw this video? Can I just ask if anybody is here? Has anybody saw this video? This is crazy. This is crazy.
Hey, good morning. Trooper Brown to that Iowa Patrol. How are you today? I'm doing great. Hey, the reason I'm stopping you, we have a special enforcement campaign going on. We're trying to educate drivers about violations they may not realize they're committing, but we're seeing a big increase in crashes out here. First, applaud you on your driving.
Fuck about it. Once again, using other people.
Really slow.
Did you see what happened right there? They used other people and they painted a picture to make it right for them to stop people, to stop you. That's not their like this is this is big government. This is government overreach right there. Either you did something wrong or you did not do anything wrong and therefore shouldn't be pulled over. Not just I'm going to pull you over just because you may or may not know about this, that, like whatever little thing I have made up in my head is not an excuse to pull you over and to waste your time and to drag you to court only to have it thrown out. Right? This is what I'm talking about.
Appears that you're driving, trying to drive safely under the speed limit. I appreciate that. I just want to talk about your following distance.
Oh, he was driving under the speed limit, and he appreciated that, and still pulled him over.
Especially around commercial vehicles. Came up behind a red and blue tanker truck, a little bit too close behind him before he made that lane change to go around.
So what is the dictate? What is in the book that says how far you have to be behind somebody? What dictates an opinion, or what separates the opinion of you might be too close or you might not be too close?
Around him, I know it's sitting over there. I was waiting for
like everything about this is already starting off. We're going to try to come up with every reason why we should be pulling people over, when in fact that's not it. Either they did something wrong or they did not. Not trying to catch it. Like this is the state going after you, and not just you, but your fellow citizen who is a member, right? Who is a productive member of society, who volunteered in pretty much, volunteered his life for your country and was served in the armed forces.
To give you room to get over there, because I know people like to jam you in that lane.
Coming out of there, and people are driving fast. So
yep, absolutely. Yeah, you got to navigate that, but a little too close to him before you went around him. Okay. As you passed those semi trucks and you came back down to make that lane change in front of that semi truck, too close. You were left.
So again, unless you have proof that he has to be 10, 15, 20 feet on either side of a vehicle, the assumptions won't work and are not a reason why you should be pulled over.
Less than a second in front of him when you enter that lane. You were only 1 second in front of him when you fully occupied that lane.
This is Kamala.
If something were to happen to you, man, that semi-truck would plow right through you.
This was her career.
We've seen a bunch of crashes out here just trying to educate people. You got your driver's license with you?
Yes, sir.
Awesome.
I appreciate you, by the way.
Yeah, I appreciate that, man. Do you have a registration card with you?
Well, it's a rental car here.
Okay.
So I do have my rental. If you don't mind, it's underneath here.
Okay, yeah, that's fine. Any weapons in the vehicle?
No, absolutely.
Oh, perfect. Yeah. If you can grab the rental contract, that'd be great, man. Do we get you on down? Lives up in Portola?
No, 2 daughters.
Okay. They both up in Portola?
Yes.
Come on over here, man.
All right.
You a fighter?
Am I a fighter?
Yeah, you got a tap-out shirt on.
Well, I've got a lot of training. I'm a retired Marine.
Okay.
Yeah.
Nice. What'd you do for the Corps?
Well, I was a data chief initially, but then they changed the MOS to cybersecurity chief.
Okay. When'd you get out of the Corps?
I got out about 2 years ago.
Okay.
Yeah.
All right. What do your daughters do, man?
My daughters? What do they do? Oh, I'm 15 and 13 years old. So they're
they're young.
Yeah, they're real young.
Okay. All right.
I'm moving into Texas, so yeah, I'm just coming down here and just looking for a place down in Texas. That's where I'm from. So
okay.
So the point being here, and you guys are going to see this.
We deployed, Joe.
Is that he has his life savings, and it doesn't matter why he doesn't carry money in the bank. Right? It doesn't matter why he doesn't trust the banks or want to put money in the banks. Maybe he's upset that the bank gets 20 times up to 90% of his money. They get 20 times that in leverage, and he doesn't. As a Marine, as a working class citizen, sure, he could open a brokerage account and get about 10. You know what I'm saying? But, the banks get all the leverage. So, he decides to keep it on him. But that's neither here nor there. Even if this was drug money, even if this was clean money.
Presence of.
Let's take it back to the beginning. Why was he pulled over again? Was it because they were trying to teach people? Was it because there was an assumption being made that he was apparently too close or too close, merging left and then back right again? There is no suspected of being too close. It's either he was or he wasn't. There's a definitive line that is supposed to be in the driver's educational book. Let's keep going because it gets a lot worse.
Understand why you don't trust banks, especially in this day and age right now.
Discipline and lots of savings.
What's that?
Discipline and lots of savings.
So with that being said, that's going on. So
that money right there is for my 2 daughters.
Okay. Are you going to give it to them on this trip or no? Or that's just your nuts?
My money and my two daughters' money and nobody else.
It doesn't matter. It doesn't matter.
If you want to call Bank of America.
You just said right there, you can call all the banks if you want. Because he gets direct deposit, and he takes the money out of direct deposit.
Would you mind standing with him real quick?
Watch this. This is where it gets fun.
I'm going to get out my scale on the way that the dog on the fence, you know.
Okay.
Those are all zeroed out. I mean, keep the minimum amount. It jives with this.
This is where there needs to be not reform on gun control, but reform on the government in and of itself. Right here.
10 yards in front of this car to probably about 10 yards behind that signpost right there.
Okay, just kind of that. You want to take photos? And then, pick up back here.
Now he's worried about how he's going to get back and forth, and to his daughters, to a hotel. And this is what I want to get to. I want to make sure it's not deleted here. Right here. Because...
Did we get photos of those receipts, do you know? Or
no.
Do we want to take those?
Yes.
Or?
We want to get photos of them.
Okay.
Because they discuss the fact that he hasn't done anything wrong. They discuss, and as they're discussing it, they're making up reasons why he could possibly be.
Those are all zeroed out. I mean, keep the minimum amount.
What's up?
I didn't know that this was 2 years ago.
No, are you going to run it or
EJ ran the car.
Okay, I'll have you run it.
Okay.
Look at this. All because...
Grappling, sparring, you know, obviously a lot of...
I think they go in there.
10-4. Can you have him come over here?
They're keeping him busy. You guys see how they're keeping him busy? So next time the police keep you busy, make sure you
come over and run it?
Yeah, if you want to.
Okay, he's on the other side of the freeway, so.
Actually, we can run it.
Just do it real quick.
Yeah, just do it.
All right.
Here it goes, right here. I want you guys to listen to this.
Okay.
I want you guys to listen to this very carefully. If they even have it. They might have this section right here. For whatever reason. It's so loud.
The area it's in, Sarge. I didn't see you placed it up there.
From about 10 yards in front of this car to probably about 10 yards behind that signpost right there.
Okay, just kind of the edge of the sagebrush there. Perfect. Go potty, bud. Go points.
It's when they go back in the truck. Step in the truck.
5250, will you log a second positive canine alert? Photos of those receipts, do you know, or
no?
Do we want to take those?
Yes.
Or?
We want to get photos of them.
Okay.
Yeah. Okay. Awesome. So you guys move like plus people. I would have lost my shit. No, not mad respect for people is cool. Cops aren't keeping no cool. They're too busy worried about what scenario they're going to come up with to find him guilty.
And he gets a G taken out for California.
Okay.
Exactly. This is the point. As a Marine, he should have been aware of the Constitution he served to protect. There's nothing wrong, and I hope you got a lot more than what there's Steve Stoke. See, I feel like this video is missing something here. Because they sit for 10 minutes trying to figure out what they're going to go after him for when he's done nothing wrong. Hashtag comedy.
Yeah. They come back in.
Can you put it in that bag with the rest of those receipts?
Yeah, this is missing because he wanted to get pictures. They didn't want him to get pictures. This is missing a lot, guys. Actually.
Do you want to photo that with your initials on it?
What about that means?
Okay.
VAO.
Where am I receiving?
Wow. This is missing a lot. Yeah, this is missing a lot. Wow, that's crazy. Because they sit there, and what they do is they figure out, there it is, right there. I think that's the one. 24, and this one's 28. Yeah, so there's pieces out. So the pieces that are out are actually
Any large amounts of United States currency in the vehicle? How much money you got in there?
See? Yeah.
Okay.
This marks the very moment when police pulled over.
Do this.
Large amount of cash in there. Is he? That's okay because I got my receipts in there too. So. How much cash? A lot. Hey, he said there's a large amount of.
But a big bundle of money says probably a.
And it's money that I have earned from my employment.
Along with their requests, the deeper the hole he has dug for himself will grow. Now that Stephen is aware of his rights, Trooper Brown can finally begin the questioning process.
Personal purchase. Is it going to be used for any of those, or is
That's crazy. The video.
Having
cut it
finished
out.
questioning Stephen, Trooper Brown asked Trooper Tumanovow to hang out with Stephen so he can share his findings with Sergeant Rigdon.
And these balances never. Got no balances in it.
Stephen still manages to keep. Despite Stephen's to share his opinion on the matter at hand.
What are your thoughts, Chris?
Right here. See this.
kind of leaning more towards it's odd, but
It's not odd.
It's odd, but it's not packaged
it's
like
not,
normal.
no. And he's answering the questions. There's receipts here, and
I would
even though
like to put the dog on the currency, man.
Okay. Yeah, I mean
Then
everything.
it gets
everything
worse
as odd as
because
it
they
is,
sit in
Soon,
the truck
sheriff arrives and is
and
caught
they
up
try
on the
to figure
situation.
out where and what it is that they're going to charge them with for not doing anything. It's crazy. It's crazy. Hashtag Kamala. Hashtag we need gun reform because a bunch of idiots out in the streets want to act like idiots and think that the rest of the United States citizens do things of that nature. That's just my point. I'm sorry. What's up, Mo? I just couldn't believe it, bro. I just saw that video not too long ago, and I'm like, are you got to be kidding me? I sat there and watched these guys try to come up with a reason on what they're even going to, like, come up with to make it, like, what are they going to do to fill out the paperwork? Why did they stop him? Why are they taking the money? This, that, and the third. Why is he guilty? They're trying to come up with reasons why he's guilty. It's fucking crazy. Hashtag Kamala. Mo, how you been, bro? I've been alright. 2 trades today. Lumina and Shopify reversal. We actually nailed that Shopify reversal. I didn't get much profit on there. I got a nice chunk of profit on it, but we got in these. I think we top ticked these options. Excuse me. We top ticked these options at 71 cents, and they were about $1.40, $1.30 just back to VWAP. So it's been a 2 for 2 day for me. It's been an alright day. Now we'll figure out. So there was the Qs. There was that rejection off the Qs. I'm not sure if anybody was able to take that 445.50 rejection. I think you should have room down to. You remember that pivot low where we gave out the long yesterday on the SPY, which would be 439.85, 440 on the SPY or on the Qs. See if we can't get back down into that area. Damn, I can't believe the SPY is still going. And it's still green right now. Yo, if this thing really gets going, we could really have a big down type of day. This sucks because I was like, man, if we can just consolidate today, I would love to be able to take a position tonight into tomorrow and take advantage of like volatility getting kind of whacked, I guess you could say. There was something I wanted to say too. I'm not sure if many people know this, but I would just take this into consideration. Shit, I don't know when Mo did that because I didn't have it on live. Shit, I didn't have the chat on live. I don't think you guys can check. Your guys' brokers might be. But if you don't know, I don't think your broker is FDI insured. So be careful if you guys noticed how things were acting up this week with so I don't know if some of you guys know this, but a lot of after hours trading was halted, not just Monday, but also Tuesday. And I think no, not Friday night. Monday morning and Tuesday night, and Monday night into Tuesday. Let me see. No, Monday. Hold on. No, Sunday night and through Tuesday. Sunday night through Tuesday is when I think it was. And last night they cleared it up. So if you start seeing issues, guys, or noticing things change, like weird things, like for instance me, I've noticed that when I went to transfer money, there was an abnormal amount of time that it took to clear. And it's never, out of all the years I've been doing this, it's never did that. And I'm tying that along with the trading that was halted, or like they just stopped trading, and whatever orders either got filled or they weren't getting filled, and you could not place trades Sunday night all the way up until You know, I guess Tuesday there were still some issues, but, you know, so something's definitely going on underneath the surface, and I don't know if it's because the banks are slowly running out of money or they're tied up into treasuries. So you could have a scenario where, let's just say, Morgan Stanley, TD Bank, Charles Schwab, or any of these, right? Anybody, maybe the clearinghouse. They had a bunch of treasuries that they're down on and are running out of liquidity. And as people start to lose their money in Robinhood and things like that, they need to come up with liquidity. And how do you come up with liquidity? Well, you could have bonds that are gaining interest for free. You know, when you take a large sum of money and tie it up, I don't know the ins and outs of what leverage banks have, but maybe they have leverage on, maybe they have a bunch of cash that they put in the treasuries, and then they're able to margin the amount that they have for treasuries. I don't know. I'm just saying, be careful, because it feels like things may have calmed down, but your brokerage is not FDIC insured. So not only if you have 10 grand, but $500,000 to $1 million, just understand that if your company goes under, there could be a chance that you do not get your money back. Just understand that. Okay? Let's just look it up right now. Are brokers FDIC insured? Not equals. While bank account balances are insured by the FDIC, investments in a brokerage account are covered by the Securities Investor Protection Corporation, SIPC, which I've heard of. It protects investors in the unlikely event that their brokerage firm fails. However, certain rules and conditions do apply, and investment earnings are not insured. Okay, let's see here. Are brokerage funds insured? Or I'm sure they are insured, yes. But so some people may not know this. The problem that you had in 2008 was that everybody that was insured by the same company, AIG. And that's the other half of the reason why the great financial crisis started, because everybody, Lehman, JP Morgan, everybody, Morgan Stanley, Bank of America, Wells Fargo, they were all insured under AIG. That was the other problem. So when the bricks fell, it wasn't like some of the bricks that were falling could be picked up. No. Done. Dunzo. So, or either they were insured by a company, but those insurance companies all routed back to AIG. I'm pretty sure that's what it was, is that all of their insurance companies were routed directly right back to AIG. And that was the second half to the crumble in the GFC. So 10-year sale indirect bid. Let's go see here. Yields are popping, I think.
22. 18%, the most they've taken since April of 24. The only metric that was above its 10 auction
so
average
terrible
just
watching
barely
that video
were
of that guy
indirect
get his
bidders.
money taken.
Direct bidders were light.
So crazy.
As I said, pricing was hugely
Once again,
weak. You now look at a 10-year, you can see that the yield has
guilty
moved up to the highest yields
before,
of the day.
like,
on that
you know,
3-day
guilty
chart, what you really need to
having to
notice
prove your
is
innocence.
3.66, which is the intraday low on that wild Monday. And here we sit. Just a handful of basis
and what's
points
funny
away from
about that
4%
is that
and
just because they don't make
that
100,000 doesn't mean that 100,000 is a lot of money, or someone else shouldn't have. Just because you sign up to be a police officer, right, or have a career that doesn't include actually making a buck, like a real buck, like some real money, doesn't mean that other people don't do that and other people don't save. So if you see somebody with 100 grand, 500 grand, I mean, $1 million, you know, just because you don't make it doesn't mean someone else can't go out there and do it. Doesn't mean that it has to be illegal. Because, again, remember, the government just issued about $7 trillion that just got put out there in the last 3 years. There's a lot of money out there to get.
Indeed. Rick Santelli for now. Thanks.
Granted,
As I turn back to Andrew Cizarowski here, who's looking at the bond market for opportunities.
All right, so here's a 10-year note, 3.9.
What we're learning on the issuance side, Andrew, where would you say that they are?
Huge down day. Wow.
Look, I think that, as Rick mentioned, that we had a weak auction here.
Wow.
But I think
Very
there's still
weak.
tremendous value in the bond market, but we've also
The
come
Fed's
a long
coming
way in
to
a
the
short
rescue.
period of
Nobody
time.
wants
We've had
that shit.
The 5-year Treasury rally almost 100 basis points from where we were at the end of April. That doesn't mean there's not value in the bond market long term. We just had a big narrative shift over the last couple weeks. We went from
and we were long
everyone
that
pricing
narrative
in this
shift.
very soft landing to
That's
all
exactly
of a
why
sudden,
we went
people
long.
have to price in some probability of a less than soft landing and a Fed that maybe at the end of the day is not just going to end at neutral, that could be ending below neutral. So I think that's where the value in the bond market comes.
Watch for this
but
pop.
The value in the bond market doesn't just lie in your...
This is the level we have to watch for a bounce on the SPY. If this breaks, then you're looking for then you are looking for like 520, 519. If you do not bounce back here. So look, you popped, pull back, you're walking it up, right? You see how buyers are stepping up? So what do I mean by that, right? This was earlier. I don't think anybody was here. But look, buyers, they step up to hold 510. Okay, it rallies. You hit 524. You pull back to where? 514. So we just went from 510 to 514 in that amount of time. You're seeing right there, buyers are stepping up, willing to pay more. Let's do this again. We rally. 524, 523.50, 524. Pull it back. Bang. Double bottom once again. Buyers stepped up. Where this time $4 again. So 510, 514, 518. Buyers held it up. Rally, and you rallied through 524. Pulled it back. Buyers did not have to step up or down. They just held their level. It rallied again, back, tried to get through the 100-day to make progress. Couldn't do it. Question is, do we hold 522? That's $4. Remember, 510, 514, 518, 519, whatever. It's a wick. So 518, I'm going to say 518. 19, 20, 21, 22 would be $4. That would be right here at Monday's pivot high, right there. 521.87, 522. We got to hold this level. Watch 522. See if you can step it up. And what I would look for is a bit of a reversal. And now you're going to start seeing, especially on a 5-minute, or not a 5-minute, but a 15-minute and a 4-hour, that your trade line in VWAP. Look at VWAP. It's all the way up there at your 100-day moving average. Pull up the hourly chart. VWAP is getting pulled down, or 90 MA is getting pulled down, so this should start to, we should get a bounce here. I think we should get a bounce here. Kind of crazy that we didn't. This could seriously get bad. And look at that. Let's see. Damn, we did not hold it. Wait, no, 522. Yeah, right here. 522. 522. 524. Now the question is, do we start to put in, like, look at this. This is weird. I'm going to play this stuff. I'm going to look at some of these things here. We got to bounce back.
That's where we find Leslie Picker in her
I'm not sure if anyone else has any thoughts on
in her hometown of
this.
Kansas City for an exclusive. And I'm sure there was some. Are you on the? I was going to say, is this some Mahomes at a football as soccer? For your interview with J.P. Morgan Chase Chairman and CEO Jamie Dimon. Take it away.
Kelly, there is no place like home, especially when we are
really wish
here
we didn't
on
move
a
that much.
soccer stadium that the Mahomes co-own, actually, that JP Morgan finances for the women's soccer team, the Current, here in Kansas City. Jamie, thank you so much for being here. This is your 14th annual bus tour. This time you're visiting 6 Midwestern states. What are your key takeaways so far?
JP,
First of all,
give it up for
everybody.
JP.
Good to be here, and you know, America's alive and well. There's entrepreneurs everywhere. People are optimistic. They're growing. They're expanding. And you know, it's quite uplifting to travel through, you know, the heartland and see all the wonderful things that are taking place here.
And Kelly mentioned that you have a branch strategy where you're opening more in the Midwest, more in smaller cities, more rural areas, in order to have more reach for the U.S. population. How does that play a role into this year's bus tour?
Yeah, it does. So I was so happy we can go from 28 states to 48. So we're now in all 48. And so we're opening, in, you know, here I think we have almost 40 branches, and we started only a couple of years ago. But we do have a new strategy, effectively, about rural, which is be in every state to be within, you know, a drive called 15 or 20 minutes of 50% of the population. So to serve more, what we call the rural community. But I think for the person on the TV, to also understand, it's not just the branches, because people focus on that. We go in the branch, we come in with small business, mortgage, auto, credit cards, Chase Wealth Management, 25% of the branch in LMI neighborhoods. We bring in private banking, commercial banking, real estate banking, investment banking, and then we also bank stadiums, sports, governments, cities, states, schools, hospitals, and we bring in all the things we do for the disadvantaged community, the Black community, the Hispanic community, the LGBT, other communities like veterans, disabled, jobs. So we bring the full force of JP Morgan into a state and a city. And it's just wonderful to watch, and you know, we're just part of we make the investments that create the jobs, that help the business create the jobs that build communities. And so we're just part of this wonderful American economic ecosystem.
Well, speaking of jobs, this has been a pretty remarkable week in the markets where we've seen exceptional volatility. What do you see as the key driver, and do you think that volatility continues?
Yeah, you know, markets fluctuate. And I think people overreact a little bit to the daily fluctuations of the market, and sometimes it's for good reason, sometimes it's virtually no reason. And you saw this one, it came way down and went way back up, and you know, but people are projecting, and when they project forward, it affects the markets. You know, we don't know if there's going to be a soft landing, a hard landing, and all the things in between. You know, I've always been a little skeptical that it'll be soft. On the other hand, I'm hoping it's soft, and so you'll see this go up or down. But the important thing I always tell people, it's a little bit, you don't know what it's going to be, and as a business, you got to be prepared for all different potential outcomes and just invest continuously. And you know, whatever happens, American society will get through this easily. Other than the geopolitics, I know we're going to speak about a little bit later. And you know, I was with Warren Buffett yesterday, and we always talk about the resiliency of America. It is extraordinary, and it's in these towns. It's in the universities, it's in the businesses, it's in the governments. They're always looking for ways to improve our lot in life.
Now, you mentioned kind of the probability of a soft landing. I know that last time we sat down about 6 months ago, back in February, you pegged the odds of a soft landing at about half of what the market was pricing in. The market was pricing in about 70 to 80% at the time. So by that math, you predicted about a 35 to 40% chance of a soft landing. Given what we've seen with the data, the jobs report last week and some of the other data in the last few days, do you still expect about a 35 to 40% chance of a soft landing, or do you think it's
Buy's just
less
getting
than that?
hammered, guys.
About the same. You know, I mean, first of all, it's always good to look at the odds of what you think as opposed to like get set.
Watch this level here and watch for bounce back rejections.
And, you know, there's always a large
at
range
524.
of outcomes, and we will all get through that.
523.75.
You know, and so I'm fairly optimistic that we have a mild recession, even a harder one, will be okay. Of course, I'm very sympathetic to people who lose their jobs. You know, you don't want a hard landing, and so. But there's a lot of uncertainty out there, and I've always pointed to the geopolitics. I also think the deficits, the spending, the quantitative
Nvidia has room to 100.
Cause,
the Qs, if you can get a bounce.
So we'll have to wait and see. You know, does inflation really get back to 2%?
You want to bounce back,
I'm a little bit of a skeptic on that too.
435.
I don't look as much at the short-term data.
You're taking my trade for tomorrow.
Things that are inflationary, but are in the future. Deficit spending, green economy. remilitarization of the world, and they haven't really happened yet, but they are going to happen, and they're not deflationary.
Given that prediction, I know that JP Morgan economists are expecting now a 50 basis point cut in September and November and 25 basis points thereafter. Do you think if the Fed were to do that, it would be a mistake given some potential enduring effects of inflation?
Yeah, I mean, I hate to say this, I don't think it matters as much as other people think. The rate effect itself isn't that critical. And obviously, psychologically, there'd be a lot of chatter about what does it mean? What are they thinking? Are things getting bad? So, and maybe that psychological will affect the economy. But I also remind people every day, 325 million Americans go to work, go to their jobs, take care of their families, take care of their kids, build out their house, change a job, and it could be affected by the Fed changing rates by 50 basis points. I don't think so. So if they do it, I'm sure they have good reason to do it, and I'll rely on with their instincts. So I do expect they'll probably do it soon, but they've seen more negative data than they had expected. But it goes back to expectations. All the expectations have been wrong too. So just always keep that in the back of your mind.
If they were to cut by that magnitude, though, does that risk more of a stagflationary environment, which is something you've been warning about?
No. No, I mean, stagflation would be a recession with a little bit of inflation. So I think what they do in the short run may or may not directly affect that. Obviously, all things being equal, it reduces the chance or the depth of a recession, but I don't know if it affects really what might happen down the road in terms of stagflation.
One of the big concerns that the market has is the state of the consumer, and you have an unparalleled look where you sit at JP Morgan Chase on the health of the consumer. I know that you've been setting aside an additional $2 billion reserves this year for credit card in particular. What do you see with regard to the health of the consumer, and does that credit card reserve build indicate that maybe consumers are a bit more stretched and are spending more on credit?
Yeah, no. So the consumer, first of all, there's a lot of data out there, which even anyone kind of get. We gave $6 trillion out during COVID and another $4 trillion out after COVID in terms of deficit. It ended up in people's pockets through multiple programs, PPP, EIDL, some went to states, some went to cities, and that money ended up in checking accounts. On the consumer side, think of their checking accounts doubled. Since then, they've been spending it down. Even when it's done being spent down, it doesn't mean it's recessionary. It just means that if they have to go back to prior spending, it'll drop the GDP a little bit. But what you've seen in the market with consumers, the bottom 50% of income, they've spent it down. So they're doing what we call normal behavior, substitution. If they have an extra expense, they might do a gig job for a weekend, do something cheap or less going out. The top 50% still have some extra. That extra will probably be gone at the end of this year, but they're still spending it, travel, restaurants, entertainment, things like that. So, but we don't know. But the credit card losses and other losses, they basically normalized. That's all it was. They were they were normal would be 3.5% credit card losses. I would have told you the lowest they're going to get would be 2.5. They got to like 1.75 or something. They've normalized. But having normalized doesn't mean they can't go worse from here. But there it depends on jobs, confidence, jobs, and so you watch the job numbers. Unemployment basically drives a lot of the underlying consumer credit. And remember, the consumer has a lot of value in their homes. Stock prices are up. Jobs are plentiful, and wages have been going up at the low end, which I think is a very good thing for the people at the low end. They didn't get a pay raise for 30 years. So I know a lot of business people look at that and it makes it harder to do business, but I think it's an important thing that we try to lift up incomes at the lower end too.
And in your estimation, a normalized credit picture does...
Do you hear that? I say it all the time. Raising the standard of living for others. It was literally what he was just saying. He said it may not be good for business, but it has its prolonged effects. Raising the standard of living for others. I always talk about that.
VP for each of the major parties. Do you think both of those tickets would heed that advice?
I don't know, and I hope they do. I hope everybody does. It's in the middle, kind of what got me going at all is in the middle of a book about Ike Eisenhower, written by his granddaughter, who runs the Eisenhower Institute, about how Ike led. And it goes through. He got the most professional people, the best and the brightest, experience from everywhere. He had people in his cabinet from different parties, and he wanted to get policy right. And he made them work, by the way, kind of like a business. Like, let's get the facts, let's do the analysis, let's figure out what policy that actually works. He also met with the opposition leaders, it said, weekly, for lunch or dinner, which I think politicians should do. You know, you and I disagree about any issue out there. I still would like to sit down with you and try to understand you, your family, your goals, your objectives. You aren't immoral because you think something different than I think. And you know, democracy by its nature is compromise. So get the best people, figure out what you can get done. It's not about you. It's not about party. It's about country and constitution. And yeah, I hope that is. I hope other voices come behind and support the idea that that is what politics should be doing. It's become a little bit, not for everybody. A lot of them are that way. When I go to D.C. When you see people on TV, sometimes it's Michael Johnson calls them the show horses, not the workhorses. But there are a lot of workhorses there who want to get stuff done. And then maybe they need a little help to get citizens to say, no, we'd like to see you compromise. We want to see you sit down and come up with programs for education and immigration and taxation and regulation that will foster a healthier America.
Exactly.
Ike Eisenhower from Kansas, just across the river here. But in the op-ed, you wrote, quote, a president should put the most talented people, including those from business in the opposite party, into their cabinet. If asked by either cabinet, would you serve in their cabinet?
I love what I do. I mean, I get to do these bus trips. We lift up consumers. We lift up disadvantaged. We lift up businesses, schools, cities, states, hospitals. This is what I love doing. This is what I am going to continue doing.
In your latest Investor Day, though, you did say that the timeline is no longer 5 years, indicating that there is a shorter timeline by which you would potentially leave the firm.
Well, eventually I have to leave. I mean, I know that. We got great people out there. We have a hit-by-the-bus successor in Daniel Pinto. You know a lot of the other people and how exceptional they are. When I say exceptional, it's also their heart, their curiosity, the respect they engender from our employees, from our customers, which I feel great about. But even when I'm done with CO, I might be chairman for a year or two. It depends, totally up to the board at that point. So I have a while to go before I'm out of the company. And so I am just so proud of the company. It's amazing what it does around the world.
Former President Trump said that he would consider you if he were to win as Treasury Secretary. Is that something that you've had discussions about? Is that something you would consider doing?
I am very happy what I'm doing. I could say it over and over, but I'm very happy doing what I'm doing.
So that would be a no to President Trump if you were called. You notably did not endorse a specific candidate in this op-ed. Is there one side that you are leaning toward this election cycle?
He's the CEO of the biggest bank in the world.
And if I am going to do something like that, I will do it and explain to people why.
Guys, we could look for a possible long here on the Qs, and let's see if we can go back. Like, you have this whole area of price action from like 439.50 to 445. Let's see if we can take a long there.
On your operating committee,
I'm going to go even smaller because I'm not giving any of my money
AI
back.
That are being deployed at this point in time.
I'm putting myself in a predicament situation when I think this market
for 10 or 12 years, and we had
could very well pull back.
The technology's changed
I was
the world.
just
I mean, it's why we're living
a
longer.
little upset that the market decided to do this right now when I thought we could consolidate for a little bit, then roll over. I just never got the opportunity to put it on. But I do still plan on trying to put something on because I've earned that right today. I've made some alright money. I can buy a few contracts both ways. That could turn into a couple $100 on each contract.
People, 3,000 people, 4,000 people, and it's AI/machine learning and data. And inside the company, every part of the company has a mirror. So credit card, consumer, sales and trading, commercial banking, investment banking. So, and they are deploying AI pretty much at scale for risk, fraud, marketing, customer service, errors, offers, and it's just going to get better. And we want to make it great for customers that they are really being treated properly. I think everyone's going to have like a co-pilot on your shoulder. You're going to have one. You wake up and you're going to be told that someone gave a speech, or here's what you should think about, and here's the weather and the drive-in, and here's all these various things. It'll take notes for you, so if you're interviewing someone, you don't have to take notes, and it may prompt you to say, ask about X.
That is pretty
And so
sick.
everyone will have that. It may very well reduce some jobs. It'll increase other jobs. Just like cars did that, and the steam engine did that, the internet did that, so society will be better off. You know, if for some reason, and I do think it'll be regulated, and obviously we'll all have to, and hopefully it's properly regulated, but and they should make sure we protect, particularly from things like misinformation. I think there are things which are quite dangerous for society, and we should be very thoughtful how we deal with that.
Misinformation and fraud, of course, within the banking system.
Well, yeah, and we're very good at that. I mean, we're experts at that, and we use it for fraud. In fact, some of these fraud costs have been coming down over time, and we do a million things to try to stop all that kind of stuff. But I think the biggest one in the immediate would be political misinformation. So, like near the end of a campaign, fake ads, fake people, fake statements, fake news, trying to throw a state one way or the other. We have to be
But
very
it's okay
careful
to
about
lie.
Yeah. Very
Is it
important.
okay for
as we had mentioned, you've been traveling the country.
Is it okay for a politician to lie? You want to regulate fake ads, fake this and that. What about regulating fake lies from the actual party? Like the same party that says inflation's going down.
I think all the people
Inflation
should
is still
take bus
green.
trips through Middle America to
It's
understand
still
where these
going
people
up,
are, how they
not
think,
down.
and
It is
what
still
they're
positive.
doing, and they're not. You don't get this terrible view of America. It's unbelievable. You
That's
visit
the
this company
misconception I
RGV
think a
with
lot
me
of
today.
people have.
They're building trucks being used in construction sites, etc. They're profitable. They're going to expand. It's unbelievable. And they're just two guys who started this. I think they said in 2015, and so it makes you very optimistic. However, it's not one America. I would acknowledge, in my op-ed I said we should acknowledge the flaws. And the flaws are extensive. Affordable housing, immigration, certain regulation, work skills. You heard it today. How it's important to get these kids out of community colleges with certificates that count for college degrees, that give them jobs making $65,000 a year. But if you want to look at the part of society who didn't do well, take the bottom 20% or so who earns less than $20 an hour. Their incomes didn't go up for 20 or 30 years. And you're not going to fix that if we're just yelling at each other. And they also, by the way, are dying younger. Their health is worse, more suicide, more drug problems. And they're the ones who have to deal more with crime when they go home.
Preach it.
They're the ones whose schools don't work as well. And I remind people, we, as society, should look at that and say, yes, there's a problem, and what are we going to do about it? We being as individuals, as companies, as government. But to fix that, I think it's fixable. And I mentioned the thing about earned income tax credit, work skills. There are pieces.
You know how you can't fix
if we
that?
have the right policy, not misguided policy, not slogans, but actual policy on the ground that works. And one of the great things about these bus trips is you see
saying that companies that make a lot of money that don't pay taxes need to pay their fair share, this, that, and the third, because we want to raise more money for war. That's not how we get there.
Somewhere else. And that's what we need to do. And it's got to be done locally because, we don't have an EV company in New York. We have coding, we have compliance, we've got financial management. Everywhere you have things like coding or cybersecurity.
Just think that
there are solutions.
some big company is not going to get away with paying zero taxes.
And the other thing I point out, it's got to be collaboration.
Could they pay less?
I mentioned Detroit. A white mayor in an 85% black town wins on a write-in vote.
The government on average has 5 separate, it taxes the same company 5 separate times in five different ways. Employment, ownership, the company themselves, through the things that the company buys, and there's another one there. God damn it. I can't think. So just remember that when the next time somebody says, or a government official says that companies don't pay taxes. And then ask yourself, even if they did or didn't, what did the government do to deserve that? And what's it going to be used for?
Ford and one Stellantis. That's 50,000 jobs, not just in the plant, but which supports the plant. It works. Collaboration works when you have actual policy that people work on together, and then you modify it over time when it's not working. So, I think we should all be doing that, and we can lift up all of our society. That will reduce, I think, some of the anger, and it'll reduce some of the legitimate anger. So if you're some of those folks, you can look at this and say, this has been unfair, and we need to fix it.
This seems like a much more optimistic Jamie Dimon on the heels of this bus tour today. I really appreciate your perspective on the macro environment,
you know what
on the
this
bank
reminds
itself,
me of?
and the market volatility we've seen this week, as well as what you've learned so far on this tour. Jamie, thank you very much
He's on a
for being
bus
here. Jamie
tour?
Dimon,
What the hell
the
is he
chairman
doing?
and CEO of JP
Is he on some weird? Is he
Kelly,
into
I'll send
some
it back
weird
to you.
shit now?
Leslie, just to make sure before I let you go, I think he said no recession right now, but did he say we're in a soft landing, or he just hopes for one?
Did he do it?
He said no recession right
This
now.
is what it
he
reminds
said that
me of.
could be in the cards in the future, however.
I agree with you, though. I think he's a little more upbeat. I don't know if it's...
Look at this. This is exactly what that bus trip reminded me of.
I wanna go out.
I'll take a shirt. Are you
Is
coming?
is
if you'll
Jamie
have
done?
me, yes. Heck yes. Really?
And when they feel a breeze in a room with all the...
Oh my God.
Oh, what do we... You guys are young. That's great.
That's exactly what I thought about with that, with what CNBC just showed the whole time as it was playing. Jamie Dimon going on the bus trip he wished he never stepped foot on. I wonder if that's where they got the idea from.
Welcome back to the exchange. Remember the post-pandemic pent-up travel boom? We'll take a look at shares of Airbnb, which are one of the biggest laggards in the S&P today, having their second worst day on record, down almost 15% after missing earnings estimates and giving weak guidance for a third consecutive quarter. The company is warning of slowing demand from travelers, and they're not the only ones. So as much as we want to pin this on potentially high costs at Airbnb, look at what's going on with TripAdvisor, down 13% after missing revenue expectations. On the call, executives warned of demand headwinds in July and expect that to continue for the rest of the quarter. As a result, they now forecast third quarter revenues to be down to flat versus their prior estimate of up 5%. And Trip's just the latest travel titan to sound the alarm of a pending slowdown. MGM Resorts warning that Formula One's Las Vegas Grand Prix in November may be a headwind for the city in Q4. Wyndham cutting its full-year revenue forecast. This morning, Hilton giving weak third quarter earnings guidance and slashing its third quarter revenue forecast as well. Hyatt also gave that weak full-year profit outlook, and Marriott's third quarter earnings guidance fell short of the street's estimates, which brings us back to Airbnb. As we just mentioned, they now expect revenues of about $3.7 billion at the midpoint of their range and well below the street's estimate of $3.84 billion. Here's one more takeaway for investors. Every single lodging company that's reported in the past 2 weeks, according to BofA, has cut their outlook for the key metric of revenue per available room, or RevPAR. Pair that with the poor earnings guidance of this earnings season, and it paints a pretty bleak picture for the travel industry for the rest of the year. One of the places, Tyler, that was supposed to be a big beneficiary of spending right now.
Yes, more and more companies sort of getting tentative with their forecasts for the future. Kelly, thank you. Let's do a CNBC update now. In a pretrial hearing today, attorneys for the alleged 9/11 conspirators at Guantanamo Bay claimed Defense Secretary Lloyd Austin violated military rules in stopping a plea deal that would have spared them the death penalty. Secretary Austin defended his decision on Tuesday, saying he believed the American public and the families of the victims deserve the chance to see the trials carried out. The NCAA announced a 4-year sanction against former Michigan coach Jim Harbaugh for recruiting violations during the COVID pandemic. The order applies if he wants to return to college coaching. Doubt that will happen now. Harbaugh left Michigan after last season's national championship to coach the Los Angeles Chargers. And more than half of current homeowners believe making improvements or repairs are a good reason to tap their equity, such as a home equity loan or line of credit. Americans held nearly $33 trillion in home equity as of the end of the first quarter of this year. That was a record amount. A new Bankrate study also finds that homeowners consider debt consolidation as a top reason to tap into their home equity. Kelly, I'll see you in a few minutes.
Tyler, thank you so much. Tyler Matheson. Let's get a quick check on the markets. As mentioned, the Dow has given up a hefty gain of about 300 or 400 points to turn briefly negative top of the hour after the 10-year auction went quite poor in terms of demand. That is sending yields back up, the 10-year back up towards 4%, putting some pressure across the equity space. The Nasdaq hanging on to 1/3% gain right now. The Russell 2000 is lower by about 0.5%. Meantime, venture capitalists have prominently come out to support former President Trump, at least until recently. We're now seeing a call to action on the Democratic side as well. Megan Casella is here with the very latest. Is this after the VP announcement, Megan, or is this kind of going into that?
Going into that. So this actually started about last week, not too long ago, but before the Walls pick was final. This is a group of more than 800 venture capitalists and tech leaders who are organizing to throw their support behind Harris. Collectively, they represent about $280 billion in assets under management. The investors involved signed a pledge saying they're pro-business and that they support democracy. That's what they say is at stake in November. Their goal is partly to raise money, including with their first fundraiser via Zoom today, although their fundraising target is a modest $5 million by Election Day, so not huge. Their bigger focus is on sending a message. The group's founder, Leslie Feinzig, told me she felt like the narrative this election cycle, that Silicon Valley was backing Trump, that didn't represent her or most people she knew. Now the response has become what she called a, quote, accidental movement. It's the biggest show of force we've seen so far from Democrats in Silicon Valley. Mark Cuban, Ron Conway, Vinod Khosla have all signed the pledge. Mike Moritz of Sequoia has not, but he did write an op-ed this week saying that Trump backers in tech were, quote, making a big mistake. So this is all, of course, a direct pushback to the pro-Trump camp in the VC world. That's David Sachs and Chamath Palihapitiya. They hosted that big fundraiser in June in Silicon Valley. While Mark Andreessen and Ben Horowitz, they're both donating to PACs supporting Trump. So, Kelly, it's kind of interesting here. We can see this tug of war developing. The pro-Harris wing felt like the pro-Trump wing was gaining traction, and now they're pushing back.
Does the VP pick factor in at all here with Walls? Because he was more bipartisan guy when he was in Congress. As governor, he was seen as much more progressive, and I don't know if that sends a few more chills down the spines of some of the business folks out in Silicon Valley.
What I would describe it as, from talking to donors and talking to a lot of the prominent Democrats here, is maybe mild disappointment among many of them that it wasn't Josh Shapiro, who's more moderate, but not really signs of catastrophe. They feel like any pick would have been good. They actually quite like Harris herself, and so they sort of feel like they recognize that Walls was chosen because he's going to be the attack dog. He's good for campaigning, and they're not as worried about his policies.
Interesting. All right, for now, Megan, thanks. Megan Casella. Tonight's VCs for Kamala is hardly the only high-profile virtual fundraiser for Harris to date. There are 4 that made national headlines for the volume of people who participated. You've probably seen some of the images, and the amount of money that was raised, the largest coming in at 200,000 attendees and $11 million. And the platform of choice, Zoom. Once a pandemic darling, the stock had been struggling, but my next guest sees this election cycle as a tailwind. For more, Matthew Harrigan covers telecom and entertainment at the Benchmark Company. He joins us now. Matthew, first of all, maybe I'm naive. I didn't realize Zoom could have 200,000 people using it at once.
Yeah, it's wonderful scaling when you consider that it's a symmetrical two-way. I think it really gives people a very strong sense of participation, technological sense, but also in a social sense. See, no matter where you are on the partisan spectrum.
Does Zoom make money off of Zooms of that magnitude?
It isn't something that's certainly going to adjust your quarterly earnings number, but I think it really creates a halo in terms of fostering not just the video side, but their expansion into unified communications and really AI and providing alternatives to Microsoft Copilot and all that in concert with the video offering. And so it's certainly good publicity.
This is really unique. I mean, going back to July, as you cataloged, They had a Win with Black Women event with 44,000 attendees, a Win with Black Men event, 53,000 attendees, white women answering the call, 200,000 attendees, white dudes for Harris, 180,000 participants. Can this only happen on Zoom, or could things of this size take place on a Google Meet or a Microsoft Teams? Or if that's not the case now, could they, at some point very quickly?
I think when you're trying to reach a mass audience, Zoom is preferable because it's more user friendly and it's really a catchword like Kleenex or Clorox or something like that when you're really trying to get people on. The 200,000 was actually a record for Zoom, and also you talked earlier about a 5 million VC funding goal by election day. These events, I think you left off Cat Ladies for Kamala, which I thought was the most clever one, raised almost $20 million. So, this is really a nice lever for the Harris campaign.
And I do see the parallels, as do many, between how the Trump campaign used Facebook in 2016 quite effectively. And you fast forward to now, we thought maybe TikTok was the lever to pull, but it turns out Zoom could actually be one of those new technologies that they can, either side could use to their advantage. I guess the final question, if you don't think these events per se help Zoom make money, they just become part of the kind of the association with the term, Google it, host a Zoom, whatever it is, it kind of just keeps it entrenched in our everyday usage?
Well, I think it definitely attracts more users, particularly on the internet side. So I think in the long term, you do make money. I mean, it's not like you can that they're making money off the specific event, but it really brings it back to Zoom, and helps the casual consumer side, the user, as well as the corporate side, where they're really starting to make inroads on the UCaaS side. We incidentally had a hold on this during the halcyon days during COVID, upgraded it when it was below 100, and I think it certainly should have upside to 83, I think, over the next year or so.
All right, well, I'll be curious. I don't know if they have to spend more on server capacity if we start getting dueling 400,000 person, events, but we'll see if that comes in the weeks ahead of us. For now, Matthew, thanks. Appreciate your time today.
Thank you, Kelly.
Matthew Harrigan from the Benchmark Company. $83 price target on Zoom, by the way, says it's a buy. Coming up, a look at the growing number of AI founders fleeing their startups and what's driving it. We're back in a moment with that story.
Jim.
Welcome back. We learned about that major leadership exodus over at OpenAI as top talent, including 2 co-founders, announced their departures in just the past few days, part of a trend that could spell trouble for some of AI's most touted startups as talent leaves for established mega caps. Deirdre Bosa is here with more details. What's going on here, Deirdre?
Well, put simply, Kelly, these startups are struggling to find viable business models and they are burning through cash. That's not new. But what we are seeing is many of those founders going to well-capitalized mega caps. It's a way of getting a cushier gig at companies with existing product and revenue that are also at the forefront of the AI arms race, except now instead of competing with them, they're joining them, and that is making the incumbents stronger than ever. This week, you also saw Character AI's co-founders and more than 24 researchers go to Google. It follows Inflection, a startup that was valued at $4 billion that earlier this year saw most of its staff decamp to Microsoft, including its co-founders, both of whom also worked at Google previously on GenAI breakthroughs. Then there were the Adept executives. They went to Amazon. And remember that Adept raised hundreds of millions of dollars at a $1 billion valuation. Now, earlier this year, Kelly, I was in the audience at Nvidia's GTC event where Jensen Huang sat down with 7 of the most sought-after talent in GenAI, the authors of that famous Transformer paper that kickstarted the modern age of GenAI. They were all at Google when they wrote that paper, and they had decided to leave and found their own startups where they could build and ship their own products faster. Over the last few months, though, the shine has come off of those ambitions. Billions and billions of dollars has been raised. That was the easy part. But the hard part was collecting revenue to show for it. I was talking with another founder in the space today. He didn't want to be named, but he thinks that there's more startups to go that will either be swallowed by big tech or they'll simply go bust. Cohere, for example, is another GenAI darling that was recently valued at more than $5 billion. Reportedly, it has less than $25 million in annualized revenue. And Kelly, there's just sort of this impatience that's coming to light. You see it in the public markets, and you're seeing it in the private markets as well, with so much money being raised or put into these ambitions. The revenue is just taking a lot longer.
And I still think for GenAI, the heart of a lot of this goes back to how they got all the content for these algorithms in the first place and whether that's sustainable, and the fight that's happening over kind of what's fair.
Great point.
Yeah, and all of that. Deirdre, thanks. We appreciate it. Deirdre Bosa. Still to come, EdTech company Adtalem under pressure despite solid earnings. The CEO joins us on the back of that report with what may have investors worried today. Shares are down 9%. We've got more after this. Welcome back. Adtalem shares are down almost 9% today, despite beating Q4 expectations on the top and bottom line and seeing a 10% jump in enrollment. They did note a bit of margin pressure as they make investments across the business. Let's bring in Adtalem Global Education CEO Steve Beard. Steve, dive in here. I mean, and this one's getting more of a shout out lately from analysts and Charlie Babrinskoy, who on this, I think he's your fourth biggest shareholder now, quite bullish on the business. What are the dynamics here?
Well, setting aside today's trading activity, our business really enjoys some really strong fundamentals. As you noted, we've got growing enrollments. We enjoy some really strong secular demand trends in the area. The demand for nurses, physicians, and veterinarians is only growing, and as the largest provider of those professionals, we're well positioned to take advantage of that demand. So short-term market gyrations notwithstanding, we believe we're really, really well positioned to meet growing and durable demand.
Yeah, people who have heard our past interviews know that you guys are active in kind of the nurse education space, things like that. I mean, Babrinskoy's point was in part that if Trump wins, that could be a positive catalyst for for-profit education stocks. Not like you're trying to get swept up in election odds, but do you think part of the headwind could be that Harris's odds look better these days?
Well, look, we believe that when there's a Republican administration in the White House and at the Department of Education, there's a belief that the regulatory overhang on the business is somewhat lighter. You know, but we've built a business that we think can thrive in any political environment. We've done well during Biden's first term. And if there's a Democrat in the White House after November, we believe we will thrive in that environment as well. Again, we are providing a social good. Nurses, physicians, and veterinarians are sorely in need across the United States. And we're providing opportunities for students to pursue those careers who might not otherwise have them.
A lot of people are paying more attention to what's going on in the labor force. The slowdowns we've seen, the rise in the unemployment rate, could in part be because there's so much new immigration supply. Is that affecting enrollment at all?
Not for us. So typically a slowdown in the economy is viewed as being helpful to higher education because folks tend to retool and go back to school. But because of our healthcare focus, we're actually immune to that cycle. We've got secular demands that run across economic cycles, and that demand is only growing. So not really an issue for our institution, but a slowdown in the economy is typically good for education broadly defined.
Yeah, if that's what's happening. Real quickly, what's with the margin pressures? Maybe that's what has investors concerned.
Well, look, we've had flat margins year over year as we committed to the street. That's largely a function of some of the investments we've made in the long-term health and growth of our business. But when we came out with our announcement yesterday, we committed to at least 100 basis point improvement in margins over the next fiscal year. And we think that's something we can sustain as a floor going forward. So we've got a very attractive profitability profile, and we've got the ability to expand those margins. So we're excited about that.
All right, you do medical, you do veterinary. We know demand there is only growing. Shares are up 51% over the past year today, notwithstanding. Steve, thanks for joining us. Good to check in with you again.
It's a pleasure to be with you.
Steve Beard with Adtalem. And that's it for the exchange. Tyler Matheson is getting ready for Power Lunch. I'll join him on the other side of this break.
Good afternoon, everybody, and welcome to Power Lunch. Alongside Kelly Evans, I'm Tyler Matheson. Coming up, J.P. Morgan CEO Jamie Dimon weighing in on the markets, the economy in the past hour. We will recap what he said. I was taking notes and get you some actionable insights.
And we have more healthcare companies working to implement AI into their businesses. Could it help or hurt an industry plagued by red tape and inefficiency? We will discuss.
But first, a check on the markets, with the Dow losing all of its earlier gains, now ever so slightly in the red by about 70 points, along with the rest of the market. This after a strong start to the session, crossing its 50-day moving average. Kelly.
Some of the other groups are watching. The gig economy stock seeing some big swings. Airbnb down nearly 15%, same for Lyft. Uber and Instacart hanging on to some gains of about 3.5%. And moves in the chip space. Supermicro down nearly 19% now after missing estimates, while AMD is up about 1%, and a bullish note from Piper Sandler.
All righty, we start today with Jamie Dimon, the J.P. Morgan CEO, weighing in on recession fears and recent market volatility. Let's listen to what he had to say.
You know, America's alive and well. There's entrepreneurs everywhere. People are optimistic. They're growing. They're expanding, building stadiums. There's technology in just about every city we do, wherever we go. And you know, while society has problems, it's quite uplifting. You know, markets fluctuate. And I think people overreact a little bit to the daily fluctuation of the market. And sometimes it's for good reason. Sometimes it's virtually no reason. And you saw this one, it came way down and went way back up. And you know, but people are projecting, and when they project forward, it affects the markets. You know, we don't know if there's going to be a soft landing, a hard landing, and all the things in between. You know, I've always been a little skeptical that it'll be soft. On the other hand, I'm hoping it's soft. Does inflation really get back to 2%? I'm a little bit of a skeptic on that too. Rate effect itself isn't that critical. And obviously, psychologically, there's going to be a lot of chatter about what does it mean? What are they thinking? Are things getting bad? So, and maybe that psychological stuff will affect the economy. But I also remind people every day, 325 million Americans go to work, go to their jobs, take care of their families, take care of their kids, you know, build out their house, change a job, and it could be affected by the Fed changing rates by 50 basis points. I don't think so. The bottom 50% of income, they've spent it down. So they're doing what we call normal behavior, substitution. You know, if they have an extra expense, they might do a gig job for a weekend, you know, do something cheap or less going out. The top 50% still have some extra. That extra will probably be gone at the end of this year, but they're still spending it, travel or restaurants, you know, entertainment, things like that.
All right, let's bring in Luke Tilley, Chief Economist with Wilmington Trust. A lot to unpack there, Luke. I think my key takeaway here is that he does not see the economy in imminent risk of a recession. He thinks that there's a 35 to 40% chance of a soft landing. He hopes that happens. But if not, we'll be okay. We'll get through it. What else can you say, really?
Yeah, well, we're even more optimistic than Jamie. We put about a 70% chance of a soft landing. We've been in that position for a while, maybe a 30% chance of a downturn. And a lot of it does come back to the consumer, back to those previous comments. Consumers have slowed down their purchases quite a bit after, and I would actually say that they have exhausted some of their savings, but a lot of that was invested too. You can see the flows going to places like Treasury Direct. You can see consumers had invested some of those savings, not just spent them down recklessly, which I think provides a good buffer, but adjusted for inflation, absolutely right. A lot of those savings are gone. So we see consumer spending now in a real sense, whether it's goods or services or the overall, is about 2.5% year over year. And importantly, no longer relying on savings. That is driven by job and wage growth, and we think that those things will continue despite a 1 week jobs report. And importantly, we're not hearing the hue and cry from businesses that they can't keep up with orders and can't keep up with business, and that's what's really bringing inflation down. So we expect 2.4% growth when we finish this year, a little bit of a slowdown next year to about 1.5%, but we're pretty optimistic.
He said he was a bit skeptical that 2% inflation could be, that target of the Fed's could be reached anytime soon. I may be over-paraphrasing him there. Do you agree with that?
We think it'll come down to the Fed's target in the first quarter of 2025, so probably faster than what Jamie was referencing. We're going to have some challenging base effects for the remainder of this year. We had some really low readings in the second half of last year, but with consumer spending as normal as it is, we really don't see inflation pushing upward from here. So it's going to sort of move along right around at that 2.5% level in a year-over-year sense. And then when we hit the first quarter of next year, I think it'll move back down to the Fed's target. And that's really important for a Fed consideration because as the unemployment rate is now already above their median forecast for the end of this year, and because the Fed has said they're putting inflation and the labor market on equal footing, that means it's time for rate cuts, and it means it's time for rate cuts pretty soon.
Luke, still, I was struck by how I thought Jamie Dimon really sounded much more optimistic than in the past couple of years and kind of like his old self, and maybe the storm clouds have cleared.
Yeah, storm clouds. I was just thinking, as you were saying that, I was thinking back as a couple of years ago, he said they were bracing for an economic hurricane. And there were a lot of challenges at that point, but a lot of the storm clouds have cleared. I agree with you. There are some, I'll say yellow flags, not even red flags in the labor market report, and a little bit of drift up of credit card delinquencies, but overall credit is still being paid. And as long as job growth keeps up, and we think it will, that means that companies are going to keep hiring people. It's, as I said, it's going to be slower than it has in the past couple of years. So we don't know where the next storm cloud will come from. Like I said, a couple of yellow caution flags, but we think that it's a soft landing from here, and that's going to be good for the economy and good for risk assets.
It's interesting, Leslie Picker did ask him about credit card losses and extra reserves that they have set aside at the bank to do that, but he did not seem overly worried about that at all. He said credit card losses have normalized. It's not worrisome. Jobs are up, wages are up, the market is up, and really what he's seeing is kind of a normalization of that rather than any big dramatic acceleration.
Yeah, we see that in the data too. And Wilmington Trust, we're part of M&T Bank, so we have our own portfolio. And I feel like as an economist, I spend a lot of times distinguishing between rates of change and level. So we've had the credit card delinquencies have really been moving up sharply over the past year, but they're coming off of a really low base and really hitting those normalized levels right now. This morning, we got the most recent quarterly report from the New York Fed on delinquencies, and the movement of balances into 90 days delinquent is slowing down, and it really does translate to a normalization. And a lot of people still are paying those credit debts, so we don't think that it is a red flag. We don't think it's a reason to panic or change our positioning yet, but we're watching it very closely because the consumer is key.
All right. Luke, we appreciate your time. Thanks for joining us today.
Thank you.
Tilly with Wilmington Trust. As we heard off the top, Jamie Dimon in short saying he doesn't think that the Fed's rate hikes matter much on a grander scale, but they certainly impact housing. The home builder stocks are trading lower today, adding to their declines over the past week. For more on his take on the housing sector, let's bring in Stephen Kim. He's Senior Managing Director of Home Building Equity Research at Evercore ISI. Stephen, it was not a pretty period for the home builder. It turns out they hate lower interest rates.
Well, they've actually moved up quite nicely over the last few months here, actually the last month or so. So we actually have had a very nice positive reaction to the lower rates. Frankly, though, I think that we have a lot more to come because right now what we're seeing on the ground is that in 2Q earnings, we're hearing that June really wasn't a great month. July probably wasn't that great either, based on our contacts. And so this move down that we've seen here over the last few weeks in the mortgage, in the 10-year yield, which will of course translate to the mortgage rate, is going to be very beneficial, we think, for the housing market. And we think things are going to get better on the ground as we get into the third quarter.
They could get better overall, but could they get worse? Look, the builders have benefited so much from short supply, being able to buy down rates, low inventory, relatively affordable home prices. The premium, I think you've pointed this out, they used to command is pretty much gone. Does all of that reverse or start to reverse now?
Well, I think not. I think that what we have here is we're probably going to see another step up in demand as the rates come down, but the supply remains extremely tight. It's moved up a little bit. I think people are trying to make a mountain out of a molehill. They're looking at maybe a couple of markets around the country where things have gotten a little bit worse, but it really hasn't metastasized to the rest of the country at all. As a nation, we have 3.8 months of supply of resale homes on the market. That used to be normally around 5 to 6 months. it got as low as 3 months or so. But at 3.8 months, we're going to still see a very tight market. You're not going to see a lot of pressure on home prices, and with demand improving, with the rates coming down, we think third quarter is looking to be a pretty good period.
What would a half-point interest rate cut in September and maybe a further cut or two for the remainder of the year mean for the housing business?
Well, I think it's important to recognize that the mortgage rate really cues off of the 10-year yield, and that's because people usually stay in their homes for 7 to 10 years or so. As a result, the 10-year yield is really what matters, and the 10-year yield obviously anticipates a lot of the Fed cuts. So the Fed cut per se probably won't impact the mortgage rate when it actually comes. This period we're in now, as people are thinking the Fed's going to cut, that impacts the rate. So you kind of get that. However, I will say that a lot of people who buy houses for the first time may not be very sophisticated. And as a result, they may not really know that the long end of the yield curve is what matters. So when they hear that, oh, the Fed is actually cutting rates now, that may actually drive more traffic to the doors of the home builders. That's something to watch out for. We are seeing that there's a lot of psychological barriers to the buyers right now. People think it's all math, but I've said many times, it's not just math, it's mental when you're talking about home buyer demand, particularly first-time buyers. So the Fed actually cutting rates may not change the mortgage rate that much, but it might get people off their couch and into the doors of the home builders.
So it could change the psychology of the buyer. In other words, make more of them feel comfortable with the rates that are out there than are comfortable today.
Yes, it makes them feel like they're not doing something foolish. I think first-time buyers, they have a nervousness around this biggest purchase they're really probably ever going to make, and they're just nervous that they're going to do the wrong thing, do something foolish. And buying a house when rates are high, I think a lot of people think of that as maybe a foolish thing. And so when they hear that the Fed is now cutting rates, as I said, I think that could connect some dots in people's minds, even though the mortgage rate is already moving down now.
Right. All right, Stephen, thanks very much. Stephen Kim, Evercore ISI Senior Managing Director. Moving on, Diamond also weighing in on the consumer, saying consumers are spending down the money they built up during COVID from government programs and elsewhere, from not spending, I guess, basically, but not raising serious alarm bells there. That said, Wells Fargo out with a new note, raising some red flags on retail, issuing some caution around names like Capri, Urban Outfitters, Under Armour, Ulta. Joining us now is the author of that note, Ike Borschow. He's Wells Fargo's Managing Director and Senior Retail Analyst. What are you beginning to see in these names? And I was struck in the last hour, Kelly had up on a graphic of a lot of the hospitality names, from Airbnb to Hilton to Wyndham and so forth, all guiding down, all saying it's not, the quarter is going to trend lower than previously anticipated. What's going on?
Yeah, hey Tyler. So look, at the end of the day, I think not a lot is changing, certainly for the better, for the outlook of the consumer, especially in discretionary. The numbers you're starting to see in the second quarter are showing you little red flags, just to kind of take the term from our note. But I think our larger concern is, what do these flags mean for the back half of the year? So we highlight a few different things that really concern us. Number one, markdown risk. We are seeing in real time the inventory situation get a little bit worse, markdown rates getting a little bit higher. You factor in then in the back half, you've got an election. We've done a lot of work around what that means to spending. It's not good. We could go through that. And we have a shortened holiday, 5 fewer selling days this year. Then you tack on things like elevated freight, spot rates and surcharges. What do these mean to margins into next year? Tariff risk, people are already talking about that. It's really hard to find good news in the space today. So valuations are cheap, but that's never really a catalyst.
Let's bear down on that one thing that you brought in that is a little bit unanticipated, at least by me, and that is the idea that the election affects what consumers do and how much they spend. Why is that? Where do you see it?
Absolutely. Look, we put out a big report a few months ago to talk about this, because it has become much more topical with our investors that we speak with. What does it really mean? When we go through election cycles going back 30 years, what we can see in the data is that there is roughly a 150 to 200 basis points slowdown in spend in the back half of an election year versus the first half. That has become much more exacerbated in the most recent elections. Why is that? because when you look at the data, people are on their phones more, they're watching the news more, they're sitting on the couch kind of debating, who they want to vote for. They're not spending. This polarization of politics really does take a number on spending.
Their attention is distracted. Their attention is lured away from what they might otherwise be doing, which is going out and spending money.
That's what Amazon is arguing. That's interesting, Ike. Do you think there might? I thought that sounded like the dog ate my homework kind of excuse personally. Well, and here's what Barclays says. I'm sure you're aware this morning. They downgraded all of retail to neutral and said from this point in the recovery cycle, the only way to drive further margin expansion is blah, 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 blah. We believe the majority of forward outlooks have far less upside opportunity and potential risk to sales and margins in the back half of this year, which echoes what Tyler said about the unusual nature of what we've heard from the travel companies. That was supposed to be a bright spot. I understand hard goods or soft goods retail retrenching, but this seems to be broad-based.
Yeah, and again, I can speak most notably to discretionary and soft lines within this. And so at the end of the day, I think that, to take it more near term, the checks we wrote about most recently for the first couple of weeks of back to school are not very good. You're having a slowdown in demand. You've got sourcing concerns that are growing. For the global vendors, like look at Ralph Lauren today, a really, really good print, stocks down. Europe, China, it's almost like like I said to start, you're struggling to find the good news. There's, idiosyncratic long ideas do exist. We still like some of our stocks. We're not negative everything. We're not downgrading the sector. Burlington within the off-price space is our top idea. Gap is our favorite margin recovery story. There are names out there that are worth owning and buying on pullbacks. But again, broadly speaking, I think it's tough sledding for now.
Broadly speaking, is this slowdown something that is across the board, or is it concentrated more in those retailers that cater to what Diamond would describe as the bottom 50% of earners?
No, it's not that. I think low end has been under pressure for, let's call it 2 years, but I would actually argue in some cases the low end pressure is almost normalizing. I don't know what the right word is, but like look at for example, the off-pricers have the most consistent traffic of anyone right now. That's the lowest end consumer that we deal with, but their business model and their mousetrap really, really works. But it's broad-based because look, we could talk about Ulta Beauty, Bath and Body Works candles. We could talk about apparel. We could talk about footwear with Nike. It is across the board. It's discretionary spend in general.
Ulta was the stock everybody loved 6-9 months ago, and now obviously, as you see there with the slide over the last 3 months, 17% in Ulta.
I mean, we haven't underperformed on Ulta. I think we're the only one on the street. So we think that they have some issues. They need to reset their business. The margins are too high. The category is slowing. They're losing market share to Sephora. I think Amazon's a problem. So I do think that they have a good amount of problems to deal with.
Interesting. Ike, thanks so much for your time today. Ike Borschow with Wells Fargo. He's a senior retail analyst there.
Impressive on Ulta in particular. After the break, we'll dive further into the health of the consumer. While the focus of Disney's results was on streaming profitability, park segments could offer better insight into the state of the economy. I'll tell you what they said. Plus, we're watching markets down almost 200 points on the Dow, which has given up its sharp earlier gains after that weak auction of the 10-year top of last hour. We'll continue to track it. Power Lunch will be right back. Welcome back. Despite beating estimates as its combined streaming services finally turn a profit, shares of Disney are down 3% today after reporting weaker results for theme parks and citing signs of strain on the lower consumer demand and inflation. The company says it's likely to continue. Let's bring in Barton Crockett, senior media analyst at Rosenblatt Securities. Barton, it's good to see you. And there's a lot to unpack here. As you mentioned, there's kind of what's most important to Disney as a company and what's more interesting from broader sort of sign for the economy. What would you say we've learned?
Well, I think we've certainly learned, we've got one more data point supportive of this notion that there is some pressure on the consumer. The theme park segment for Disney is important. I mean, that was last year 70% of their segment profits. This year, I think pacing for around 2/3 of segment profits. So it's a key driver. And what Disney was saying last quarter is that they thought there'd be robust, as they put it, operating income growth in parks. In the experiences segment that the parks drive. And now they're saying that segment's going to be down mid-single digits in profits here in the fourth quarter, and that those pressures will persist through the first 3 quarters of next year. And that's a really rapid, substantial change. And a lot of it is tied to the consumer domestically, I think mainly in Florida, weakening. We saw a little bit of that earlier with the Universal parks out of Comcast, and it's just been reiterated here with Disney. So that takes some of the luster off of the good trends they've had in, finally bringing their direct-to-consumer business into profitability.
So what is it that's happening here? Is it consumers just pulling back across the board? I mean, Disney has gotten, the resorts are not a cheap ticket.
The resorts are not cheap, and and certainly with time we'll probably understand better. But we do seem to be going through a change, and we're just trying to understand what that change is. I think that one of the phrases that's been thrown out is that there's a post-COVID normalization, that people did a lot of travel and experiences, and now it's time to settle down and manage your budget, with a lot more inflationary kind of pressures. I think that the person who goes to a Disney theme park is, probably tends towards above average, income and asset, kind of wealth, but not maybe as high as you would think. I think certainly for a lot of people, that's a generational rite of passage for your kids and your family. Disney has a line within their parks for cruise ships where they've been investing, really kind of delivering a very premium experience. That seems to be holding up stronger than the parks. And, maybe part of that is, who goes on cruise ships, but also there may be some economic. But, clearly there's a change afoot, and we've got to start, understanding better what's going on.
I think of Disney as a place that is a special family trip, maybe not an annual family trip. Maybe if you're lucky, you can afford to go every year. But for many people, it's one of those things that you do maybe every 4 or 5 years. Let's talk about their sports segment. I was struck by the fact that ESPN's advertising revenue was up 17%. What was driving that?
So, people love sports. I mean, these guys, they had the good fortune of having the WNBA, and the whole Caitlin Clark thing has really transformed that. I think the sports are resilient on the pay TV for that. They've got a new NBA deal coming up in a couple of years that they've inked, that's kind of jack up their programming costs a lot, and they've got to grow to kind of cover that. But that's why the athletes and the leagues are sitting in the catbird seat, because they are what advertisers want to get in front of. They're what people want to watch. They're the last kind of safe bastion of audience on TV, and they're getting paid for it.
So you just reduced your price target to 122 from 129. Explain a little bit of the thinking there, and what would be an upside surprise for you that might cause you to put it back at 129?
Yeah. So look, I mean, this is a first on CNBC. We just published our note as we were coming on air. So we're taking our price target down $7. That reflects net reduction to estimates, better in DTC, weaker in parks, and that's to a little bit lower kind of EPS estimate for fiscal 26. We're assuming that they can trade at a 19 PE against fiscal 26 pro forma EPS. And the estimates just came down, so I drove the price target down. The multiple stayed the same. We think there's
that's still a decent argument for the stock. It's up, 40%. That multiple is not demanding for a premium kind of property. And they've got real asset value. So even if everything falls apart, there's people who would buy the pieces there. And I think the activist investors would come back and force it. So you're kind of hedged. And this is the kind of quality asset when things are a little bit tougher. You want to look for opportunities to move in. And that's why we're sticking with the buy rating. Even with these issues that we're sorting through right here.
All right, Barton, thank you as always. It's always good to see you.
Great, thank you.
Barton Crockett. Well, as the market rally loses a little bit of steam, should investors continue to proceed with caution? We'll dive into that in the Market Navigator next.
Now.
Welcome back to Power Lunch. As we mentioned, the markets were attempting to continue to come back from Monday's rout, but right now losing a good bit of the steam. So should you believe in the bounce, or is it getting a little wobbly? Dom Chu is here to talk about all that and more in today's Market Navigator.
One of the questions we wanted to ask a lot of the folks out there, contacts that we know, experts, was if you could believe the bounce or not. And today it seems like
bounce.
Yes, yesterday's bounce. And even today, this morning, we saw a bit of a bounce. Could it carry over? So at least one of the street's top technicians, who's been bullish since late 2023, is actually starting to temper her view on what's going on. One of the key things she's looking at is the fixed income market. So let's bring in Katie Stockton, the founder of Fairlead Strategies. She joins us now. Katie, you're looking specifically at certain parts of the market, including the long Treasury bond ETF, ticker TLT. What's it telling you, and why is it so important?
Well, it's really interesting timing, right? We have a breakout, of course, in TLT and other fixed income ETFs, and it comes at a time when equities have obviously seen some turbulence, and that turbulence should continue based on what we're seeing in our volatility metrics. So maybe a good time to look at these fixed income products, including TLT, which has cleared a very important resistance level on the chart. It's based on our cloud model. The cloud is a great gauge of the long-term trend, and you can see that price is now above that threshold, and it's there for a couple of weeks, which we like to see for confirmation of a breakout. TLT also happens to have what appears to be a long-term base in place in the shape of an inverse head and shoulders pattern. We're usually looking for head and shoulders tops, but this looks like a head and shoulders bottom. And that could mean that it has lasting implications. Of course, this is associated with a breakdown in treasury yields, so we have to trust that that's a cyclical down move that we have underway there.
What kinds of return, if the thesis plays out and this becomes an even better investment, what kind of returns would you expect from it? What kind, if I were to follow your advice?
Yeah, you know, initial resistance for TLT in particular isn't terribly far above. It's around 101.5 in price terms, and secondary resistance is well above. It's around 108 on the chart. So it could be a meaningful long-term turnaround that we have. We don't know what the returns will look like, of course, but we want to keep the long-term momentum gauges on our side. And they happen to be expanding in favor of continuation higher for TLT. Whereas if you look conversely at the equity indices, they've seen downticks in things like their monthly MACD histograms. And those downticks tend to be decent times to be lesser in your exposure. So we've moved to a neutral long-term bias for equities, really with a time frame of maybe 4 to 6 months. So not very, very long-term, but just to avoid this increased volatility for now.
And do you see there's any kind of down, if you think it's neutral really quickly, just how much of a pullback could we see?
Well, for the bound, we believe the bound we do, and we would use that to reduce exposure. The 5,000 level for the S&P 500 is an initial near term. I think that could be jeopardized during the next down leg. Maybe we get a September, but I don't think we'll see 800 area where there's secondary.
You're a market navigator. Thank you very much.
Such a long time volatility that it's probably at least passes the realm of reason to things could be a little bit, a little bit more skittish for a while.
All right, Tom Chu. All right, CVS on artificial intelligence to help cut rising costs. We're going to dive into how technology is shaping up the medical industry, specifically how AI can be maybe a real transformative force and a good investment when Power Lunch returns. All right, welcome back, everybody, to Power Lunch. Some potential warning signs emerging in healthcare. CVS Health cutting its full-year profit outlook and announcing a cost-cutting plan amid higher medical costs. As part of that plan to reduce costs, the company says it will increase the use of AI and automation. CVS isn't alone. The medical community already starting to adopt AI for many applications, and our next guest says the actual impact of AI has been minimal so far, but has the potential to transform healthcare. Here on set with us is Dr. Ronald Rosmi. He's a cardiologist and co-founder and managing director of Zoe Capital, a VC firm that invests in the applications of AI in healthcare. Ron, welcome. Good to have you with us. I should point out that you're also an MBA, so you're an MD, an MBA, and a real slacker, clearly, and author of that new book, AI Doctor, The Rise of Artificial Intelligence in Healthcare. An hour ago, Jamie Dimon said on our air, I think AI is going to cure cancer. Do you agree with him?
I agree with him, but not tomorrow. So Newsweek did an article about my book, and they also started with how quickly are we going to see all of these massive gains in healthcare delivery and medical research from artificial intelligence. And I managed to convince them that it's going to take a couple of decades before we see some of these very ambitious benefits. There are things we could see tomorrow in improving in healthcare delivery, making healthcare more precise and more convenient. However, the lofty ambitions around curing cancer and unlocking the secrets of the human body, that is going to take longer.
Let's talk about where the impact of AI may be felt most immediately. And my guess would be it would be in areas where the bureaucracy is deep and thick, and there's a lot of brush that needs to be cleared away, potentially in terms of better and quicker and more accurate diagnoses of scans and tests and things like that. Where is the most immediate impact of AI going to be felt, and are those investable opportunities?
Absolutely. So at Zoe Capital, we actually have a thesis on short-term, medium-term, and long-term applications of AI in healthcare. And the most immediate applications we're focused on are administrative and operational. Delivering healthcare takes a lot of effort. It's human resources intensive. It requires a lot of financial capital investment. So being able to do some of the heavy lifting using technology is how we're going to make delivery of making healthcare more accessible, improving quality, because everything doesn't need to be done manually. So right now we're focusing on operational and administrative use case. Some of those basic clinical use cases like radiology, pathology, and dermatology. However, in the mid to long term, its greatest impact is going to be in medical research and unlocking.
Drug development?
Drug development has been an area where investors have lost a lot of money in AI and drug discovery because they thought it was going to take a shorter amount of time than it actually has. A lot of the companies that have gone public, as a matter of fact, Zoe Capital was conceived with when my partner, Brian Beeler, who was part of the team that built Horizon Therapeutics to a $30 billion company, he and I started looking at why AI was not gaining any traction in healthcare. And he had looked at a lot of the drug discovery AI applications and seen that although promising, bringing it to fruition, it's going to take a long time.
I'm struck that Jamie Dimon sounds much more optimistic about AI in healthcare than you do. And I wonder if that's because once you're on the ground, you realize, to Tyler's point, how many barriers there are towards it. You can't just kind of flip some switches and have this really take off. I mean, there's tremendous inertia and kind of hurdles and things like that. And just as the technology evolves, you mentioned that the companies that haven't been successful, like Babylon and Olive, and all this capital people have poured into the space that has really failed to deliver. So do you actually feel that optimistic about how AI can transform the medical industry?
Yes, absolutely. I absolutely do. However, every application is not going to gain immediate adoption. So my book is actually a business book about how you need to do the type of analysis up front to see if the business case for the application you're building is strong enough, where the buyers who are being bombarded with different types of products can decide, yes, I want to go ahead with this because this addresses a mission critical need for me. you need to look at the data issues to see if the data is going to be available in the real world for it to deliver value, or the clinical workflows. Does it fit within existing workflows? So you need to do that type of analysis. So everything you build is not going to gain adoption. So very optimistic.
I got a couple of quick questions before we wrap it up. Number one is, what regulatory impediments may there be to the adoption and use of AI across the medical marketplace? And that could be questions of privacy, questions of whether an AI application actually is clinically beneficial or not, is safe and efficacious.
You know, the FDA has set the bar low in terms of what they're going to approve and clear for marketing. However, that doesn't mean the medical community is accepting that retrospective studies on 300 scans to be proof that it's going to show value in the real world. As a matter of fact, a lot of the radiology solutions that have come into the real world have underperformed the data and the evidence.
So am I hearing you say then that the regulatory impediments will not be all that big in terms of clinical use, or?
We don't know, because it's a shifting regulatory environment. The FDA is issuing papers on an ongoing basis. It's not clear where they're going to land on how much evidence they're going to require before. And another issue is reimbursement. The insurance companies have been very slow in reimbursing, so they're asking for real-world trials before they reimburse.
So let's round third base and bring it home for the viewers who buy the thesis that AI could have a transformative impact on medical delivery, healthcare, et cetera. Where do they invest today?
Well,
what's the best way?
In the public markets, I actually had a SPAC in the public markets called Deep Medicine Acquisition Corporation. We were trying to take a health AI company public. We saw there are not a lot of late-stage private companies that are good candidates for public markets. You mentioned Babylon, Benevolent AI. Some of these companies in drug discovery have not done well in the public markets just because their benefits are going to take longer to show. So you're looking at early to mid-stage in private markets investing in.
So that's the way that you're going to be able to play it today, and that's for a certain class of investor. It's not for the retail person who's got a couple of ETFs.
As I mentioned in Davos this year, it's patient capital. To see, to realize the benefits of AI in healthcare.
Dr. Rosmi, thank you very much. And once again, the book is AI Doctor, The Rise of Artificial Intelligence in Healthcare. Appreciate your time today.
Having me.
Meantime, oil prices are bucking the downtrend and rising above $75 a barrel today. We'll have details when Power Lunch returns.
Jim.
All right, welcome back, everybody. Bond yields on the rise, 10-year, back above 3.9%. And let's get an explanation for all that and more with Rick Santelli in Chicago.
Absolutely, Tyler. You know, a chart of this week in 10s pretty much says it all. Let's look at a Monday, Tuesday, Wednesday chart. Monday's intraday low, yes, 3.66%. We're 31 basis points above that, and it isn't like equities have taken back all of Monday's drop. So what's going on here? You know, maybe there's something more to this debt and deficit story, because the minute we start talking, boy, things start to pop. And today's 10-year, I gave it a D+, and I was in quite a generous mood. Look at 10 spread. Now, this is also key. You see right in the middle we had. Well, we shot up to basically +1. And close that spread in positive territory since July of 22. But look how it's coming back. And this is the key. We are looking at long-dated treasuries continue to push rates higher. And one would think with that huge concession that we had with rates coming so far back, today's auction would have went well, but it wasn't. Tomorrow we have 25 billion 30s. You want to pay attention to that auction. Let's look at a 3-month chart of that 2s to 10 spread. Look at how wild it's been in the last 5 weeks. Basically, moving from -50 to very close to positive territory. And finally, what is the tell in all this? That chart you're looking at now is the yen versus the dollar versus 10-year note yields. And what it's telling me is as the yen values go down, long-dated rates are going up. That's the tell who was responsible for that Monday volatility. Kelly, back to you.
Rick, thank you. Now to the energy market with crude popping today. Pippa Stevens here to explain, Pippa.
Yeah, so oil is up alongside everything else, and we also saw a 6th straight week of inventory draw, so that was bullish. Nat gas also up about 4%, back above $2. But yesterday we talked about the solar coaster. Take a look at shares of Sunrun because they are up 10% after the company reported a surprise profit. Wow. Part of that is thanks to a focus on higher margin products, namely batteries. They also did mention that they could see a benefit from SunPower's bankruptcy filing, but they're not going to pursue all those customers at any cost. They are really focusing on cash generation rather than spending excessively. And you see Wall Street likes that stock up quite a bit.
Indeed.
All right, Pippa, thank you very much. A little delayed, but she's there. Bertha Coombs, CNBC News Update.
Hey, Tyler. Vice President Harris's campaign saying today that it raised $36 million in the first 24 hours since Minnesota Governor Tim Walz was chosen as her running mate. That builds on an influx of money in July. The campaign says it raised $310 million for the month. The family of the French explorer who died aboard the Titan submersible on its doomed trip to the Titanic wreck last year, filing a wrongful death lawsuit for more than $50 million. The family accuses the sub's operator, OceanGate, of gross negligence. 5 people died in that incident, including OceanGate's CEO. And NASA says today that the Boeing Starliner astronauts at the ISS could return to Earth on the SpaceX Crew Dragon if the Starliner is still deemed unsafe for the return trip. But they're going to have to wait a while. Target date for that trip, February of next year. The astronauts have now been in space for 63 days. They were only supposed to be there for a week, but from what I've read, they do have extra provisions. Power Lunch. We'll be right back.
a lifesaver.
Welcome back. As the markets flip into the red as we head to the close, let's go and review some of the stories today that might be contributing to that, starting with Airbnb, which is falling on earnings, warning of shorter booking lead times globally and says it's seeing signs of slowing demand from U.S. guests. It's a trend we've seen across the hospitality space, Ty, and shares are down almost 15%.
Yeah, you had a chart in the last hour that showed a lot of different companies, Wyndham,
TripAdvisor, Wynn, Hyatt, and so forth.
All saying sort of the same sort of tenor of idea about a slowing down of consumer demand. Next up, we got Reddit reporting better than expected results, citing improvements in the digital ad market. The stock, however, lower, the company still operating at a loss.
Still want to see if they will be an AI beneficiary. Also, decking company Trex is down more than 20% after missing on revenue, cutting its forecast, getting downgrades and lower price targets.
The Chiron there is getting decked. Right?
Indeed.
Getting decked. All right, Robinhood still struggling to keep its overnight trading functional. Stock down around 16% in a week. There you see it down 17%.
Should be taking advantage of this volatility. And finally, Shopify in the green. Upbeat guidance, strong service demand despite that mixed consumer spending environment.
All right, thanks for watching Power Lunch, everybody.
Could be a turbulent time into the close. Closing bell starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. To go in regulation. Handouts in the session and VF Corp. They're surging on earnings today. Take a look at those big gains from both of those stocks. How about Micron resuming its buyback as well? Making people talk about that chip trade again. It was higher as well. So it's rolled over too, down 1 2/3%. Disney, it's been lower today because of those theme park numbers. They disappointed. Stock now just about the lows of the session. That's almost 3.5% decline. And we're watching JP Morgan shares too. CEO Jamie Dimon speaking exclusively to us today. To Leslie Picker on CNBC. We're going to have the highlights coming up in just a bit. That stock, and like many of the financial stocks, doing quite well of late. It takes us to our talk of the tape. The road ahead for your money as the markets make their way through this turbulent week.
Anastasia's
Let's welcome in
going to be on
Anastasia
here,
Amoroso, iCapital's chief investment strategist, with me here at Post 9. It's good to see you. Welcome back. So what are we to make of what's transpired this week?
Well, today, the stocks are struggling to hold on to any gains. And I think, Scott, the reason for that, this is such a low conviction market because we don't seem to have conviction as a market in the economy. And we've got initial jobless claims that are coming up tomorrow. I feel like people are waiting for that with bated breath. And it seems like in the beginning of the week, the recession fears were on. Today in the morning, they were off, but maybe they're back again.
I love how they took
so I
my
think
trade,
that's why
man.
we're likely to chop
Damn,
around
look at that
while
reversal.
we try to sort out the data.
God,
you know, the
damn,
other
look
thing,
at that
when you
reversal.
have drops like we've seen on
Yo,
Monday, you look to technicals.
You already know
and
what
we
this
know
is,
from
right?
the technical.
You know what this is, right? This is... That's that Anastasia candle, I'm just saying.
You know, you've got uncertainty, you got bad liquidity, bad depth, bad seasonality. By the way, the S&P is now trading, I think, 52.15, which is below the 3-month average, and none of that is good because that drives systematic selling.
There were some who suggested this was mostly positioning. You know, we had the unwind of the carry trade, and that was Monday's conversation. It's sort of mixed in with the concerns about the economy, which is so interesting because last week, as the Fed chair spoke on Wednesday, he sounded pretty sanguine about where the economy was and where the labor market was. Said it was just normalizing. Then we got this jobs report, and everybody kind of had a panic attack over where the economy truly is.
Well, it was the payrolls report on top of the SOM rule that has been so frequently discussed and debated, I would say, and that's what really spooked the markets. And Scott, the market, I mean, going into July, where we're talking about this potential disconnect that's building between the economy and the market expectations. And look, the economic data has been surprising to the downside for quite some time. The labor market has been surprising to the downside, and yet the markets had to catch up with that. So I would argue that maybe some of the unwind has been just positioning driven, but I think we now have a catalyst, which is watching the payrolls data. The reason why markets pay so much attention to payrolls because that's what the Fed chair essentially created as a new yardstick for the markets to watch, the labor market and what they will do after that.
There's a feeling today, at least in some corners of Wall Street, Tony Pasquarello, Goldman Sachs, for example, saying it's not the start of a new trend. This could be just one report. Don't take your eye off the overall market ball. Now, don't step in with 2 feet because, as you said, maybe the unsettling feeling of all this has a little bit more room to go. But do you look at the market and you say there's opportunity to be had, or are you just kind of stepping away and letting things settle?
Well, a couple of points here. First of all, I talk about the low conviction in the market, but our conviction is that we're not headed for a recession. And I'm still in the soft landing camp. And I don't think the data that we've been getting is actually recessionary. I mean, one data point that sort of flew under the radar was the one on Monday where the ISM services number, the employment actually increased. That indicator has increased. So that's different than what we've seen in the payrolls report.
And just the 1 week, you got Intel massive layoff, Big Lots closing down, Sunrun starting to file for bankruptcy. You're going to start to see a lot of job losses.
We're looking at 2.9% for this quarter, so I'm still in the soft landing camp, and so that brings me to the second point, which is I do think there are opportunities to be had in this market. I don't think it's a quick snapback because we're going to be looking to build conviction in the economy, but I do think you start to step in and you buy certain pockets of the market selectively.
But you're looking kind of defensive, right? Utilities, munis,
That's part of it. And, I think Tony talks about it in his note, sort of looking in both directions. And I think that's exactly what I'm doing as well. I am looking to defensives and like utilities, because if this economy is slowing, not even if it's going into the recession, if the economy is slowing, you want to be looking to defensive sectors. If the Fed is cutting interest rates, historically, it's the defensives that actually outperformed in the 3 months after that. So that's why that has to be part of the barbell. But Scott, I've also been tempted this week by semiconductors because the valuations are now not quite to the lows that we've seen over the past year, but getting pretty close.
That's kind of Adam Parker's point sitting on this set yesterday was, a lot of these semiconductor stocks have come down a lot. Let's bring in Chris Heisey now of Maryland Bank of America Private Bank and Ryan Dietrich of Carson Group. It's good to have you guys with us, too, here at Post 9. So you want to weigh in, Chris, on what you've seen this week and what you think it means for what we should do?
Yeah, I'm a big believer, and you write down thoughts like we've had in the last week, 2 weeks. At the end of the week, you write them down, you revisit them a year later, 2 years later, 3 years later, and you'll find at the time it's very concerning. At the time when you're going through this, you go back in time and you see, when did this happen before? You talked about it before. 1998 brings to mind for me. And you have to look at the catalyst, as Anastasia said, and then ultimately what really matters to production of profits, to production of cash flows. And if that story hasn't changed, it's been dented, but if it hasn't changed, these are buying opportunities.
Is that your call, that it hasn't changed, that this is a buying opportunity?
It hasn't changed. There's talk of soft landing, hard landing, and other things. There's also something called a mid-cycle slowdown, which you could use a better term, you talked about it before, normalizing. We are coming off extraordinary spending times, coming down at a time when the unemployment and employment markets are not materially changing. Like, that is critical. The production of profits by corporate America slowing down, harder to increase margins, but you can still protect them. So this gives portfolio managers an opportunity to not just rebalance, and we could talk about rotation. Before rotation, there's rebalancing. You can't just automatically go from one side of the boat to the next. And I like the way Anastasia put it, which is, it's a characteristic-driven market. You have to look for things that will get you through whatever the normalizing period is and come out on the other side.
Are we disappointed at the price action today? Yesterday felt a lot better. This morning there was follow-through, and here we've rolled as we begin our program.
Yeah, first off, it's nice to talk to you. Not in my basement. This is fun face-to-face like this. So I guess you could say today's a little disappointing, Scott, but let's take a big picture look at this, right? This is an election year. It was the best start to an election year, middle of the year. Since 1976, up 19%, not that long ago for the year on the S&P. Now we've had the 8.5% pullback, and Mike and I were talking about this earlier. It's August. I mean, August is, you seem to always get these curveballs out of the blue. I mean, 2015 rings a bell to me, right? The China devaluation of the yuan, the first 1,000-point Dow drop ever. I know points are different now than then, but that was pretty darn scary back then. One final comment, because we covered a lot of bases, or two actually. Productivity in our country is still really strong. Second quarter had a big jump. I mean, that to us is kind of that magic elixir we have not seen since the mid to late 90s. So strong productivity can, again, be some juice. And then overall, the U.S. dollar, it's kind of surprising to us. The dollar has not been a safe haven the last week or so. And historically, when trouble happens, I mean, March of 2020, gold down, bonds down, stocks down. Dollar was the only thing higher. We've seen that, right? And it's interesting to us, the dollar's not. I mean, you've got emerging market currencies have been really strong lately. That is not a major risk-off end-of-the-world crisis, in our opinion, when we see that, Scott.
Chris mentioned the rotation word, and you like cyclicals, financials, industrials, small and mid caps, which I find interesting in the context of the conversation that we're having. I spoke with Rick Reeder in the midst of all this on Monday. We talked about the rotation trade, whether he believes in it or not. I want you to listen to what BlackRock's Rick Reeder told me, and we can discuss on the other side.
I don't really understand. You know, the whole idea is there had to be a, you know, with Fed's easing, so you go into small caps or into value. I'm not sure I understand it. The Fed's just moving from a very restrictive level. By the way, they haven't moved yet. They're moving from a very restrictive level, presumably to a still restrictive level. So this whole idea that I've got to buy into asset classes that are, if the economy slows, will be harder in terms of from a performance from earnings perspective. That doesn't make a lot of sense to me.
Why does it make sense to you?
Yeah, this is a growth scare. We think, like we said, mid-cycle slowdown. Look at the leadership this last couple of days. Today, it's financials and industrials again. There is relative strength there. We saw, look at 3M had to say. I mean, there are some positive earnings from those particular groups, and as everyone's come on your network, including me, yes, small caps are cheap, mid caps are cheap. Our largest overweight at Carson Group
I'm
all
thinking
year
about a long on Alibaba.
They're quietly doing really well. I know
Thinking about taking Alibaba long.
We're comfortable being very overweight mid caps here again as an economy that's not going into recession. And again, there's some really cheap valuations when you look at those areas.
Sure, but his point, Reader's point is, I mean, whether this is a mid-cycle slowdown, a late cycle slowdown, or whatever cycle slowdown, it's still a slowdown. So those sectors might be challenged by the mere notion that the Fed is cutting into a slowing economy.
Yeah, I guess the question is they might be, right? Again, when we look at
it is a slowing economy.
It is absolutely.
It's just to the degree in which it is.
Yeah, absolutely.
I mean, we agree on that, don't we?
Absolutely, it is a slowing economy. But again, you know, if everyone's thinking alike, someone isn't thinking. General Patton, how many people hated small caps for all year? I mean, there is a very low bar. We've seen everyone loved AI, everyone loved technology. What's happened? Again, it doesn't mean they have to just rip roar higher. Last point, history would tell you, small caps don't start outperforming until they actually start cutting. And I know Lucy with the football with Charlie Brown a couple times, but that cut's coming. And again, we're still comfortable being overweight small and mid here.
I think you have to look for very specific beneficiaries of rate cuts, even if the economy is slowing on the margin. And the sector that I'm looking to is real estate. And as a proxy for the beneficiary of that are actually regional banks. When you think about real estate, Scott, by the way, most people don't talk about it still because at some point it was down 11% year over year. But real estate prices, commercial real estate prices actually popped. They have picked back up. Year over year, they're just about flat. So there's already been a price recovery there. But also what people worried about in commercial real estate is the amount of floating rate leverage that was outstanding, which is about half of all the debt. But if you look at the SOFR rate, for example, which is, of course, what a lot of these mortgages are pegged to, that SOFR rate has already been adjusting as we've been pricing in a more dovish Fed. So I would argue that some of these real estate operators and developers are already starting to feel the benefit of that, which brings me back to regional banks because people worried about commercial real estate exposure on regional banks, but we think they've appropriately provisioned. And in this last reporting season, they're actually talking about the net interest margins starting to improve as well. So I think that's a very specific example of, despite what's going on in the economy, there's a benefit.
You want to weigh in on this question?
What drove a good portion of the last growth in the economy was the fiscal spend, the axe. Prior to that was the emergency outlays. The next cycle portion of this is going to be the benefit from lower rates, particularly in the areas that need relief. To Anastasia's point, you don't need to see a re-accelerating economy. What you need to see is relief in the areas that did not participate. And therefore, it does make sense to look and combine with the large cap growth arena small caps, particularly those characteristics of small caps that will benefit from the lower rate structure.
Before mega cap started pulling back, Ryan, I mean, did you look at those valuations and say, these are getting a little crazy, ahead of themselves? Did they look too expensive then? Because a lot of them have come in now over the last month. I read this list on halftime, and I'm going to do it again.
He said valuation.
A month ago, Nvidia's forward PE was 41. Today, it's 32.5. Meta's was 24.5. Today, it's 21.5. Apple was 32. Today, it's 29. Amazon 38. Now 31. Alphabet 23.5. Today, 19.5.
Right,
Microsoft 35. Now 30. Were they too expensive before? Are they better now, or are they still expensive now?
No, they're a lot better now. We thought they were too expensive before, and now there's probably some much better deals for people. Just not forget the Mag 7's earnings are up 30% year over year, right, this recent quarter. So there's still explosive growth. The bottom line, again, is just too many people got in on that ship, and when you get too many people on the boat, it goes the other way, and that's what we saw.
Do I want to buy these stocks?
Maybe not the Mag 7, at least not most of them. And the reason I say that is because, yes, there was this huge earnings surprise relative to expectations that was outsized for a lot of the Mag 7 stocks. But that earnings surprise has been shrinking because, to Ryan's point, the expectations have been elevated. As I look going forward,
I'm going to see
cloud
Bob
CapEx or AI
man.
CapEx is growing something like 24% year over year this year and 10% year over year and next year, which means these companies are outlaying cash. But as we've seen in this reporting season, are they really monetizing it? Are they really seeing the ROI?
Well, some of them are.
Some of them are, but not
On
all
lower
of them.
earnings.
So I would rather focus on what is it that they're investing in, which of course is the AI semiconductors, because they will be continuing to benefit from that CapEx. So that's why I'm looking to AI semis, and I'm seeing the pullback in valuation. But at the same time, Scott, if you look at the earnings revisions for a lot of these AI semis, they're still going up for this year, for next year, and the year after that. It's not universal across the semiconductor space, but specifically for AI. So I would kind of decouple that. I would invest in the enablers right now of AI.
Instead of the mega caps. Do you agree with that, Chris?
Well, I think price momentum, earnings momentum, and news momentum is still there across the technology space. I do think it's going to get more selective, as Anastasia said. Semiconductors, because they're inherently cyclical in general, they look cheaper now than, or the movement down is cheaper more than just the mega caps. But we are now going to start to say we need to see in the areas that are the revenue producers of GAI, we're going to need to see that. But most of generative artificial intelligence, the benefits are just beginning and well ahead in the next few years of cost efficiencies, and that's critical for rest of corporate America.
But you said that the price momentum, you said that, is still there.
Price momentum.
You could make the argument that it's exactly the opposite, that over the last month, where Nvidia's down 20% and Microsoft's down 14, and Meta's down almost 9, and Amazon's down almost 19, and Alphabet's down 15, Tesla's down 22. Isn't the momentum in that trade gone for right now?
Maybe for the next few days, maybe for the next week or two. But between now and the end of the year, you're going to still need the mega caps in your portfolio on a growth basis because, as Ryan said before, you still have the earnings momentum there. Now, the second derivative is coming down. We know that. But on a relative basis, it's not coming down versus the others. And then you bookend the rest of your portfolio with the areas that did not participate. So I think this is a rebalancing, not a rotation.
How do you see that?
No, that makes sense. One thing I want to point out, we've talked for 17 minutes, and we talked about the VIX. If I can talk about the VIX just for a second here. We saw the VIX go down 10 points yesterday, Scott. That is a huge implosion of volatility. You're talking after the U.S. debt downgrade. You're talking after the flash crash in March of 2020. The last times we saw a volatility implosion like that, that usually tells us the worst is over. Doesn't mean you can't go make new lows briefly, get everyone bared up. But that spike we saw is incredible. One more for you. The VIX was closed beneath 30, then above 60 the next day, intraday, and then closed beneath 30 yesterday. That's never happened in history. I don't really know exactly why. Maybe
is that supposed to make me feel better or think that there's more volatility?
Hopefully it makes you feel better because we just had this blast of volatility. We might have more volatility than when we went 18 months without a 2% down day. But to say that we are pretty close to a
did you guys
low,
just hear that?
Makes a lot of sense when you
and
see
that's an
things
important
like that.
part.
I think you could also take advantage of volatility, obviously, by selling expensive calls, by selling expensive puts. You can monetize it. The last thought I had is that we're talking about the here and now, and maybe for the next, a couple of weeks, a couple of months. But if you look at the bigger picture, we're going to the election cycle. That's likely going to propel volatility. Markets typically consolidate and pull back in the 3 months after the first rate cut. So that's why we're experiencing this phase. But if you step back and look at the 6 months after the first rate cut, markets do tend to rally, and especially in the
You understand that has never happened before, right? The fact that we went from like 10 to 30, from 30 to 60, and then back to 30. So, with that being said, that ties right into asking if we should have got short Monday when the SPY was already down 2%. Guess what? You have never went from like 2% down to like 3%, 4% on the SPY. Never. Never. Think about that. Every single time you were down anywhere near 1%, you have never put in another 2% day. Never. Never. So every single time you would have shorted the SPY Monday, you would have lost money. That's why I told you guys I did not feel comfortable recommending shorting the SPY Monday morning or even Friday when we came in with that big gap down and then it continued to go further. You have never had that happen before.
Perfectly
it's good
normal,
to know.
but
Now
the
you know.
volatility we've
Now
just
you
seen,
know
I think that's the blast
what
of,
that type of move would have give if you would have acted that way previously. over and over and over again, you would have lost every single time. So remember, if the SPY is ever down 1%, 1.5%, we're going to say 2%, because 2% is really that number, 1.8 to 2%. If it's down and you're thinking about going short when it's already down that much, chances are you better keep your expectations very, very low, because you've never went an extra percent. We've never done that. The day that happened, I think it was Friday.
Softer than
when we came in with that gap down and then it extended, and I'm like, yo, there's no way. There's no way that you're like to take a short when the SPY is already down 1.82% to go to 3, and it's a good thing because we've never had that happen
since May of 2023. Scott?
All right. Good, but thank you.
He's relating it to the VIX. I'm relating it to the SPY. Most of you guys know that stuff already.
Speaking earlier on this network about the future of his role at the bank, top analyst Mike Mayo is.
I just let the market do what it's doing. I can't. I'm not comfortable doing it myself, nor telling someone else. That's like saying we're up 1.5%, which means we're up 8 points. We've rallied 8 points, and then I'm going to take the long at the high of day. Like, you're just asking for trouble. Sure, you might get that gap up, but you're just asking for trouble. Fuck, I need another Red Bull. They're so good. They're so good. I'm trying to find something here at the end of the day. We only have a couple more minutes left. I may not ruin my day. Oh, shit. Look at Shopify, guys. It's up to $2.
Seen a report from
Damn.
Reuters that Delta passengers sue the airline for refusing to provide refunds after last
Oh, my God.
computer outage. Ticker
That's going to be a mess.
Delta Alpha Lima.
That's going to be a mess. This Delta stuff that's going on. So they hired a prominent lawyer, or I guess they're going to. And now the passengers are suing? I don't understand what they would sue for. Delta provided them with a hotel, airfare. I don't understand. That's weird. That is weird. Damn, this is really a mess. I don't know if I showed you guys or not. You guys should watch. For anybody that thinks it's a good idea to buy airlines, I would seriously rethink that. I don't know what's going to happen to airlines here. If you have an event where people start losing their jobs and the airlines struggle to make the airlines struggle to get new people to sign up for credit cards for air travel and airfare and stuff like that. Holy shit. Like, if you go look at the balance sheet from some of these airliners, even just the big 5 or 6 or whatever. It's crazy. Their revenue really comes in. The only time they make money is with those credit cards, getting people to sign up, and the money that they get from Bank of America and other places. Like, after you cancel out the money from actual airline tickets,
our dreams to life,
and pay everything from parts and all that,
we
like,
got great
it's
people
bad,
out
guys.
there.
It's
we have
bad.
a hit by the bus successor, Daniel Pinto. You know a lot of the other people and how exceptional they are. When I say exceptional, it's also their heart, their curiosity, the respect they engender from our employees, from our customers, which I feel great about. But even when I'm done with CO, I might be chairman for a year or two. It's totally up to the board at that point. So I have a while to go before I'm out of the company.
That was JP Morgan CEO Jamie Dimon earlier today weighing in on the succession plan At JP Morgan, that was an exclusive interview with our Leslie Picker. Joining me now at Post 9 to talk about that bank and Mr. Diamond and the setup for bank stocks is Mike Mayo, Wells Fargo Securities. It's good to have you back.
Thanks for having me.
What, Diamond, 68? He's 68 years old?
Well, yeah, he has 2.5 years left or so on his contract. So
Are you thinking about it yourself, succession at JPM, and the way you think about the future of this bank?
here. I'd say a lot of the institutional investors that I talk to ask me about succession at JP Morgan.
They do.
They absolutely do. And especially with
Now
the
you're
recent
hitting it.
op-ed
See
in the
if-
Washington
see if
Post
Apple
by Jamie
fails here.
Dimon, his CEO letter this
I
year
know
in the
it
annual
was
report.
support there.
He's talking about America, the comments in the press, would he go to the government service? And on that exclusive CNBC interview that you guys had today, he was asked not once but twice, would he consider government service? And he says, I like what I do. What I read in that is...
He said that three, 4 times.
Maybe 3 or 4 times. He didn't give an answer. So if he's going to be Treasury Secretary, the next Fed Chairman or something like that, he didn't say no. And so that certainly comes a little more to the fore during an election period like that. And taking a straw poll among investors, nothing scientific. It's like, how much would the stock go down if Jamie Dimon were to leave?
Yeah, what do you think about that?
The answer is like 5%, which would mean $25 billion off the market cap, which would make Jamie Dimon the $25 billion man.
Yeah. What about the financial sector in the here and now? We have, rates to take into consideration. We have worries about the economy as well. So how do you see that?
Look, the main course for banks is still good over multiple years. You're looking at a multi-year inflection point for revenues and earnings starting sometime later this year in 2025. Having said that, no dessert for bank investors in the month of August, maybe a little bit longer. And that dessert's been taken away. There's new data points. The unemployment rate went up a little bit more. The interest rates are a lot lower than people expected. The R words come back, recession. And so you have to recalibrate your expectations that those extra capital market revenues that you thought you might have gotten over the summer, maybe you don't get that extra. Those extra spread revenues from higher interest rates and what's called fixed asset repricing, you might not get that. The extra reserve releases for problem loans, forget about the reserve releases right now. So you're still inflecting, but maybe just not as much as before, and you have to readjust to that. And so I'm saying it's a speed bump in my multi-year thesis here and a little bit more short-term caution.
What are your expectations about, since you brought it up, capital markets? I mean, David Solomon, Goldman Sachs, was pretty positive on it when he last spoke. Rich Handler of Jefferies put out what I thought was one of the most bullish notes regarding the current state of capital markets, if not the most bullish that I've seen.
There are tremendous multi-year tailwinds for capital markets, especially that X factor of private equity, trillions of dollars to get put to work, pent-up demand over a number of years, a lot of liquidity, but this hiccup in the market, could put a monkey wrench in that in the short period coming ahead. And the other thing we have to, literally, before I go to sleep at night, when I wake up in the morning, are there any accidents in the market given such volatility in recent days? So far, I don't see any big ones.
Nor does Jamie Dimon, by the way, who was asked by Leslie about, whether there is a recession or not. First thing he went to was credit, said it's fine. Now, obviously, things could get worse at some point, but in the here and now, he doesn't see it, and the credit markets would suggest they're backing that up.
I would agree. That's why the main course for banks is still good. And the one data point is corporate bond spreads relative to treasuries are still close to the relative low point. They're 100 basis points over. Back in 1998, they were like double that. By the way, bank bond spreads, the largest bank bond spreads, are still close to relative low points. So the $7 trillion investment grade bond market is kind of giving a yawn, and the equity market's kind of freaking out. It's the opposite of, say, the global financial crisis. Remember, the fixed income market was a much more forward indicator than the equity market. Equity market, all of my colleagues, we were slow to the message. In this case, the fixed income market's kind of just saying, ho-hum.
Is there a message today or this week in the fact that, JP Morgan's green on the week, given the turbulence that we've had? Goldman Sachs is positive on the week. Citi's down 4 1/3%. Why?
This is simply a Pavlov's dog. Okay, the bell rings and you salivate, you have a hiccup in the market and you say, all right, who's likely to win? Those who have won in the past, Goldman and JP Morgan, who's likely to lose? Citigroup. I think that's simply a knee-jerk reaction based on their performance of the last 10 to 20 years. I don't think that has any bearing it has some bearing to reality, but I wouldn't read too much into that. We'll see the results in the third quarter. And by the way, if Citigroup navigates yet one more industry issue like this, that could help their revaluation. Still my number one pick, but with the caveat, short term, we have a little more caution for the whole group.
What about regionals, or maybe it's better to ask you about super regionals? That's basically what you cover when it comes to those kinds of stocks. What should I think about that now?
Well, I think there's an issue with lower rates. Be careful what you wish for. Everyone said, let's get lower rates. Banks are often treated as a cyclical play, so the Fed cuts, you get a rally. But that net interest margin, it's going higher, I think, for the banks, but probably not as high as you thought before, because if you're reinvesting those maturing securities in yields that are 70 basis points lower than they were a month ago, then that inflection's not as great as it was before.
All right, it's good to see you. Thanks for being here. That's Mike Mayo, Wells Fargo Securities. Up next, Treasury Partners' Rich Saperstein is back. Ranked number 4 on the Barron's Top 100 Financial Advisors list of 2024. He'll tell us how he's advising clients amid this uncertainty and volatility in the markets. Talk about his latest positioning as well. Do it next.
You know what's crazy? Like, I don't care with his purse. What's crazy is I said that shit over the summer, back in June, January, February, March, like May, I'm sorry. And he been carrying around that shit. But whatever. And for anybody that says Europe this, Europe that, bro, Europe has, bro, just stop. European fashion is better than, bro, just stop it. Just stop. Let's not forget who we are. What is this? Arrested for making comments on Facebook. Is this Britain or Soviet Union? Is this accurate? Community noted. This is in the UK. The relevant law is the Communications Act of 2003. It states electronic communications which are grossly offensive or indecent, obscene, or menacing, or false for the purpose of causing annoyance, inconvenience, or needless anxiety to others. Well, I'll be damned if that ain't a law. So right now, if I just shouted into the mic just to hurt somebody's ears, I could go to jail for that. That's crazy.
Arresting you on suspicion of improper use of the electronic communications network under Section 127 of the Communications Act. Okay, so you do not have to say that it may harm your defence if you don't mention one question, something which you later are in court. Anything you do say may be given evidence. Do you understand that?
So I'm actually being arrested?
You're going to be arrested, okay?
Right.
Take you back to the police station.
Right.
You, okay, this is in relation to some comments that you've made on a Facebook page. Okay?
Oh, really? Oh, it's a Facebook crime, is it?
Okay.
Right.
So we need to ask you some questions about that.
Right.
Have you got anything in your pockets, Thomas?
I've got my keys. No, it's made it, I think, keys.
So, anyone who's been arrested, we can search them under Section 32 of Basic Criminal Act.
Right.
And that's for dangerous items,
I mean, you said I was going to be arrested
Look at the police.
Some what information? I'm going to be arrested for posting on Facebook.
Some comments that are offensive, obscene, and people have made a complaint about that, and it's transferred.
Can you tell me what this comment was?
Gains, all three major indices struggling to recover losses from Monday's sell-off, or at least to back up the gains of yesterday. A few bright spots, though, within tech today. Apple's leading the pack. Amazon and Alphabet are still green as well. You see what those stocks are doing at this moment. My next guest holds all of them. Says now's the time to buy the dip, too. Joining me now at Post 9, Rich Saperstein of Treasury Partners. Good to see you back here.
And this is
your phone
exactly why the
crazy on
dumbasses
Monday.
should have
Can
never
you just give
given
me,
their guns
we
back.
said that you're one of the top 5 advisors, right, ranked by Barron's. So can you just give me an idea of what this week's been like for you?
Well, my first experience with an eye-popping decline like this was back in '87, and we've seen many of them since then. And we've developed a playbook to deal with all this and guard client capital. And it starts with the catalyst. And the catalyst here was really a disproportionate decline in the market relative to the tepid economic data. So lightly caused because we're at 22, 23 times earnings. And really, it's the type of volatility we're going to experience going forward. Now, my phone rings, and it's really about asset allocation. It's about the move we made last year where we allocated to long-term tax-free municipal bonds at 4.5%, and clients wanting to be opportunistic and possibly reallocating back to the stock market.
Were you a buyer on Monday?
No. We think about an old concept called 2 steps and a stumble. And so you have a market, we still fully invested, but you have a market which goes down, there's some decay, there's some issues, there's value, but I'd like to see things settle out first before we start committing more capital.
Do you think mega cap tech, which we're showing on the screen right now, and we said that you own a lot of these names, does that need to, in your words, settle out more?
Yeah, I'd like to see that, but we still like the stocks. I mean, where do you find, let's take Google, Microsoft and Amazon's cloud business. They do $100 billion a year, grew 30% quarter over quarter. Now, a $100 billion business would be a S&P 35 company growing 30% a year. So many investors are underweight large cap tech. And that's really where the opportunity is for investors who do not own enough of these names. They should have an exposure to them.
When you say investors don't own enough of these names, what kind of investors are we talking about? Because it feels at this point as though everybody owns these names.
Not really, because there's a lot of investors that are underweight large cap tech. And so they might have biotech or other exposures, small cap, mid cap, international. And really, it's very important to understand where there's growth of cash flow and where there's opportunity in the market, and it happens to be rather concentrated right now.
What about valuation for these names? Top of the program today, I read the list of how much valuations have come in as these stocks pulled back from July, double-digit percentage point declines.
No question, values are stretched. Market's price for 15% earnings growth year over year. And that's the reason why we're seeing all this volatility, which should continue throughout the year.
Wait, you mean valuations are still stretched?
Yeah, still.
In these stocks?
Yeah, so we look at the cash flow and the growth of the cash flow, but multiples are stretched in these stocks, and there's still a lot of pockets of opportunity in the market right now.
Okay, so where is that?
Well, we have been adding to 2 utilities. Okay, we started with. The thesis on utilities is long-term secular increase in power, and we're underpowered in this country. So we own 2 names, Nextera and Vistra. We've owned Vistra since 2021. It's a $25 billion company, $4 billion in operating cash flow, $2.2 billion in free cash flow, returning it to shareholders. And keep in mind, our utilities are in 2 states that have net immigration, population immigration, Florida and Texas.
But when you are highlighting utilities, that screams defensive. Is that what you think the best strategy is right now is to be defensive? If you're going to buy anything, to buy those types of stocks?
Well, when you look at a portfolio of 20 to 30 stocks, and you've got to broaden out your names, one sector we really didn't have exposure in was utilities. So we just added Nextera. We've been a long-term holder of Vistra. But think about the cloud. Think about AI and the concentric rings of opportunity around it. So think about services, Accenture and IBM. Think about the power generating that, so the utilities. So there's a lot of opportunity if you just look past the core cloud providers, you know, like the big four.
What's a reasonable valuation, do you think, for the overall market? If, you know, people were suggesting 21 times was just way too expensive relative to where earnings were really going to come in, what seems more reasonable, and how far away are we from that?
Historically, 16, okay? But now what you...
16?
Yeah, that's historically. But now that you have a concentration in large cap tech dominating a third of the market, selling at higher multiples with higher growth rates, you've got to raise that higher. So where we are at 22, 23, a little stretch for me, but we still own the stocks and we're still fully invested.
What about bonds? The attractiveness of them today, given rates are coming down, now obviously they've bounced back up, but what's your take there?
Look, last year there was a tremendous opportunity to add 4 to 4.5% tax-free long-term munis, and
which you did.
Yeah, we bought a slug of them. Right now, that's down to a 375, 360 yield. So the bonds have gone up in value. I think one of the biggest mistakes was just laddering 3 6-month treasuries and getting that 5.125%, because now that rates are coming down, what do you do with that money? So right now, what we're doing is we're adding housing bonds. We're still able to achieve over 4% in tax-free housing paper, which is still an amazing opportunity. You're subject to call risk. And other than that, we're buying more 3 to 6 year paper, both on the taxable and the tax-free side.
It's good to see you again. Thanks for coming by.
It's my pleasure.
Rich Saperstein, Treasury Partners. Up next, we're tracking the biggest movers as we head into the close. Pippa Stevens is back with that. Pippa.
Hey, Scott. Well, one e-commerce stock is popping 20%. We are double-clicking on the name coming up next.
made affordable.
All right, we're 15 out from the bell. Back to Pippa Stevens now for the stocks that she is watching. Pippa.
Shopify is tracking for its best day of the year following better than expected second quarter results, as well as an upbeat forecast for the current period. Shopify said it saw strong demand for its services, which includes software for online merchants, despite what it called a mixed consumer spend environment. And VF Corporation also in the green after the company beat Wall Street estimates for the most recent quarter. TD Cowen saying the company is making progress on its multi-pronged reinvent plan, noting the sale of the streetwear brand Supreme for $1.5 billion helps with deleveraging the balance sheet. Those shares up 7%. Scott?
All right, Pippa, appreciate that. Thank you. Still ahead, looking under the hood, fintech company Robinhood reporting earnings in less than an hour. Stock is seeing some strength so far this year. It's been in the thick of it this week, too. Can the run be sustained? We will discuss coming up. The bell's coming right back.
The police might just be parked in your driveway. Ford just patented newly developed camera technology that could turn all their new cars into rolling police informants. So will this make the road safer, or will it turn America's motorways into surveillance zones? Well, recently Ford submitted a proposal to the US Patent and Trademark Office to equip new cars with cameras and sensors that could detect speeding violations of other drivers. But it wouldn't stop there. The system would then automatically share the data with local police. Look, this Orwellian future is far from reality. Questions remain if it would even be possible to prosecute moving violations without the presence of an officer witness. I can see both sides for and against this technology, but I'm curious, what do you think? The police might just be parked in your driveway. Ford just patented newly developed camera technology that could turn all their new cars.
And you would have no idea that she's been riddled with really gnarly injuries coming into the Olympics. And it's just a show of dedication and heart. And when you look at her tricks, like nothing looked off. Her shoulder's destroyed, and she's still throwing that left arm up in the air, just making everything look stylish. Right here's the kickflip Indy. Not enough speed to get over,
Nothing
but
was done
didn't
here.
matter.
That
She
was
still
gold
held
medal.
on. There's that off-axis 360.
I mean, I get 16 years old.
Poking it out.
There are folks that have been skating
Was it
for
like
decades
a
that wish they could skate as good as
a
16-year-old
time
Sky Brown.
or an age
And you
class
won't.
or something?
So what? And you would have no idea that she's been
There's
riddled.
nothing
with
really there that screams Olympics or even X Games or anything good.
Yep.
I mean,
Really
hey,
gnarly
she's killing it for a
injuries coming
16-year-old,
into the Olympics. And
these are the things we were doing
It's
when
just
we were
a
16.
show of dedication and heart. And when you look at her tricks, like nothing looked off. Her shoulder's destroyed, and she's still
Really?
throwing that
13,
left arm up in
15.
the air, just making everything look
13.
stylish. Right here's the kickflip Indy. Not enough speed to get over, but didn't matter. She still held on. There's that off-axis 360. Poking it out.
There are folks that have been skating for decades that wish they could skate as good as 16-year-old Sky Brown.
Oh, absolutely. And you won't. So what? And you would have no idea that she's been riddled.
Look at this.
didn't even look at SMCI today, oddly enough. I will say, it wasn't into it, but it was, Upstart? This was the moneymaker. This is a chart that I would recommend to anybody. Like, you guys should definitely get this one. Look at that volume. Look at that volume. Wow. So you got the volume. Volume's obviously there. And the thing is you're getting these candles on Upstart. I'm pretty sure it's Upstart. Notice how the candles on a 3-minute and 5-minute. Notice how they're consistent and they're closing at the highs. Pulls back, bang. Pulls back, boom. Look, that breakout candle closed at the highs. And just look, they're the same size all the way through. The candles are the same size. Then the extension, right? Trade line catches up, extend. Same size, same size, same size, extend. Like, that's a buy trigger that you'll see a lot. And you want to be a part of it and get on it with the thing is with these is you can still get on those type of trades at like 9:30. Well, 9:45, 10 o'clock, and still have room left. You can identify these type of trades within the first, 15 minutes of the day and still, have 5-10 minutes to figure out your entry point, and just ride it. Just ride that shit higher. And it took you all the way into lunch. It's a nice trade. Really nice trade. I love those, especially when I see them. If I catch them early, those are what we call, you could call them a trend day, where it's basically just a buy trigger all day from an institution that's putting millions of, like a few institutions that are putting a lot of money to work.
MOTG, the top golf Callaway brand now, officially hitting the wire. Michael Astor, Delta Golf.
I cannot believe earlier I missed the SPY going down. Can't believe I missed it. They freaking took my trade. Like, that kind of pisses me off. This is what I talked about that I wanted to see tomorrow. I wanted us to like hang out for a little bit, consolidate, and then buy some puts going into the end of the day today for tomorrow, and didn't get that opportunity. I don't feel comfortable buying either, because upside you have room to 524, and then the downside is like 515, so it's
into the CNBC the closing bell markets, and we go. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus Kay Rooney with the setup ahead of Robinhood's results. Julia Borson taking a look at Warner Brothers Discovery as those results are in overtime as well. We faded, obviously, Michael, as the day progressed. Maybe some, Middle East geopolitical things swirling around that the markets are concerned about, among a number of other things.
There's plenty of excuses. I think the backdrop is we're still in this kind of slop and chop corrective mode, and when that happens, you have to kind of regain trust in the tape, and that hasn't really been done to a convincing way. You basically have some wounded leadership. Semis had a
nice day today, though. Made some really good money.
They tried to bounce hard this morning. It didn't work. Defensive stocks are the only things really working right now. The low volatility ETFs now way beating the high beta ETF on a year-to-date basis. So you have at least a chance of a change in character of today and yesterday above 5,300, right around the 100-day average. I mean, if you can't, no buyers.
Now,
none of that says, oh no, we have to.
All right, guys, I think I'm gonna get up out of here.
people have to wait for the market to prove
Hope you guys
itself.
had a great day. I'll leave this up for a little bit. Hit that like button, subscribe. I'm going to finish up on the membership page.
And we really don't have a lot of fundamental inputs to be working with yet.
I'll see y'all later.
I'm sorry to step on your toes there. That's where I was going to go next, though, with jobless claims.
Yes.
Seems to be of heightened importance now.
It does. Yeah, we want to see if there's a trend that's worrisome or not. You know, a lot of the people looking again at the monthly jobs report from Friday will say, as you know, yeah, unemployment rate up, but it wasn't because layoffs went higher. It was really much more about labor force. So we'll see if we do get that. You know, bond yields are up today. There was another kind of not so great Treasury auction, and you'll see if a lot of that stuff starts to filter into psychology, or if it's just, hey, we're 2% above Monday's low still. You're within the 10% correction zone. Nothing seems too abnormal, but it takes, you know, time and proof.
Yeah. All right, Kate Rooney, tell us what to expect here with Robinhood. Been a bit of a turbulent week for that name as well.
Yeah, Scott, it's been a big, shaky week, really, for the brokerage industry. But Robinhood today is going to give us a bit of a pulse on the retail investor, those numbers that really do matter for the quarter. You're going to look at trading volume and transaction-based revenue, plus the breakdown of where that's coming from. So between crypto, equities, options, and then net interest income. Also watch deposits. So any sign that Robinhood has been successful in taking market share from incumbents like Schwab and Fidelity, something people are watching closely. And then retirement accounts and credit cards, both relatively new businesses for Robinhood. Something to keep an eye on. A lot of focus on how they're forecasting amid all this volatility this week and possibly a weaker consumer. Any commentary as well on interest income as the Fed appears to be changing course. Then would definitely expect some questions around the future of 24-hour trading after the outage earlier this week. Scott.
Yeah. All right, Kate, appreciate that. That's Kate Rooney. To Julia Borston now on Warner Brothers Discovery and what you think we should pay attention to most.
Well, Warner Brothers Discovery's revenue is expected to decline by 3% from the year-ago period, while its per-share loss is expected to shrink by about half, benefiting from progress in streaming, similar to what we saw from Disney. Now, the media giant's loss of NBA rights are very much in focus, especially ahead of the NBA's August 24th deadline to respond to Warner Brothers Discovery's lawsuit. Macquarie recently downgraded WBD, saying NBA rights are important to the success of Max and that their loss will hasten the downturn of its linear networks as well. There's another wild card. What happens with the sports streaming bundle Venue that Warner Brothers Discovery is part of? 3 congressional Democrats sent a letter today to the DOJ and FTC urging them to scrutinize it. With shares down by nearly half over the past year, the FT reporting yesterday that in an effort to avoid having to break up Warner Discovery, CEO David Zaslav is looking to sell off some smaller assets like its Polish TV business. Scott, hopefully we'll hear more about this in the call today.
All right, you'll let us know, Julia. Thank you. That's our Julia Borston. 2-minute warning. You just saw the animation there and heard it as well. So we're going to turn to you, Mike, as we head towards the close here. Dow's off about 200 or so. Financials higher today. Energy higher, oil's higher, maybe again on that Middle East sort of concerns that are still out there.
Somebody
so
prematurely hit the bell.
Stuff happening for sure. The areas that still are under some pressure are consumer cyclicals. We're still worried about that. The travel stocks, probably been talking about that. You know, raising just a little bit of doubt, or maybe confirming doubt about the services sector and the resilience of that part of the economy.
I thought it was like
I don't really think the argument is, somebody prematurely hit the bell. I don't know. For the record, Genesco is ringing the bell.
Oh no! Called him out.
Great job today, guys. Great job, great job, great job. I gotta get some sound effects in here, man. This is boring as shit. Big changes gotta come. Big changes gotta come. I'm gonna leave this up. I'll throw out the spy and a few other things. You guys have a great rest of your night. Maybe we'll have a lots list later. Maybe we will, maybe we won't. Maybe I'll get tired. But I don't really have anything planned. So, maybe I'll see you guys later. Hit the like button, subscribe. I'm gonna go back and finish working on what I was working on. And I will see you guys on the flip side.
Call it 5 months ago.
I know we look at the travel names, we say the consumer is really struggling. We look at Shopify and VF Corp, and we say, okay, maybe the consumer is not that bad. Again, it depends where you look.
It depends where you look, and it's the rate of change more than anything.
All right, it's for real this time. They're ringing the bell. We'll go out red. I'll see you tomorrow. I look forward to that. Into overtime now with Morgan and John.
Well, that bell, the intentional one, marks the end of regulation. Genesco ringing the closing bell at the New York Stock Exchange twice. Viper Energy doing the honors at the NASDAQ. A big intraday downturn erasing an early rally. The NASDAQ was up 2% at the highs. The Dow was up nearly 500 points before ending the day firmly in the red. The S&P closes just about at the lows. That's a scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
Well, we've got more reads on the health of corporate America. Those are coming this hour with Warner Brothers Discovery.